From the beginning, I had a concept of a business, not a research organization. We are the most successful antibiotic research organization in the world. We've got 6 drugs USFDA has given. No company has got more than 1 or 2. Our advantage, unlike other molecules, is we have compassionate patient. 80 means there is a lot of real life data. And one of our purpose, which is beyond business, pure profit, is that I want to equally make our drug accessible.
Sure.
All over the world.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
From the beginning, I had a concept of a business, not a research organization. We are the most successful antibiotic research organization in the world. We've got 6 drugs US FDA has given. No company has got more than 1 or 2. Our advantage, unlike other molecules, is that we have compassionate patient, AT. Means there is a lot of real life data. And one of our purpose, which is beyond business, pure profit, is that I want to equally make our drug accessible.
Sure.
All over the world.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Very good morning. You're watching India Market Open. It might not be such a good morning because look at the implied open. Another 200-point downtick is what it's showing. If the world has caught a cold, we have full-blown pneumonia right now, Neeraj. Everything is bad news and worse. When geopolitically it seemed like US and Iran were coming towards an agreement, we were still sulking. Now that looks shaky, we are in even greater pain, isn't it?
Yeah, I mean, it's like good news don't benefit us, but bad news definitely impact us.
Yeah,
something like that.
I agree 100%. So that's what's happening, which is why you're going to possibly see a third day of pain coming in, and you're going to have to get very, very stock specific to understand what's happening. Let's quickly go through what the global cues are looking like this morning. US markets are continuing their momentum on positive results in the AI story, and this is what's amazing. Nothing is really happening for US markets which is negative. Not for the bond yields, of course. Bond yields are shaky. But look at the NASDAQ, up about 0.5%. The futures also looking fairly good after that kind of top up and new record highs in US markets. NASDAQ down now about 200 odd points. Nvidia was one of the stars, of course, after that new chip has been announced. The stock was up 6%, but so much excitement happening around that company.
Yeah, and you know, I've given a graphic which our team should pull up. Tanmana, it was very interesting to see, and maybe it happens with other nations, but for this to happen in the US, the CDS swap rate of Nvidia is at 38 basis points. US sovereign rate is 40 basis points. So Nvidia's 5-year credit default swap is more attractive or more sovereign than the US sovereign itself. It was quite something. Really.
My God! So Nvidia can't do any wrong right now.
Yeah.
But talking about fixed income products, bond deals, US bond deals, which is what the whole world watches, spiked. As reports suggest, Iran has called off talks. In fact, there's an Iranian news agency which put out this news yesterday saying that talks have completely been called off and they're going to block the Strait of Hormuz even more. I mean, I don't know how you would block the Strait of Hormuz even more, but that's what they're saying. The 10-year spiked to 4.45%. So did oil prices as uncertainty is mounting over the US-Iran peace deal. We should pull up the latest Brent. The last I saw was at about 94. Yeah, there you have it, 94.49. For Brent, WTI at 91.66. So it's still half a percent down from its highest levels, but definitely a spike up because if you saw it yesterday, it was at around the $92, $93 mark. And interesting thing happening with that phone call. So the big news is that there was a long phone call between Donald Trump and Benjamin Netanyahu, and there are different versions of what happened in that phone call. There's the official version, which came from both leaders, and then there's the Axios report, and I can't even say those words, but Trump has called Netanyahu some expletives over the Lebanon escalation and says, I'm saving you amidst tensions. He's fuming at Netanyahu over the escalation because what's happened is overnight, Israel has gone in and escalated its strikes in Beirut, and Trump has now warned, according to Axios, warned Israel that these would cause global isolation. He claims Israel's actions are fueling global backlash and has questioned the escalation when this diplomacy efforts are so fragile. But here's the official version. That's the Axios report we showed you. Now look at the official version. In this, he says, I had a conversation with Bibi Netanyahu today asking him not to go into a major raid of Beirut, Lebanon. He turned his troops around. Thank you, Bibi. I also had a conversation with representatives of the leaders of Hezbollah, and they agreed to stop shooting at Israel. Let's see how long this will last. Netanyahu on his part says, I spoke with President Trump and told him that if Hezbollah does not cease attacking our cities, Israel will attack terror targets in Beirut. So now the whole pain point is once again, as this is settling in, come back to what's happening between Israel and Beirut. Proxy actually for Iran. So that's where the pain is.
Yeah, Iran's statements also say the same thing, and
that you better lay off Lebanon, and so is Trump saying that. But I found it quite astonishing that there are two versions of the same conversation. One is the official one, and one is what Axios is reporting.
Donald Trump.
Yeah, Donald Trump. That's true. One word explains it all. Pull up Asia and the implied open for the Nifty before we get into that conversation with Edward Yardeni, because Asian markets were also showing the pain. Nifty about 200 points down, Nikkei about 1.5% down. Edward Yardeni, President Yardeni Research, joining in. Dr. Yardeni, if there is no settlement or agreement soon, what is the next case scenario? Because it seems like some asset classes, some parts of the world seem to have moved on. At least US markets, US equity markets seem to have moved on.
Correct. Yeah. Well, the U.S. Clearly has an advantage in the current situation because the U.S. is an oil exporter. And in fact, our petroleum and oil exports have increased quite substantially in the past few weeks. So we're not hit as much on the supply side as other countries are. But of course, the price is a global price. The price has gone up. It is affecting the price of gasoline here, but it doesn't seem to be really slowing down consumer spending whatsoever. Consumers are driving even with the price of gasoline elevated. And of course, we've got this AI boom that's really caught the attention of the market. That's where all the focus is. But at some point, the risk certainly is there that if this war doesn't get resolved soon, then as ExxonMobil and Chevron warned, oil prices could jump to $150 a barrel, and that would be bad for the world economy, and I can't imagine that it wouldn't be a problem for the U.S. economy.
Okay. Dr. Yardeni, is it because of the very reason that you mentioned, and I'm forgetting the term or the idiom for it, maybe it's in both, maybe it almost seems both sides are happy if whenever Brent were to come to sub $90 a barrel, that there is some skirmish or the other and prices move up again, because, well, for the time being, it is economically, both sides are comfortable with oil prices being higher, even if some of the other markets like Europe or India, etc., get punished with it.
Well, I think the reality is that $90 to $100 a barrel is actually remarkable under the circumstances. I would have thought it would be a lot higher, or I think most of us thought it would be a lot higher. But I think what's happening here is Russia must be selling a lot more oil to China and India to replace the oil that's not coming out of the Persian Gulf. I think that China's economy is probably a lot weaker than we've seen in the data. And that's evident in the demand for oil coming out of China. And as I mentioned, the U.S. is exporting more oil. So all in all, $90 to $100 a barrel is something that isn't a killer for global economic activity, but it's certainly weighing in a country like India and not having that much weight on the U.S. economy so far. But I certainly would hope that we resolve this issue soon, because I got to believe that these people at ExxonMobil and at Chevron know what they're talking about.
Okay. Dr. Yardeni, from an investor perspective, what does the second half of the calendar hold in store? Is the AI trade alive and kicking and lasting, and therefore is it prudent to bet money there, whether it's in the US AI players, the other Asian players, or even the semiconductor stories? Or would you believe that it's about time to now buy where there is in perception value, or things which haven't moved thus far?
Well, I think it's always better to buy low and sell high. The problem we have with technology is buying here is definitely buying high. However, the good news is that a lot of the upward momentum in stock prices, particularly technology stocks prices, hasn't been FOMO. It's been what I call FEMO. FOMO is fear of missing out, and that drives valuation multiples up to levels that make the market very vulnerable to a plunge. In the current situation, FEMO is fabulous earnings momentum. I mean, earnings have been incredible. But the risk there is that the market recognizes that's not the whole story, that there is still risk coming out of the Middle East. I think the Federal Reserve may surprise quite a few people by actually raising interest rates, not at the June meeting. At the June meeting, I think they're going to prepare for that by announcing that they're going from an easing bias to a tightening bias. And then I think, depending on how the inflation numbers work out and the labor market works out, I think there's a relatively high chance that they will actually raise the Fed funds rate by 25 basis points. So I see the next few weeks as being a fairly risky environment. I wouldn't be jumping in here. I think there may very well be another buying opportunity, maybe not as good as what we had in March, but decent enough to hold off putting on new positions.
Edward, I'm wondering what you're making of the prospects of emerging markets like India. Data today showing that India has now slid to number 7 in terms of the world's largest markets, and it's the FI exodus on one end and the lack of semiconductor AI trade on the other. But are there any redeeming factors that you see from a global investment perspective?
Well, I think in the near term here, emerging markets generally, especially countries like India that import oil, as is clear to everybody, that's not a good situation for India right now with the price of oil having gone up. In addition, as I mentioned, the Fed looks as though they are preparing to at least move to a tightening bias and possibly actually to raise rates. And we've seen emerging market currencies really coming down very, very hard. Unfortunately, it reminds me of what happened in the 1990s when we had an emerging markets currency crisis, kind of one right after the other. Maybe this time around where the emerging markets aren't as vulnerable as they were back then, but it's certainly a problem for emerging markets that are already dealing with inflation from higher oil prices to have higher inflation because of a weaker currency.
Thank you so much, Edward Yarini, for speaking with us. We're going to see some pain continuing for emerging markets that import large quantities of oil, including India. And we saw that in yesterday's trade as well. Nifty has closed in the red for a 4th day in a row yesterday, down about 0.75%. Tata Consumer Products, HUL, were the top losers in the Nifty. Broader markets also underperformed the benchmark. Mid-cap 150 fell to the 2nd day in a row as well. One big trend that we saw is that it was across the board, right? It was broader markets as well as the Nifty that cracked. And if you pull up the biggest losers of the Nifty yesterday, it was all your agri-related, consumption-related stocks. So you suddenly had an HUL, a Tata Consumer, a Shriram Finance, an M&M, all of those which were seeing a big pain point. And that's really pointing to perhaps some other issues that are plaguing the market apart from what's happening globally. And it's a bad combination, to say the least.
Yeah, I mean, consumption, does it really take a hit now because of sentiment or otherwise? Yeah, very likely. Never know. From a trade perspective today, we are starting off 200 points lower, so you can't really talk more about it. We know that it is going to be a start which is going to be weak. The point being, it's unlikely to be a very hard landing in trade today, and I say this simply because The PCR is at 0.7. So in some sense, there is also this propensity for the market to show a bit of a bounce if indeed the trade is positioned in the way it is right now. But crude sensitives are likely to dip further in trade. We saw a little bit of a dip there yesterday, very likely because of the oil price uptick that we've seen slightly. There might be a further dip as well. So very, very likely could happen. But you try to hunt for ideas, you try to hunt for what could do well. I would suspect that tractor sales, which are looking strong ahead of the monsoon, is a positive, and therefore that piece of the pie might actually stand out a little bit, if not today, tomorrow, if not tomorrow, day after. But that seems to be doing okay. And we've been talking about this, that the earnings tracker, though it may not hold too much relevance because the real proof of the pudding will be how well India withstands this cost escalation. But Motilal Oswal put out a note on the earnings tracker, and their assessment is that, of course, FY26 been a strong note, but their coverage universe, which consists of 359 companies, reports about 16% YOY PAT growth. And the BFSI, metals and OMCs have led the earnings growth, but mid caps have outperformed with a 36% YOY profit after tax growth. So if you're thinking of why the mid caps are shining, well, that's the reason. There is delivery.
You know, so you can't have it both ways. And why do I say that? Some people, and we speak to so many experts, Neeraj, some of the experts say that even without the geopolitical issues, India was in a pain point because of XYZ, earnings nahi the, valuations, XYZ. Then you say, okay, but look at corporate results were good, but because of the geopolitical pain point, this is not going to continue. So which one is it?
Yeah.
Is there a strong base or is there not a strong base? So I think right now, because markets are down, everyone's finding all the weaknesses. And the moment this changes, we'll start talking about the inherent strengths of the Indian market.
Yeah.
So this is the way the narrative sometimes fits the facts is something that I find interesting. The fact is that FY26 numbers were good and Q4 numbers were good.
Yeah.
Whichever way you look at it.
Cross fingers for this to continue.
Yep. So, all right. So, US-Iran talks have hit a stalemate. That's not going to keep anyone happy. And crude prices jumped 4 to 6%, holding the gains. That also is a pain point. You had, meanwhile, US markets close at record levels. Gold is holding on to its losses on inflation concerns. It's a weak technical setup for the Nifty and the Bank Nifty, and a further fall is likely. Key support range now is at 23,000 to 23,100. For the Bank Nifty, the range is 52,500 to 52,800. IT stocks could open strong once again. FII shorts are now at 90% versus 88%, and the rupee is showing strength at close to $95 levels. Amongst all of this gloom and doom, Ridhim Desai is sounding quite positive. He says the bottom may be behind us, with earnings growth acceleration likely in the pipeline and valuations and sentiment coming off near extremes. Indian equities appear poised for a strong year ahead. The long-term story is intact, notwithstanding the AI debate. Domestic cyclicals he likes better than defensives and external-facing sectors. Is overweight financials, consumer discretionary and industrials, underweight energy, materials, utilities and healthcare. IT services could be the dark horse as the world pivots to these companies to build AI applications and solutions. Is the mood changing on IT? I wonder. Key risks to India are mostly external, including geopolitical tensions and slowing global growth. He's worried about the low productivity in farming, capacity constraints in the judiciary and embodied AI hitting the labor markets. Embodied AI, now that's an interesting term. Does that mean just the need for physical labor being replaced by that kind of machinery and AI? That's at least one positive note coming in from Ridhim Desai of Morgan Stanley. But let me go across to Puneet for the F&O setup this morning.
Well, thank you for that. We've seen that, yesterday we broke through a lot of those support levels and the 23,400 while we broke in. The implied open also indicates a further pressure on the index. Now, we've been highlighting the pressure across the board, barring IT, as you guys lightly mentioned. So, those support levels get activated yet again at 23,000, and then hopefully not, but at 22,800 are some of the long-term ones that we are watching out for at this point of time. The Bank Nifty though, and here this index is also bearing the brunt of what we are seeing on the benchmark Nifty 50 as well. And again, this is not a support zone at any point of time. 53,400 is something that we continuously watch. Haven't broken that in the last 6 to 8 weeks, but yet again could be something that the index could test in the near term as well. For investors, yet again selling almost 4,000 odd crores. This takes the total to almost 25,000 crores just in the last 2 days for FIs. Of course, Friday was led by MSCI rebalancing, but the index long has also slipped to a new low of what we've seen in the last 8 weeks at 9.6%, 90% shorts being maintained in the system by foreign investors, and that is visible across the board on the open interest distribution as we monitor it every day as well. Now, since we are receding in those levels of 23,000, 24,000 continues to be a key level that is the most active for calls at this point of time. Today, of course, is the expiry for the Nifty 50, so you hopefully see some kind of recovery in second half or starting tomorrow as well, but likely pressure is expected to be continuing across these levels as well. And just 3 to 4 key stocks that are on our radar for GVTND. We saw a build-up of shorts actually in a system. Results have been good for that space, which we've seen in Q4 as well. Irida was the other one which saw the shorts being built up on weaker Q4 numbers, and Tech Mahindra continues to see longs being built up on the back of the move on IT. And for losers specifically, you've seen just a couple of names, Bharti Airtel and HCL Tech. HCL Tech also seeing covering of shorts. Bharti Airtels are seeing longs being unwinded at this point of time. So overall, as you guys rightly highlighted, IT continues to be the picture and important where we can find a support for the Nifty 50 at this point of time.
Yep. Till we look for that support for the Nifty 50, what we can do is we can tell you what stocks will be in focus today. I'm starting off with Anant Raj on my watch list. They have signed an MOU with the Haryana government. The company will invest 25,000 crores to build a data center and develop cloud services for the Haryana government. And because the AI trade has been so strong and there are such few, I would say, candidates, that's why Anant Raj has been in focus. So a little bit about the company. Their revenue from operations including data centers grew 22% year on year in the last quarter. Revenue from data center infrastructure and allied services stood at 176 crores and EBITDA stood at 723 crores. Even their margins were up about 271 basis points for the year at 28.04%. And what the company has done is they have a subsidiary called Anant Raj Cloud that has expanded the data centers and cloud business. Current capacity is at 21 megawatt IT load capacity of operational at Manesar and 7 megawatt at Panchkula. They're targeting a total of 357 megawatt IT load capacity in FY 2032. Okay, so that's the first one. The other one I'm looking at is Hero Moto. The May auto sales have been decent. Total sales at 5.7 lakh units, which is in line with what was expected. Total sales were up 12.3% year on year. Motorcycle sales up 6%, but it's the scooter sales which have really zoomed, right? From 32,537 units to 66,305 units. Domestic sales were up 9.8%, but exports again have zoomed up 78%. So strong domestic and export growth has boosted May numbers. Scooters and export growth have doubled on a low base, but watch out for El Nino impact on entry-level demand. The third one I'm looking at is Dixon Tech, and Macquarie has an interesting note on them today. They've maintained an outperform with a target price of 15,000 rupees. They're saying the PLI 2.0 details emerging for mobile phones seem quite positive for the company. Domestic value addition, that's DVA, of more than 55% is required in this PLI 2.0 versus 15 to 20% currently. So the 2.0 version will be formally linked with the 40,000 crore electric components and manufacturing scheme. So the licenses will be tiered and incentives will be tiered based on the local sourcing of critical subcomponents. This provides confidence around margin trajectory, and Dixon could be a key beneficiary with its joint ventures with Q-Tech, HKC and Chongqing Yuhai. It provides visibility for the company to target other major input costs such as batteries and PCBs through capex outlay and or JVs and acquisition. So maybe you see some excitement in Dixon today.
Yeah. Well, there are three stocks which have some bit of selling. I've chosen Ola, but there is also NHPC and Alchem Labs. But Ola has launched a QIP at a floor price of 37.74 a share. It's not necessarily only about the price per se, but also the fact that there's a business in its nascency, if you will, having to dilute extensively and multiple opportunities in order to get the money for running the business or expanding or otherwise. So the equity dilution is fairly large, and therefore, usually such businesses make lesser shareholder returns than the ones which don't need too much capital to run. So that's the point I'm making, but I think you'll see a bit of a downtick today on Ola. And of course, if the QIP gets subscribed really well, it remains to be seen. So keep an eye out for that. Force Motors, not too much of a force in this month's numbers, and that's why I've chosen that. Total sales fell about 15%. Domestic sales dropped about 14%, and exports fell quite a bit, about 31%. It's a very low pace of exports. But Force Motors, which is not necessarily a cheap stock, hasn't really gotten a good month behind it, and maybe it shows in the stock. So let's wait and watch. Now the third stock and the fourth stock, the fourth one is a very interesting one, but the third one, I have no idea about what this means for Black Box as a business, but Black Box and a company called AIONOS have announced a strategic alliance to help enterprises accelerate AI transformation. These days, anything connected to AI does very well. I mean, Dell was a case in point in the US yesterday. I'm not comparing these companies at all. I'm just saying that anything that's got some benefit about AI or some venture into AI may react a bit. So if Black Box were to react, you should know why. Last but not the least, Tamanna, I'm just adding in the fourth one simply because I have no idea about what Softtech Engineers does, but Softtech Engineers is a listed firm, and it has collaborated with the Brihan Mumbai Municipal Corporation, which is BMC, the richest corporate body in India, to develop and launch Civit Twin. It is India's first AI-powered digital approval twin for building permits. How's that? How does that sound?
Wow. Just thinking about it, it's not like BMC hires less people. just saying.
For putting it out there, yes.
just putting it out there. It's not like this is a lean, mean machine that needed AI for digital twin, but it's cool. It's cool if corporate bodies start adopting this. And if it, at the end of the day, makes permissions faster, faceless, transparent, no
That's
kind
the
of
word, isn't
transparent, no give or take with it, then it's very, very welcome.
I wonder how, it's amazing.
It's amazing. It's amazing. Because you'll have, at least you think this AI digital twin will have very clear morals and standards and make sure those licenses come to those who deserve it.
Yeah, you never know with BMC around. Even this one could.
Let's hope. All right, but so much more which is on focus in the back of several news pieces. Varsha, what are you looking at this morning?
Well, I'll be covering two stocks mainly. One is, of course, NHPC, wherein government is selling stake in this counter through an offer for sale, and the floor price is fixed at rupees 71 per share, which is 8% lower than the current market price, and government may sell up to 6% stake in total. A base size offer is 3% at stake, which is 2,140 crore. If demand is strong, another 3% stake can be sold, that is green shoe option. So the total deal size, if you see, can go to around 4,280 crore. No non-retail investors can bid on June 2nd, 2026. That's what the timeline is, and retail investors can place bids on June 3rd, 2026. Then you have Acme Solar QIP, wherein they've launched QIP to raise growth capital and reduce debt. Issue size can go up to rupees 2,800 crore, including green shoe option, and the QIP is priced as 9% discount to the the last closing price, and the company plans to utilize proceeds largely towards debt payment. Base QIP, if you see, stand at around 2,600 crore. Additional green shoe option size is at 200 crore, and the total dilution over here may increase to 11.82% post issue. That's one of the concern, and the total shares issued can rise up to 10 crore shares. So these are two stocks which are in focus.
Okay, going across to Sharad now, because one sector which is definitely in focus is IT. Can IT stocks script a June encore? Well, the odds certainly look promising. Sharad, IT is booming for a whole host of reasons, but do you think June is going to be interesting for them?
Well, yes, June and even July is actually a seasonally strong months when it comes to the IT space. And Tamanna, the global ADR rates were also up almost 4 to 5% for the key IT stocks as well. Of course, there are 4-5 important reasons why IT stocks are buzzing. There's a strong technical momentum. The global software stocks, they have picked up as well. AI-related announcements are coming. And of course, these tie-ups are there with the Indian companies, be it mid-cap and the large-cap names as well. Valuations attractive, and a little bit of concern which was there, will AI hit the software stocks? And of course, the commentary coming in from Jensen is actually giving a good momentum to these software stocks. But looking at the data, interestingly, 7 out of the last 10 years, the month of June has been a green when it comes to the Nifty IT index. And you look at the overall average, the 5-year average, that stands at 4%. In 2026, already yesterday's trading session, we saw a good up move coming in, and likely we'll have a strong opening also for the IT stocks today. And 2025, 2024, 2023, look at that, a good green coming in the IT stocks as well. So net, June does, seasonality speaking, it does augur well when it comes to the IT stocks.
Yep. Well, let's see. The end of May also augured well. Let's see if the build-up continues in the month of June as well. But, as we hit into the break, I'm pretty excited about the conversation that will come in the next 5-7 minutes, Tamanna, because frankly, it was a delight to talk to Dr. Habil Khorakiwala.
Yeah, what a star he is, and what Wockhardt has done. But we're looking at Zenith only now. It's been such a long journey. Just take a look at an excerpt of that interview.
Not a research organization. We are the most successful antibiotic research organization in the world. We've got 6 drugs US FDA has given. No company has got more than 1 or 2. Our advantage, unlike other molecules, is we have compassionate patient. AT means there is a lot of real life data. And one of our purpose, which is beyond business, pure profit, is that I want to equally make our drug accessible.
Sure.
All over the world.
I'll wait for this, and Tamanna, everything else notwithstanding, and the viewers will hear it, of course, but misal hai, wherein he's saying whatever has happened in Zenith has gotten is one thing, and it's brilliant, of course, for India, for Wockhardt, for everything. But the man is 83, and he's saying, I'm now on the journey of Wockhardt 2.0.
Wow.
I believe in the next 3 or 4 years, I want to set Wockhardt on a path for it being a sustainably strong organization at 83.
Massive. That's amazing. Okay, that interview coming up after the break. Top strategies with Kush and Parag coming up after the break. So much to hold on for. So please come back. We're waiting for you. Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Okay, all right, welcome. You're seeing India market, watching India market open. Pull up the Nifty implied and you look about 193 points down. Now, while you're wondering what is the impact of all of the pain that we're seeing on Dalal Street, the Kospi has overtaken D Street based on two stocks which have boosted the South Korean markets. They've overtaken India as the 6th largest stock market. Remember, we slid from level 5 to level 6 recently, so now clearly we're at level 7. South Korea's two stocks make it the world's 6th largest stock market. Samsung Electronics and SK Hynix have powered this jump. Both stocks have a 52% weightage in the Kospi index, and both stocks have entered the $1 trillion valuation club recently. Kospi has gained more than 100% this year. I mean, I don't know if you can show a year-to-date chart of the Kospi, but it's a 100% jump. South Korea has vaulted past Canada, Germany, UK and France this year. After Taiwan, South Korea has surpassed India as the world's 6th largest stock market. So here's the ranking now. You have in market cap, you have the US at number 1, 79.7 trillion. Japan, mainland China, Japan, Hong Kong, Taiwan, South Korea, and then we come to India. But as negative as that sounds, the fact is it's because of just one or two stocks that's happening. But Neeraj, time for that big interview.
Yeah, time for that big interview, because I mean, while we talk about India having problems, there are promising things happening out of India. Zenith or WCK 5222 is one of them. And I had a chance to catch up with Dr. Habil Khorakiwala after this approval that has come in. Major life milestone, great achievement for the company. But I quiz him about what does it mean for work hard, earnings and more. Hear him.
I'm wanting to ask you, are you a relieved man today, or are you now an even more ambitious man today?
I am more ambitious.
Okay.
In the sense that actually I am 83 years old today, right? And you see the energy, and both mental and physically also I am very fit, God grace. But personally, I feel I have to build a new organization in next 3 years or 4 years. It is that important, because a business organization is very different for new drugs than what we used to do. You know, a generic drug, biosimilar drugs, in terms of business, it is more commercial. Whereas a new drug is all science and medical approach, fundamentally. And now that kind of skill sets to manage, collect and do it is a very different order. And the method and approach you use is of a different order and different dimension. Because when a new drug is there, a doctor is reluctant to use any new drug, however scientifically you can try to tell him. Especially our drug, which is antibiotic, which is used in critical cases.
Sure.
And he has a critical patients. So whatever he has used, he knows the side effect, he knows it damages kidney, liver, but he has used it for 5 years, 10 years. So he's comfortable.
Sure.
So it takes time for him to adopt a new drug, and unless the medical and scientific part is communicated properly and effectively through various means.
Okay. I can imagine. Okay. Wow. So, well, in 15 minutes, I have to club all of that. So, I'm going to try and make it quick because I have a lot of questions for you, sir. First, now that you've got both US FDA, DCGI approval, what are the tentative launch timelines, both US and India?
About 6 months.
US and India both.
about 6 to 7 months, a few months here and there.
Okay. And what's your expectation about the approvals from some of the other regions?
Europe, we have already filed in Jan, which was about 3 months later than USA, 3 to 4 months. So we'll get in 3 to 4 months.
Got it.
Because this is a fast track everywhere in the world. USA given a date 31st May, 6 months back, and they stuck to the date. Similarly, European authority has given some date, but their method of calculating is different, so I don't know exact. So that is what there. And Europe, we will be introducing little later because it requires a price approval at every country.
Got it.
So generally, if you have a market in USA, it will take 1 year more to go into Europe.
Okay. What do you expect the initial sales traction to be like in the first 6 to 12 months? And what would Zenix's contribution be, for example, for Work Hard as a company, let's say in FY27, FY28, as the case may be?
See, 27 there would not be very much because hardly 2-3 months are there, initial new. 28, certainly we will have some contribution coming, but the peak comes, it really takes off after about 12 to 18 months because initial time, as I mentioned, everywhere it takes to enter the hospital, get the doctor convinced. They will use it, they will experience it. Our advantage, unlike other molecule, is that we have compassionate patient, AT, means there is a lot of real life data. Clinical trial is not a real life data, but this is a very real life data. So, and they are used in extreme cases, so we are going to have case study of each case. So we believe that that is one way to overcome the initial fear. And very fact, 80 patient means at least 60-80 doctors have used it.
True.
In India.
Got it.
And 6 of them were American patients.
Got it. Okay. Well, in which case, sir, could you tell us how is it that you are going about the distribution or licensing conversations at all? Because you've spoken about lab to market. Would you do this entirely in-house? Would you want to pursue some other methodology or routes to?
We explored licensing route for the US. We explored. But we also simultaneously create alternative to do it ourselves.
Okay.
So both were running parallel. Because I said if I don't have a choice, I won't get the value in licensing. But if I have a real choice, so we chose to go ourselves.
Okay.
For 2 reasons. One is it's not the one molecule company. We are going to have over the years number of drugs coming in. So we are building up a business. From the beginning, I had a concept of a business, not a research organization.
Of course.
So unless I complete that, second is we saw research, we thought new drug will not come, that's why we were there. Similarly, if large pharmaceutical companies worldwide don't have the research molecule of their own, where is their business? So there is a white space we see.
Okay.
Worldwide.
Sure.
And that is what we want to capture.
Well, 83-year-old Dr. Habil Khorakiwala saying that he's gonna do a Work Hard 2.0, ride this whole journey and seeing multiple financial triggers in the years to come. Catch the full in-depth conversation with the Work Hard chairman today at 1 p.m. only on NDTV Profit. Our guests are with us, Parag Thakkar and Kush Bora. Gentlemen, thanks so much for joining in. Parag bhai, since we're on the topic of Work Hard, just extending that conversation, right? If people believe that they will Work Hard might sell off some of the rights in the US, get in the capital, reduce debt, etc. He's not talking about that. He's talking about doing the whole journey himself, even if it's painful for the next 12 months, but hopefully riding the benefits later on.
Sure.
Right? Is that a positive, or would you have hoped that, bhai, chalo, thoda near-term trigger bhi aa jaye?
No. So basically, I don't own the stock, so I'm not so much keen on whether it is near-term positive or long-term positive. But kudos to you. You took this interview. It was a fascinating interview. Whatever glimpses we saw, And the man at 83 has so much of energy, and he's talking about 2.0. And remember, this man has gone through cycles. 2 times, I think the company was on the verge of collapse. So it also teaches you that you should give second chance to people, right? That you should not write them off completely, especially if the DNA is good, right? So I have a lot to learn from him.
Yeah. The stock has of course been buzzing some 50% in the last month or so. But we have bigger problems in the Indian markets, Parag bhai. इतना क्यों मंदी है?
So I think, see, there are many things at play, right? All this semiconductor AI thing is one which is now well debated. Second is crude oil keeps rising, right? Today it is again 94, 95. And I think, so we are completely given up markets, right? On one hand, some of the markets are rising by 100%, 80%, just led by 2-3 stocks in 1 year. We are down, dusted. So I think there is a good value now here. For an investor like me, I think I will definitely buy India now below 23,300, 23,400.
Because we've become the underdog story.
Underdogs, and actually our DNA is strong. See, if you see oil intensity also, in 2008 we were 13% of the GDP. Now it is 4% of the GDP. Corporates are under leverage. Banking balance sheets are very strong. Kotak Bank is sitting on 21% tier 1. Bharti kind of company is generating 60,000 crore kind of free cash flow. We have entrepreneurs like Vokard talking at 83 that I am starting a new journey. All those entrepreneurship, low leverage, all things is underappreciated right now, and sabka time aata hai. So our time will also come.
The problem is you need to have the patience for it, and the number of reasons. If I just look from the start of this calendar year, January, February mein tariff ka problem tha. Then that got solved, or at least that went into the background. Then you had AI trade issue, and every few days there was a new release from Anthropic, etc.
Absolutely.
Then you had the war coming in, crude prices coming in. So we don't seem to be catching a break.
Yes.
Is there an underlying issue that we're overlooking? Because yes, there are a lot of external factors, but is there an underlying issue we're overlooking? Or are you saying valuations now are fine?
The valuations in large caps are fine. Mid caps and small caps, it is of course stock specific. Okay. But in large caps, I am fine. Banks, telecom like Bharti, two-wheelers like Bajaj Auto, I think valuations are fine. Government and RBI has done whatever it can. Of course, we can argue that we should do something more to attract for FPI inflows, so that rupee problem is also out of the way, and some kind of boost we receive in the market. And that is what I always hope for, because I am a market participant. But the point is that is something which is which I would hope that it will happen soon to attract more money from FIIs. On one hand, we don't have this kind of semiconductor or AI play, and on the other hand, so basically right now what I figure out is the FIIs are interested in 25, 30, 35% growth, right? While our ICICI Bank kind of companies are offering them 15% growth.
Bichare Indian investors are also interested in 30% growth.
I'm requesting government that they should also see now that now common man is also interested in this market. It is not 2000 of the world where common man was staying away. Yeah. Now there are so many people doing SIPs, right? And they are not seeing any returns from last 2 years. So something should be done from governments and also to revive the interest in stock market.
Okay. Kush, what about on levels today?
Just to round off that conversation, I was listening to something that Neeraj said yesterday in one of the interviews in the morning show, and something that you said sort of ties in, which is in 2024 it looked like India is a country which could do nothing wrong. And this morning you said a very interesting and a very pertinent line, which is, अब जब हम नीचे जा रहे हैं ना, तो सब negative views or negative angles ही आएगा. So let's accept one thing very clearly, which is we've lost flavor with the FIIs right now, and it's like an unstoppable force meeting an immovable object वाला fight चल रहा है. यहाँ पे FIIs are winning because of the sheer magnitude with which they are selling. तो जब तक वो नहीं reverse होता है, Indian markets going out, hitting all-time highs, hitting those 30,000 odd levels by the end of the year, it seems a little improbable right now. So one, we have to accept that fact. Also, incidentally, I had some data points tied up with this. You said February, जहाँ पे tariff issues आया, then April, May. This year alone, calendar, we've had 3 attempts at breakouts which have fizzled out, major and minor. In fact, let me tell you something. 26,300 के आसपास February में जो breakout था, that could have been
such a big one that it could have put the index in a very different space altogether. That didn't happen. April, we saw that rebound come about and then fizzle, and just recently, as recent as 3-4 days ago, we saw that attempted breakout again and fizzling out. So yeah, this is actually a beautiful graph that the teams put out. If you just eyeball, you can see a falling trend line. So, and okay, let me also add one very interesting but subtle point. Markets are always a step or two ahead, right? You will see the index go slightly above those trend lines and resistance levels and then fizzle out. So this is typically what we call like a trapping rally, right? So that is why being fully convinced that the rebound is really underway or rather the reversal is underway is a bit of a challenge. So we have to be a little cautious in the near term. As far as the here and now goes, right now the things are looking a little bleak. The indicators also turned bearish. The only silver lining is the PCR, which is at 0.69. Today being the expiry, there could be some rebound. There's a gap around the 23,150 level that could get filled today if we do get this 200-250 kind of a gap down. So yeah, play for the rebound on an intraday basis, not a positional long trade.
This and this is important, Tamanna, I think, this 0.7 up PCR, because the positioning of the market in some sense is already there for the downside, and if this 200-point downtick were to
So I think FI net short is 90% if I'm not wrong, right?
Yes.
Typically 92% pe ghumta hai wo bhi.
And see, call it what you will, the FIIs at least from a near to a medium term have got it right. Remember yesterday we spoke ki Friday ko jo fall aaya tha usme 31,000 short contracts leke gaye the. Kal another 16,000 were added. So which means they are not seeing a let off, and the markets are also rewarding that short trade, right? So unless that changes, even from a near term perspective, a day to day perspective, I think the reversal is a little tricky. You could play for rebounds, like I said.
So then how do you play for these rebounds via ideas? I'm guessing one is the Nifty trade, and that you will take after you see the downtick and the extent of the fall, right?
True.
So that, let's talk at 9:20.
Yes.
What are the stock recommendations for the day then?
Also, and hence, Neeraj, you recall, we've been saying one thing, ki index jitna hota hai, avoid karo. Yes, I was bullish on Bank Nifty. It did give you that rebound, but that also fizzled out. HDFC Bank attempted rebound yesterday fizzled out, right? So that's a bit of a pain. But yeah, focus stock specific. IT has started to do well, so of course one of the stocks has to make a cut. The IT stocks has to make a cut, so that is emphasis. The other one, Thangamayil, and on the short side, I've got Patanjali. So emphasis, with the kind of move that the IT pack has seen, somehow I think that the mid-tier names will perhaps do well. Persistent Emphasis, one of them. Today I've picked Emphasis for targets of 24.15, 24.85 with a stop loss at the 20 to 60 mark. Thangamayil, by the way, you'll recall we've spoken about this stock time and again, and this is perhaps the only stock from this space that has rebounded, and almost recovered the, losses that it had when the news came about, of the gold, not buying gold, and the entire sector getting affected. So for targets of 4,400, 45.45 with a stop loss at 41.75, Thangamayil is still a positional buy. And on the short side, the FMCG name Patanjali makes a cut yet again. Short targets 445, 440, stop loss at 455.
When did you first, at what levels did you first start talking about Thangamayil?
I think it was at about 2,800 or so about 2,400 to 2,800.
Yeah, because I remember you talking about it for a while now. So at 2,400 you've been talking about is at 42.84 right now.
What is interesting, Tamanna, is the rebound that it's had. It fell to about 36, 3,700 odd levels, and then that is the strength of the stock, and that is why, like I say, strength and momentum, bet on that.
Yeah. I don't know if you're seeing either in the next company that we're talking about, whether there's strength or there's momentum, frankly. And this might be another bit of a downtick. Ola Electric has launched a qualified institutional placement to raise up to 500 crore rupees with an option to increase the issue size. Puneet joining in to give more details. Puneet, why are they raising money?
Well, thank you for that. The 500 crores possibly might be raised for capex as well as net debt, and we'll get to that in just a bit. But roughly around 13.9 crore shares will be issued under the QIP plan if successful as well. They have mentioned that there could be some possible upsize option also depending on the interest they get from investors at this point of time. But 500 crores is something that they're watching out for. The price is also very interesting at 39.53, which is the current market price. As per the SEBI issue price, it's roughly around 37, but they have launched the QIP at 35.86, which is a 9% further discount to the current market price. So stock might be under pressure yet again, as you mentioned. And Motilal Oswal is the sole advisor at this point of time. The reasons for QIP, of course, growth capex is going into the newer ventures, the battery ventures as well. But they also have net debt of almost 1,200 crores that need to be paid down. And the company has almost 770 crores on net cash outflow that they did from cash flow from operations. So it was a negative number. So not generating cash to pay off debt is one of the concerns that might be, relayed through essentially with this QIP raise. And they also have to mention that there has been some recovery in monthly volumes, but that trend needs to be monitored as well going forward.
Okay. Ola Electric, they're in focus. I think you were talking about Alchem, and there are others as well. Acme Solar is also raising money.
Has just launched a QIP.
Has launched a QIP at 279.5 per share. It's a 2,800 crore size. I think NHPC
OFS.
has done an OFS, and then there's Alchem as well.
Yeah, four.
So all of them out there to raise money. I want to talk to you about Ola Electric right now, Parag Bhai. And, how should investors look at this? I mean, you'll see often you see a downtick when that kind of money is raised, especially in this market. But for Ola specifically, because it's seen some reprieve on the stock price recently because of EV sales, etc.
Yeah, but see, my view is that you should avoid companies where revenues are also dropping and EBITDA losses are also expanding. So EBITDA loss last quarter, if I remember correctly, was 285 crores. Market caps today is around 17,400 crores, if I remember correctly. So I would say that market is very, very forgiving, and as I said, very generous. That the market is right to give second chances. And see, everybody has right to get the second chance.
I can't tell if you're being sarcastic or not.
No, so I am not going to subscribe. That is for sure.
Okay.
Now people can subscribe and people can give second chance, right? Because as we saw in Bokart, right? And at one time the company was being completely brushed out, but now
can you really compare the two?
So I don't. No, I'm not saying. I'm just saying because we just discussed Bokart, it comes to my mind that naturally that this company can also have second chance. But remember, company came out with IPO at 75 rupees. People took it to 157 rupees, thinking that, everything is going to be nice and all that. And remember the second company which came, forget about Bajaj Auto, TVS, which are my favorites and which have done brilliantly even in EV market. Now they are the top two guys in EV market, right? But the third one, which is Ather, which is hero funded, has actually done reasonably well.
Yeah, it's done very well.
So I would say that and clearly as he also highlighted that this is a cash flow issue which he is trying to solve with this 500. What 500 crore can do? It will just solve the cash flow issue. It is not a growth capital.
Yeah, ideally wish for Ola to succeed, right?
And
per
his
se.
investors also.
But yeah, for Bhavish to pay off. But unfortunately, of late, you don't even see people in your ecosystem talk about buying an Ola two-wheeler. When people are buying an electric two-wheeler for their home use, a lot of other brands are coming into the conversation, but not Ola. I don't know if that's a sign, but well, let's wait and watch.
So that's one of the key QIPs. Let's see how that is received. Kush, you have a view on the charts because you're smiling over there, like you want to say something. What is it?
Becho. Every time you get a rebound on this, take it as an opportunity to exit. I mean, that's how it's turned out to be so far. No reason to believe that it will be any different this time around, right? The stock has a tendency of having a news impact every now and then, rebounding on volumes, but then just going sideways to negative for a while. For me, this doesn't really make the cut. I completely agree, and I have been saying that Parag Bhai ki mohar bhi lagi uspe, which is Ather Energy is a stock that you have to focus on, perhaps on declines closer to 900 odd levels, but not Ola.
Okay. We're talking about electric two-wheelers, and that market continues to see leadership consolidation among established players. TVS Motors and Bajaj Auto maintained their top position in May, while Ather and Hero MotoCorp strengthened their market presence. To speak more on this, I'm joined by Puneet. Puneet, you just heard that conversation about Ola, Ather and the QIP, but what are the numbers showing for the month of May in terms of sales?
Well, yes, most certainly. I think the points that Parag Bhai also made, that there's consolidation, leadership both for TVS and Bajaj at the top 1 and 2 spot. But you're seeing Ather as well as Hero MotoCorp now starting to spread their wings as well in terms of market share, both on a YOY and on a month-on-month basis as well. While Ola's market share have essentially halved from the same time last year. So when you look at the numbers, if you can pull that up on screen now, you're seeing TVS maintain that 25% market share for the month of May, similar to last year as well as the last month. Bajaj Auto also at 22 to 23% has been consolidating the leadership. But look at the jump for Ather and Hero. Both have increased by 4% each compared to May 25. For Ather, it's 17% versus 13%. And for Hero MotoCorp, a relatively new player with the Vida brand, is now at 11% versus 7%. And all of that market share gain is coming from Ola Electric, which has gone to 9% from 18% in May 2025. So, just some of the factors that you will have to watch is also new launches that are expected from a lot of players. But Ather, you have to also watch because of capacity constraint. They're almost running at full capacity. New plant will come in the next couple of quarters, but the next 6 months could be very interesting in terms of the 3, 4 and 5 number player, while 1 and 2 continue to be TVS and Bajaj. And you have to watch out for the recovery in Ola, how much of it gets played out. It's the second or the third consecutive month of over 10,000 units, but is that sustainable? Are some of the key questions to watch.
Yeah, difficult to say. Let's wait and watch how this shapes up. Now, let's try and think of things which offer value, right? Effectively, we are doing these conversations to help you make money. And when I look at brokerage notes today, there is one Nomura note on data centers, which is very positive. They're talking about CG Power and one more, GVT&D as ideas to bet on. There is a Nuama note on Trent. They have upgraded the stock to a buy because they believe that given the recent correction and low risk of an earnings cut, they upgrade the stock. There is also, of course, that whole metal chain, and in NMDC also there are a couple of upgrades that have come in, so keep an eye out for that one too. Multiple names out there. Let me start with let's say Parag by Trent, and then I would love to know from Kush as well if Trent or some of the other retailers are in focus. That at 4100 for a business that has added more stores and is at the end of the consumption where it's not premiumization, so destruction might be lower. Is this a good valuation level to look at Trent?
So I would say that if you are a long-term investor, stock has corrected from almost say 7,000-8,000 to 4,000 now. Management is great. The execution is fantastic. At least in Zudio and West Side, it is superb. So I would say that, and they are rational. They understand the market. They understand the pulse of the consumers. From that perspective, if you are a long-term investor, you should start buying on every dips. But you should be a patient long-term investor because the currently what is happening in India, the biggest issue is everything, the prices are going up. Everything is inflationary over here. So there might be some postponement. This is not fashion is not something which you can say that I'll not buy only, right? Clothes you will buy, right? But you will postpone your purchases, and so 1 or 2 quarters of that kind of problem can happen. Secondly, on supply side issue also, in terms of sourcing or in terms of there also they will be seeing inflation, which they might not be completely able to pass on to the consumer because they would like to retain their consumers, right? In such times when company's balance sheet is absolutely strong. So you should be able to see 1 or 2 muted quarters. You should be ready for that, and then you should have a long-term view to buy such a blue chip company from a Tata Group which has great balance sheet, great execution team.
Okay, let's look at the first ticks coming in the pre-open session, and you're seeing a pain there on the Nifty and the Sensex. These will of course settle. I don't know if you're going to open 260 points down, but yes, the implied did show you that kind of a cut in any case, close to a 200-point cut. What's working this morning? You have TBO Tech. TBO Tech has been on fire for a while. Shyam Metallics, the updates have been decent, some good brokerages on it. ICICI Bank showing some pop. Anant Raj we spoke about, that has some excitement coming in as well. I want to see what some of the FMCG players have been doing because they were in pain yesterday. An ITC, a Tata Consumer, HUL, Dabur, Dabur had its own story going on because there was a US FDA observation. Those are not that bad today. Would you see some recovery perhaps? Ruchit Jain joining us this morning. He's Vice President, Equity Technical Research, Wealth Management at Motilal Oswal Financial Services. Ruchit, very good morning to you. Are you seeing any kind of signs of a bounce back on the Nifty?
Yeah, hi, very good morning to everyone. Well, the opening, as the SGX has been suggesting, it's not looking that great. But if I just look at the charts, then in this corrective phase, major support for the Nifty is coming around 23,100 to 23,000, because 23,100 is the 61.8% retracement of the previous entire up move that we witnessed from the bottom to that high of 24,600. And being a good support at 23,000, where the put writing positions also there. So I think post opening, if we see some further dip towards the 23,100 mark, then definitely the risk reward ratio should become favorable to take counter trades over there. So the risk reward ratio is favorable around 23,100. So if we get the dip today, one can take some risk over there.
What are your picks this morning, Ruchit?
Couple of names, one on the long side is Tech Mahindra. IT as a space has relatively been doing well since last few days, and Tech Mahindra is one stock which has given a breakout from its consolidation yesterday. After a long time, it has managed to sustain above its 200 EMA as well, that too with good volumes. So I think we should see a continued momentum in the stock and the sector as well. So one can buy Tech Mahindra with stop loss below 1490 for potential up move towards 1640. And to trade this market on the short side as well, PI Industry is one stock which is looking weak. So I was just going with the theme that the stock which remains weak on during pullback moves, that's where we are witnessing more selling pressure. So stocks such as PI Industries, when the markets were doing well, we did not see any kind of participation coming in. And when in couple of days itself, when the markets have started correcting, the stock has even breached its previous swing low. So this is clear signs of underperformance. So PI Industries, one can trade on the short side in the June future segment with stop loss about 2780 for potential downside around 2580.
Okay, just going to go quickly to the top brokerage call of the day. Nirmal Bang has initiated buy on Ather Energy. Shara joining in with more details.
Well, yes, Tamanna, a little while ago, Puneet also mentioned that there was an increase in the market share of the EV two-wheeler players, especially Ather Energy, and now broking report also comes in, and they have initiated a buy rating, but the important portion is the target price. That's at 1,210 rupees per share. That means from the current prices, it's more than 25% of upside potential coming in. Now they are bullish on this company because they are expecting that the scale is something where the bullishness comes in. And remember, the technology-led EV player it is with a strong visibility, and the distribution expansion is also there to support the growth. Also, a 42.5% volume CAGR is expected over FY26 to 28, and the EBITDA break-even is expected to come in by FY28.
Okay, so that's the word on Ather. I want to also talk a bit about some of the FMCG pack, and because we were saying that slow monsoon, that is a concern, consumption is a concern. We saw that trend towards end of close yesterday as well. FMCG would be an avoid right now?
No, I will not avoid it.
Yeah?
So, for example, ITC at 280 gives me 5% dividend yield. I am still a value investor. I am not following the semiconductor and AI stocks. So, I would go ahead and buy ITC.
At some point, you're going to have to look at it.
No. By the time it would have been over.
You start. I mean, you're
By
talking.
the time a value investor like me looks at AI and semiconductor chips, I'm sure it will be over. So it is better to avoid now.
Can you, as an investor, I'm sorry, philosophical question at 9:05, but as any investor today, can you actually sit on the sidelines for a technology which people are saying is going to change all of the human race?
It has already done a $5 trillion market cap for more.
I'm not talking about the money invested. It's going to change the way humans live.
So I'm playing it through. So that is why I prefer Bharti Airtel, because I feel that mobile and home broadband also is a sticky business, most insulated from whatever problems are happening in the world. ARPU is only going to increase. It is only just a question when. And it's a 6% free cash flow, 11 lakh crore market cap, 60,000 crore free cash flow, 1 lakh 20,000 crore EBITDA, 6% free cash flow yield, and promoter Sunil Mittal, Gopal Vittal, the CEO, and the entire team backing it so strongly. They have said that there will be buybacks in near future in next 2-3 years. So because promoter wants to take stake to 51%, and I feel that some of the long only FIs have already started buying also. So I'm not against technology. I'm saying that my circle of competence is not there in that space. Now if I start looking at it, oh, now after NVIDIA is $5 trillion and Samsungs of the world are about, they are adding one Bharti and Reliance one every day.
No, but we don't even have those options here. We have, say, an Anantraj that we're looking like.
So that is a small portion of our portfolio.
Oh, you have come into Anantraj. What have you made of the company so far?
So basically what I like first
why did you
is
buy?
all these capital commitments are there, but they have got real estate in Gurgaon and Delhi. They are doing sales, they are doing generating cash flows, and that they are putting in data center, which is an annuity business. And most of their data centers are leased out to PSU companies who are out of Haryana or say railway corporations like, and some banks. Because data should not move out of Haryana, that is the policy of Haryana. So I think, and one thing the management has always said is they will not over leverage themselves. See, in this businesses you have to remember, unless you are a Bharti Airtel or Reliance or Adani's of the world, you have to take care in mid cap and small cap that they should not over leverage themselves. And Anantraj is one company which has told it publicly that they will not lever up too much. If at all, they will use LRD, lease rental discounting and something once their data business scales up.
Okay, so you bought into this as a tactical play, Parag bhai, or do you believe there is a long-term position here?
So one is, see, when we bought it was just a real estate. Then they ventured into this data center, and we thought that they had a right to win because they had so much of real estate and know-how. Up till now they have built 21 megawatts. They are in process of building 63 megawatts shortly, and they have a vision to build 357 megawatts by 2032. They have right to win in terms of legacy land. And now they have got expertise to build something, and their intent is not to take a lot of leverage, which is good.
Which is good. Okay.
Have you looked at a company called Black Box, also in this AI space? Okay, so everyone is on a hunting expedition right now for what is that AI play. Have you looked at Anantraj on charts, Kush?
I have. Anantraj has been on my radar. The only reason this stock hasn't really broken out yet is perhaps because of whatever is happening in the market. Otherwise, there are accumulation signs. By the way, the falling trend line resistance from a long-term perspective actually comes at 560. Look at where the opening is, right? So I think if it closes above this, it goes into that upward trajectory. I would really seriously consider this as a positional bet from these levels also. Stop loss close to the 525, 520 zones.
By the way, Anantraj is the top gainer on the Nifty 500 right now. What is doing well? And Ruchit, come in on large cap tech because all the ADRs had closed higher overnight. We're seeing the start looking good with Infi, TechM, HCL Tech all in the green. Is there a trade here, or has the rally already happened and would you want to book profits?
No, I think we could still see some decent up move in the IT names. Primarily, if we look at the chart of the Nifty IT index itself, the IT index signaled a downtrend at the start of February when it breached its 50-day EMA. At that time, the level was around 38,000. Post that, since the month of February, from 38,000, the index had corrected to around 27,000 levels. In that 10,000 point correction, whenever there were pullback moves, the index was not able to support that 50-day MA resistance. So this time now it's on the verge of a breakout of that 50-day MA. So if it manages to surpass that, and things are quite oversold on the daily as the weekly charts in many IT names. Also on the monthly chart, the Nifty IT index has formed a hammer pattern last week. It's a kind of trend reversal pattern in technical analysis. So I think we should see a pullback move at least towards 32,000 mark on the Nifty IT index where the previous swing high resistances were there. So stocks like, I've already recommended Tech Mahindra in this morning show. Apart from that, I think stocks like Infosys, LTI, Mindtree, Persistent System is looking quite good where good volumes are there. The stock should do well from the IT space from a near-term perspective.
The other one is the expensive names, but the hospital companies, because the commentary from all of them without exception was very positive. The delivery is also very positive. Now, Parag bhai, expensive names, right? Some of these, or maybe all of them, if you will. But the commentary is rock solid. Are these good to buy at dips? Apollo likely will start off about 3.5% lower today.
Yeah, so Apollo, Fortis also, I saw the results of Medanta, Global Health.
Max,
all of them.
Max also was.
So I think that will be the order. Apollo is doing phenomenally well. As you said, it is expensive. Stock has done very well, but it is something which you cannot ignore. The company keeps on doing phenomenally well. So if there is any fall in the stock price, it should be taken as an opportunity.
Tamanna, I can tell you, the hospital bills, they are surging. Personal experience now, it's really, really expensive. So they are making a killing right now.
Yeah, I know. And I mean, just in terms of coverage per Indian, the fundamentals for the whole hospital business are brilliant from a business perspective, right? The faith on private hospitals versus public hospitals, the increase in insurance and medical insurance cover means that you can go and do some of those tests and checkups, etc., and those procedures which you are elective, you do them more often. So the business is very rock solid. They would have taken a hit maybe from Middle East medical tourists coming in. Perhaps that may peter down because a lot of these hospitals have a huge exposure to foreigners coming in for treatments. I just want to ask Parag Bhai, what is the IT stock that you will buy?
So basically, we have, as we spoke, we have bought into Coforge, Tech Mahindra, Mphasis, especially after that Mphasis earnings call, and TCS. These four are the stocks which have, and we are thinking of, so we would be, another large cap stock is under consideration. So I would say that, yes,
among the
we
right to win in taking on AI services and then providing them to the people who need to, your Mphasis, Wipro, HCL Tech, are not making the cut?
No, I think, see, this entire narrative around IT being obsolete, IT services being obsolete, because of this coding things which AI, Anthropic and OpenAI came up with, I think that narrative is subsiding. Luckily for us, and I think it should subside for India to do well, because in IT services employ so many people. I think some of the USP companies have sounded off this, Microsoft and various others, that humans are required, and actually to build AI it is very expensive. So I would say that this narrative should change for the betterment. Right now, I think what we are seeing is a tactical rally, and I would play with these stocks, and especially after this Mphasis earning call, I got that conviction.
Top IT call?
Mphasis is something that we've already discussed. That is one that I like. I also agree with Ruchit's call. By the way, Tech Mahindra is very well placed. And if you want to add something on a slightly preemptive basis, you could consider Persistent. Now, the reason I say preemptive is because it's at the 200-day moving average resistance, just under it. But once it crosses that, it could also pick up steam. And just on a slightly personal note, I think what you said is perfectly fine. Health insurance अगर नहीं है तो प्लीज ले लो, अगर है तो उसको 2-3x कर लो. भगवान ना करे जरूरत पड़े, but पड़ेगी उस दिन आप याद करोगे. So the hospital bills are surging like anything.
No, and it also allows people to do things that they would have ignored. It's all a good thing. The level of unfortunately, you speak to hospital companies and they talk about how their oncology departments are making the most money. Year on year. It is sad. It is sad, but it is true. All right, Birla Soft also doing very well today. Latent View Analytics also showing some signs of excitement, but it's muted overall. I think apart from IT, nothing much happening over here. Is there a bank stock that you would look at this morning, Parag Bhai?
ICICI Bank is a stock I always look at.
Yeah, but I mean,
ICICI Bank and
anything beyond.
The recent addition is Kotak into that.
Kotak
ICICI, HDFC, Axis were always there, but Kotak is the fourth addition which I would like to have.
Okay, well, banks will not set the stage on fire today. IT might help the markets though do slightly better than what it otherwise would have. So, never thought about 2 weeks ago that this is what we will say, that IT is helping the markets because the others are not. Banks, look at banks, 0.7% lower, but Nifty IT is kind of playing the balancing act, else the markets would have been 1% lower. We would have actually seen that 200-point downtick on the Nifty. Let's see if it still comes about. The mid caps and the small caps should come up on your screen next. Mid caps index 0.6% lower, small caps 0.7. The market breadth is not that great. Well, the murmurs of the conflict, higher oil prices, all of that comes back, the markets take a downtick. I mean, become the lead indicator, de facto lead indicator, frankly. Let's get the heat map up on the screen. There will be a few IT names up there, but more red than green. Yeah, more red than green for sure. What is correcting? Bajaj Finance is down 2, Maruti is down about 1.5%. Eternal, Shriram Finance. Eternal and Shriram Finance tend to do this. Markets fall, they are the high beta ones which correct first. There is weakness in Apollo Hospitals, Airtel, L&T as well. A lot of red as you can see, very little green, but IT effectively. So Infi, TCS, Tech Mahindra, HCL Tech, Wipro, those 5 dominate the list up there, and Infosys is on a roll really. 3.7% higher for that one. What else? Maybe a bit of Hindalco, so maybe a bit of metals and a bit of FMCG, but frankly, IT the saving grace, but we are now 140 points down, slowly moving to that 150 or higher mark for a crack on the Nifty. Not the best of starts.
I don't know if we will sustain above 23,200 at this point. But, if you were looking for surround sound that is not as bad, then, look at the rupee this morning. It's doing okay. India VIX is about 2.5% down at 16.13. And let's see if we can pull up the rupee as well. So, yes, equities is hurting. There is no doubt that equities is hurting. No one is denying that. But the USD INR is okay, 95.09. So other things seem not as bad. Remember, the policy is this week as well. I want to pull up the broader markets, and you're seeing pain in the broader markets as well. So it's an all-round drubbing for now the 5th consecutive trading day for equities. Small cap 250, 1% down. You're seeing the mid cap also in that region and that zone, about 1% down. Let's pull up the sectoral heat map, and my guess is that apart from IT, everything else will look painful. Nifty, IT and just metals are flat, dipping into the red as we speak possibly. Realty stocks seeing the most pain. Media, I will pull up the Z stock. I think you'll see a bit of a slide because some notes out this morning saying that they're not expecting much ad revenue from that FIFA tie-up they have just because of the timings of those matches in US, etc. So are they really going to get the ad revenues they would have hoped for? It's a % down right now on the stock. Remember, it had a huge spike yesterday. But let's go back to the sectoral heat map and look at it in a little bit more focus, because that's telling you the broader story. IT, and this happens. The day IT is up, everything else is down. So media also down, financial services, CPSE, defense. It's a broad-based, I would say, downtrend. It's not a huge drubbing of the markets, but definitely not positive in any form or fashion. Let's look at specific stocks and see if there's something more interesting happening there. Maybe not. NMDC Steel and Coal India came out with business updates. NMDC Steel had good business updates actually, 1.5% up thereabouts on that stock. Coal India was okay on its business updates, but remember that stock has run up also a fair bit, 0.5% down right now. Sales updates are trickling in for auto majors. So Hero MotoCorp, their scooter sales and their exports were good. The overall number was in line, but there's a consumption sort of a grey cloud right now on what's going to happen in that space. So which is why possibly a 0.5% downtick. Force Motors actually were not great sales updates, so 3% down on that stock. Ola Electric and Acme Solar want to raise funds. Both are looking at a QIP, both in the red, which is expected when you're diluting your equity and raising funds. OFS, NHPC and Alchem are going to go in for offer for sales. Alchem actually mildly positive, NHPC about 4% down. Anant Raj, another stock that we spotted for you this morning, they have a fresh MOU with the Haryana government, about 4% up. Let me look at PNC Infratech. They have an order win, just about 194 crores, but about 2% up. So it's really, you have to take a magnifying glass and look for winners today, Neeraj, is what I would say. Unless you're looking at IT, then that's the easy one.
No, but factually that is how it is today. And by the way, yesterday's or the last month's big winner, Wokhard, is cracking today under pressure. So say some bit of selling that has come in for sure. When this gets absorbed remains to be seen. There is strength in, interestingly, IFCI. I'm seeing that at the top of the charts after a really long time. There's Surma SGS, which is not doing too badly. So that is actually good to know, because that's one EMS play that has actually done well. PTC is not done too badly. Intellect Design, in line with some of the other IT companies, actually everything in IT is doing well. So no point pointing that out, if you will. Hindustan Copper, some Metropolis, Vijaya Diagnostics. We were talking about tests. Maybe the market heard it that everybody is doing tests. So let's go and buy the diagnostic chains, so those are doing well too. But I see Kush nodding feverishly to a lot of stocks that I spoke about. Kush, what stood out? Was it IFCI? Was it Tech? Is it Anantraj? What is it?
I thought Kush was nodding, saying that I will stay up and watch all the FIFA matches. What are you talking about?
Not a big football fan, but yeah, the World Cup is something that I do track.
So then he'll buy Z because that is the one showing.
No, I would rather buy the subscription and not the stock. No, two reasons why I'm nodding vigorously. One, वर्कहार्ड में हमने बात की थी कि थोड़ा सा प्रॉफिट बुकिंग कर लो, ट्रेलिंग स्टॉप लॉस के साथ खड़े रहो. द हाई वाज अबाउट 2400 or so. It's already off those highs. So the structure is not bad. It's just that the overheating in the near term is what is causing this profit booking. That's the only thing. If you don't have, you can actually use these dips to buy. 1750-1800 के आसपास तो इनफैक्ट अच्छा बाइंग बनता है. So that is one thing. The other is IFCI. I mean, who had discussed this stock, in a while, and it actually popped up on my radar yesterday as well. It's just that it's very close to that resistance level of 70-72, and again, it's not really in flavor per se, right? But yeah, purely technically speaking, if it does give you that breakout above 72, I think this does go into a new trajectory, and perhaps we'll be talking about it a little more than what we have been in the last 12 to 24 months, perhaps.
Ruchit, what are you spotting after the opening session? And let's get a nifty call as well.
So among the sectoral indices, if you see, we apart from IT, metals is one space which has relatively been doing well. Primarily, even in yesterday's trading session, also amongst all sectoral indices, metals and IT were the only two index which ended on a positive note. And National Aluminium is one stock which is coming on my radar. Primarily, if you look at the base metals, also the aluminum has been going higher in the base metals. And National Aluminium, also the stock as a whole, has seen some good time-wise correction in last 1 month. So it's on the verge of the breakout above its previous swing high, which is just about 442, 443. So if it manages to surpass that today, then we could see a good run-up move towards 460, 465 kind of levels in National Aluminium.
Okay. I just want to know whether there is a profit booking moment in IT stocks. If profits have been made, is there a profit booking moment in IT stocks which would reverse trend, or is this the time to pile on and add positions? What would you look at, Ruchit?
So I think I would look at adding selective IT names rather than profit booking, because this is one space which has not performed at all since last 4 or 5 months, and things are quite oversold on the charts if you look at the weekly or the monthly charts. So even if you witness some pullback move, then I think not all the IT names, but at least those who are taking the leadership stocks, such as some larger names such as Infosys, Tech Mahindra, Persistent Systems. So I think this could relatively do well in the near term. So I think if anyone is holding long positions, should not be in a hurry to book out soon. This pullback move should extend a bit more.
Stock I wanted to ask about is Gujarat Gas, and look at Gujarat Gas this morning. Interesting notes out there talking about how in Morbi, for example, as the move is away from commercial LPG cylinders, there is opportunity for Gujarat Gas and the likes. Is that one area which is getting blindsided by the market? Because there are going to be some fundamental shifts in energy consumption all around, commercially and domestically in India, which whatever happens from this West Asia crisis now changes. Whether it's piped gas, city gas distributors, or Gujarat Gas for that matter. How do you look at it?
Yeah. So basically, there is this Morbi cluster is doing well, and they were using either Gujarat Gas or propane, and propane is in shortage. So that's why they have shifted to Gujarat gas. So I would say that this is I cannot say whether this is a structural shift, because they can actually shift back to propane also. But I would say that for time being, yes.
Is it that easy to shift back and forth, the infrastructure around it?
So yeah, I have seen them shifting. So okay. I would say that I would not read too much into it, but yes, its result was fantastic. And so the market is getting, so it is, and it was blindsided, as you rightly said.
Yeah, I don't think people spotted it.
Yes.
If you're wondering what we're talking about, Morbi is this area in Gujarat which is known as the hub for tile makers across the country. And one of the components that you need to forge those tiles is commercial gas, and which is why Gujarat Gas is up and about today. On the charts, are you looking at this stock at all?
I wasn't up until you mentioned.
Yeah.
So I must say very well spotted, not because of the move that it's made today. In fact, if you go back from April, this is one stock which is actually not given up gains. In fact, it's building on. So blindsided was perfectly put, rightly identified. I will have this on my radar from here on. But from a quick glance, this was broken above the 200-day moving average today after resisting for a few sessions. Medium to long-term falling trendline resistance being broken. So it's got a few things going for it technically also. So I would definitely have this on my radar. If someone does decide to trade on it, 445 and about 480 should be your targets, positional on the upside, and stop loss around the 395 mark. So it does seem to be giving you that breakout.
Okay, thank you so much, Kush, Parag Bhai and Ruchit for joining us this morning. We're going to talk about a big theme right now. The IMD has lowered its monsoon forecast with rainfall now expected at 90% of the long period average versus an early estimate. We're seeing some of that concern play out in, I would say, consumption plays, and especially rural consumption facing companies, whether it's FMCG, it's two-wheelers, it's vehicle financiers. You're seeing that entire play coming in. We're going to be having a conversation with GP Sharma of SkyMet, and of course Abneesh Roy, Executive Director Research at Nuvama Institutional Equities, will also be joining us. But before we get to that conversation, I want to invite Mahima to set it up for us. Mahima, where is this concern coming from, and how is it now reflecting in the way the stocks of certain companies are reacting?
Right, so Tamanna, as you rightly mentioned, we were expecting a below average monsoon, but on Friday, the IMD estimate suggests that now the rainfall is expected to be around 90% of the long period average versus that of a 92% earlier, and that's probably the reason why we've seen pressure in a lot of FMCG names in the last 2 days. Now, if you take, a couple of stocks that have, strong exposure in the rural area like Colgate, HUL, Jyoti Labs, Marico, Britannia, etc., Godrej Consumer, etc., all of these companies have rural exposure anywhere between 30 to 45%. Now, lower rains, that means lower farm income, and that will overall impact consumption demand in the rural area. Last 3-4 quarters, we've seen rural demand backing up the entire consumption space, but this could probably hamper that. Now, this could also have a mixed sentiment because something like an Imami, strong summers, Dermicool, Navratna, etc. will have a positive impact, but at the same time, almost 40 to 45% of their revenue comes from rural areas, so that aspect could see pressure. For Dabur, around 15% of their revenue comes from juices, so that is a good part because summers will be strong, but over 50% of their revenue share comes from the rural market, so that could impact Dabur. Same with Tata Consumer and ITC as well. So, there's mixed sentiment where strong summers could also see urban demand picking up, but this could definitely hamper rural demand going forward. So, this is the overall view of what weak monsoons mean for the consumption space.
Okay, I want to go across to GP Sharma first. Mr. Sharma, how definitive are the predictions of monsoon being poor right now? Just trying to understand technically, can this really change? Or are we now set for a weaker monsoon, and that is now very clear?
Thank you so much. It is a little early to go for the definitive assessment as to how the monsoon is going to be. In view of the strong El Nino, yes, the market sentiments everywhere, it is like this, that it's going to spoil the monsoon. And as the El Nino has done in the past also, yes, the track record is it corrupts our monsoon, all right. But then there are exceptions, and normally the super El Nino, that thing which is going on, that is going to impact our monsoon adversely, very badly. That is not so. Okay, as I say, it is just in the month June has just started now. Okay, El Nino has not yet started, and so neutral conditions are still prevailing. It is still about a month to go for the El Nino to possibly set in over the Pacific Ocean. Okay, so I think we still need some time to watch. At least the start of the monsoon, though it is not looking very healthy. Okay, the monsoon start itself, though the Met Department has said that.
I just want to understand, Mr. Sharma, can this reverse? Have you seen years in which this reversed?
Reverse is not possible. I don't think so. Okay. It has happened only 1 or 2 occasions when the normal rainfall has been there with the super El Nino, with the strong El Nino. Yes, 1997, there have been cases, but then those are very few. From 1950 onward, you take, there are about six of Super El Nino, and the two cases were normal. Okay, out of six, two. So that's a ratio like, and as we have seen in the past, the data supports that the monsoon is to be watched very carefully. And Super El Nino, yes, definitely it has a track record of impacting monsoon, but it's a little early to go for revision. But the IMD, they have a tradition that they give a forecast, main forecast, revise it at May end, even June end. Also, some figures will be given. But then at SkyMet, normally what we do is we give a course correction if required. At least watch the monsoon for some time, maybe halfway through if required, we track that. Yeah, that's it.
Okay, so you're also seeing a super El Nino, which I presume is worse than an El Nino.
It is the strongest. You see, it all depends on the Pacific temperature anomalies, which we call it as, from the normal, when the temperatures are 2 degrees Celsius or more, then we call it as a Super El Nino. Though Super El Nino is not a scientific term at all, it's possibly a term coined by media. Otherwise, very strong El Nino is the term which we normally use when the temperatures exceed 2 degrees Celsius. Okay, that's going to be the case this time.
Okay.
It looks like. Yeah.
Okay. So no, I just wanted to get that context in place before I come to Abneesh Roy. Abneesh, thank you so much for joining in. So now that it seems fairly clear that we are going to have a weaker than possible monsoon, weaker than regular monsoon, and really that's the worst case scenario with everything else panning out. What is the impact that you see on the whole basket of companies that are exposed to rural consumption?
Yeah, thanks and good morning. I will agree with the previous participants' observation on El Nino. I think we are just mixing up recent stock correction too much with El Nino. I don't think El Nino is impacting Q1 or Q2. It will essentially impact H2. Yes, there will be a real impact. As the previous participants said, we have to be concerned, but it is quite early. The current market sell-off is more because of the FII selling, crude coming back, geopolitical. It is not El Nino at all. Except I think IT index, most other sectors have corrected. It is all linked to that. My sense is Q1, Q2, in fact, should be quite strong for almost all the consumer companies. Because of the price hike, there is the freebie being distributed by every state government, right? Even Bengal now is giving 3,000 rupees. So the new government in Bengal is giving. The earlier governments which came to power recently, Bihar, Maharashtra, Madhya Pradesh, Tamil Nadu, you name it, those are also there. So it is not so easy that, okay, if El Nino is there, then FMCG will correct, FMCG consumption will go down. It doesn't work that way. Yes, in H2, there will be a concern, but we also need to see what happens to crude oil in H2, what happens to the freebies, because clearly coalition politics is a reality and governments will be quite careful that too much of stress on the rural economy is not there. So we should not see just one facet. We have to see all the factors. So I'm quite positive on many companies in consumption. So Nestle, Marico, Asian Paints, Berger Paints, Pidilite, these will see very strong results in Q1, Q2. Even the summer categories which you just highlighted, El Nino, is yet to come in. But if you see in Q1, we have seen very high temperature in many parts of the country. So Varun Beverages, Imami could also see benefit, Dabur could see benefit, as you rightly highlighted. So it is not gloom and doom, and El Nino frankly will impact in H2, not now.
But then the point that if you are saying that H1 will be impacted because of the factors like crude coming back, etc., and because the market starts to look 6 months out, if the monsoon were to have an impact in H2, is it therefore going to be a case that FMCG will stay under a cloud for the next 6 to 9 to 12 months?
No, these days people don't bake in 6 months in advance. These days, the near-term results are very important. I will say, let's go quarter by quarter. So if you see most of the FMCG results, which were quite strong in Q4, those have done quite well. So if you see Nestle, Marico, Asian Paints, Berger Paints, Pidilite, those have done quite well. So my sense is Q1 results and Q2 results will matter much more rather than H2. If we start factoring in H2, then what about the Q1 strong results? So I will say that yes, H2 there will be a concern, but my sense is there will be correction in crude oil at that point of time, right? No one is expecting that this geopolitical issue will continue for 1 year. So I think multiple moving parts. We can't just pick up that, okay, El Nino is there in H2. So now the stocks will start correcting. What about the crude correction, which will happen in H2? So I will say in Q1, the stronger results will do well from a stock perspective also. So Nestle, Marico, Asian Paints, Berger Paints, and Tata Consumer Pidilite. I think these are the stocks where we will have more conviction, even from a Q1, Q2 perspective. I think El Nino is too early. We are just mixing up 2-3 things and just saying that, okay, it is El Nino. It doesn't work that way.
Anish.
Last 3-4 days, the FI correction has been there. The crude oil has gone up.
Fine.
So you have to do like that rather than just making it so simplistic in my view.
No. So let's not make it simple, but let's try and make it as simple as we can for the sake of the conversation, Abneesh. Let's assume Q1 has that impact, and at that point of time, the sentiment of an El Nino, extreme El Nino or what have you, comes into place. Will that not impact the sentiment on the FMCG names?
I already answered that.
No, you said that. No, I heard you say that markets don't discount 2 quarters out, which I heard you. But when the news around El Nino comes in, it will have an impact on sentiment, right?
So El Nino is not new. El Nino, the expectation has been there for the last 6 months. Yes, there is a downgrade from 92, 93% to 90%. But when the Q1 results will come, I think market will move to that. These days, quarterly results, what is happening on crude, those are very important. I think we are missing the bigger picture. The bigger picture is price hike is back in FMCG and paint sector. See, whenever that happens, the operating leverage comes in terms of revenue. Second is whenever the such volatility and such extreme situation is there, the local players gain market share. So we can't just pick up one thing, okay, El Nino is there, so stocks will correct. What about the market share gain? What about the double-digit revenue growth? I think most companies will get. And when crude cools off, these companies don't pass on the raw material correction within 1 month. There's always 1 or 2 quarters of lag before they start passing on that benefit. I think there's a lot of moving parts. So that's why I think investors these days play quarter to quarter rather than El Nino, because El Nino is not a new thing. This has been there as a concern last 6 months, and we are just mixing up the current FIA correction to El Nino. No, it doesn't work that way. The entire market is also corrected, except the IT in my view.
Okay. So, well, Mr. Sharma, is there a silver lining at all? Let's segregate the two. Let's assume that El Nino is one of the ingredients, not the sufficient reason for the correction. The correction in FMCG is separate. But now coming back to rainfall and not the stock price movements, is there a silver lining at all in this next couple of quarters with regards to monsoon?
You see, not for the season as such. For the season, we should prepare for below normal at least rainfall. It could be, you see, El Nino doesn't strike harshly all across the regions. It does spare some pockets. Okay, and as the data we see, all the 4 monsoon months, they have not been poor generally. It does become good. One of the months we have seen even in the months in the El Nino years also, and I hope so. There are some other factors which can counteract, which come to the rescue from the El Nino, effects of El Nino, that will come up a little later. Yes, we should prepare for possibly maybe for the worst also, but at the moment I feel it's a little early. The strongest of the El Ninos, they have left some parts of our country with some good rainfall. I will say excess rainfall during El Nino year. Parts of Rajasthan particularly and some parts of Gujarat, even one of the El Nino, Karnataka was good. So let us not worry that much. Let the monsoon settle in. I think that it is yet to come in. But the core monsoon month, they matter most. July and August, the rainiest, almost about 70% of the rainfall takes place during these 2 months. They are very, very crucial. I think we should look out for that. How adverse the season can be on account of the El Nino. Not before that. As I said, course correction if needed, that can be done halfway through. But at this moment, we should not lost all the hope that it's going to strike it so badly across the country. May not be so. Yeah.
Okay, let's hope for that. And also the distribution of rainfall, as we've seen year on year, matters. as much as the overall number. Abneesh, just one last call. You explained well that if there is a problem, it's going to be in second half, and you're seeing an overall concern and sell-off in the market, which includes these consumption stocks. Are there any basis results we've seen? Because all the FMCG results were pretty decent. Are there any that you would say are displaying an opportunity to buy? Anything that you find interesting and well poised in that space?
Yeah, very good question. So I'll break it into two parts. One is the high growth companies where the comfort in valuation is a bit low. So those will be essentially Nestle, Marico, Tata Consumer, Pidilite. Those 4-5 companies will continue to do quite well in Q1, Q2, irrespective of El Nino or no El Nino. But the comfort in valuation is a bit low. Of course, then you need to see from the 52-week high how much they have corrected, and there can be some opportunity here also. I'm not at all saying that there is not an opportunity here. I'm just saying that here comfort in valuation is a bit low. Second bucket will be where the comfort in valuation is also there, and Q1, Q2, as I said, matters much more than El Nino impact in H2. I think we are getting too much carried away with El Nino. So I want to reiterate that point. So if I see comfort in valuation and where I think Q1, Q2 numbers could be good, those will be essentially Dabur, Colgate, even Varun Beverages, for example. Clearly, they will benefit because of the extreme summer condition we have seen in Q1. So those will be such companies. As of now, Alcobev, good from longer term, but from a crude inflation and glass inflation perspective, if you see, liquor companies have less pricing power because they obviously have that issue of the government approval. So I will not advise currently that. That will be lower and longer time frame. So that is how we should play this sector in these two buckets.
Okay, interesting. Let's hope we're not bothering about El Nino beyond a point either, or super El Nino, as Mr. Sharma calls it. Thank you so much, Abneesh and GP Sharma, for speaking with us today. That was a great conversation. But the other big factor this week is going to be what the RBI is going to do. That Monetary Policy Committee meetings start from tomorrow. And the central bank is expected to keep the repo rate unchanged at 5.25%. What is our poll telling us? Piyush joining in with more.
That is correct. The NDTV Profit polled a total of 10 economists who unanimously voted for a pause in this cycle, and as well as maintaining the stance at neutral. What economists say is that the MPC would like to wait and watch for the second and third round effects of the ongoing West Asia conflict on both growth and inflation. Economists say that the RBI may revise upwards its forecast on inflation for FY27 and revise downwards the inflation, the forecast on growth for the full year. Economists also expect, if the ongoing West Asia conflict crisis poses major sort of impact on the economic growth and inflation both, then going down the line in December, towards the December cycle, towards the second half of the year, the RBI may consider hiking the repo by 25 to 50 basis points. We have seen some countries, including Indonesia Central Bank also, Australia Central Bank also raising the rate by 25 to 100 bips in the recent months. What markets will be keenly eyeing would be the RBI's tone, whether they'll turn hawkish, also whether they will introduce any measures to curb the depreciation in Indian rupee, whether they will launch FCNR deposits, NRI bonds, specific dollar window for OMCs to borrow using dollars. These are some of the key factors that markets are keenly watching, and the status quo is expected in the upcoming policy.
No surprise though, the question only is, will the commentary be hawkish? Thanks for that, of course. No surprise, the question only is, will the commentary be hawkish? HSBC, for example, says that inflation may be at a temporary low, with heat waves, energy cost and El Nino likely to push prices higher ahead. Pranjal Bhandari, who looks at all of these things in India and the ASEAN region as a macro strategist, joins in right now to talk about that. Pranjal, great having you as always. Thanks for taking the time out.
Thanks for having me.
No, the pleasure is ours. Is the potential of a higher inflationary pressure in India and the region, albeit worldwide, sufficient condition for central banks to sound hawkish even if they don't take actions in the next 1 or 2 months?
Yeah, thank you for this question. It's a good one. This is a supply shock we are in. Generally, in supply shocks, inflation goes up and growth falls. What we are seeing this time is that there are signs of inflation rising around the world, but actually, growth falling around the world has not really panned out as yet. So, only one leg of the supply shock is activated so far. What this means is that bond markets are actually selling off around the world, and bond markets are pricing in a lot of central bank rate hikes. Even for India, the bond market, the OIS market has pricing in some 5.5 rate hikes. But my sense is that once some of the growth data, weak growth data also starts to come in, showing that growth has also weakened, and I don't think it'll happen immediately, but maybe in the next couple of months, then the bond market will stop pricing in such aggressive rate hikes. But for now, we are in a world where the bond market is pricing in quite aggressive rate hikes around the world.
Are you of the same belief, Pranjal? And with regards to the Indian Central Bank, is there a chance for hawkishness or severe hawkishness, if you will? Or do you reckon that hopes of a ceasefire, though difficult to point this out ever right now, but hopes for a ceasefire might keep the central bank tone a bit more moderate?
Right. So look, RBI does it in a very technical way. It gives you a bunch of forecasts and then it talks around its forecasts. Last time when it gave you its growth and inflation forecasts, it assumed oil to average $85 a barrel. It also gave a scenario in which oil averages $95 a barrel. My sense is it's now going to make the $95 a barrel its base case. Earlier it was 85. I think 95 will become a base case. As soon as that becomes the base case, at once the inflation will rise, their projection. Because earlier they were projecting 4.6% inflation, but with $95 they are projecting a 5% inflation. So looking at a central bank which is increasing its inflation forecast, yes, it's also bringing down its growth forecast a little bit, but more important than that, increasing its inflation forecast will, I think, give a little bit of sign of the fact that it is turning on the margin a little hawkish. This is happening at a time when gradually liquidity is becoming tight in the economy. With all the FX intervention that has happened, we've seen supernormal rise in currency in circulation. There's been a lot of leakage of liquidity, and liquidity is also tightening at this point of time. So the combination of the two, I think, will give a flavor of slight hawkishness compared to what has been the case in the last couple of meetings. Although our base case is there will be no formal repo rate hike.
I suppose the commentary is what everyone will look at. Pranjal, the bigger concern from the Indian economic perspective seems to be, what are we doing with this double whammy of a depreciating rupee, higher crude prices, and then possibly consumption tapering off as well? Do you see this situation as sticky as it seems to be? Of course, current account deficit, etc., everything has gone out of whack.
Well, it is a difficult year. We've had one very big supply shock, the energy crisis, and it's likely to be followed by the El Nino crisis in a couple of months. And the two together, make up a lot. Whenever we talk about India's inflation, we think about food, fuel, and core. This impacts food and fuel directly. So it's really a big part of, all our lives. In this scenario, I think growth will fall, inflation will rise, fiscal deficit will widen, current account deficit will widen, all macro indicators will worsen. But it's not just happening to India, it's happening to many countries. I think at this point of time for India, markets are looking at two things. One, on the FX, is a FX package coming soon? And number two, on monetary policy, what will the RBI do on Friday? And I think a few months down the line, we will also be thinking a lot about fiscal policy, especially once a El Nino comes in, if it comes in and it becomes clearer. What kind of help is fiscal policy given to a country in which there is a lot of disruption because of all of these supply shocks? So all hands on deck, because this is a twin supply shock for us.
Okay, so what do I'm going to venture into a little bit of a broader area, Pranjal, because right now, and when things look bad, there is all sorts of advice given to the government. One end is that, bring in more FDI, make it more attractive, shore up what's happening here. The other one is now this is the time for capital investment. What do you think the playbook requires when you have a trifecta of issues like this from a policy perspective?
Yeah, it's not going to be easy for anybody. I think it's going to be the hardest for the central bank because, on the one hand, inflation is rising, but on the other hand, growth is falling. So, inflation rising means they should hike rates, growth falling means they should not hike rates. So, they'll be stuck somewhere in the middle. My sense is they'll give some gentle hikes. I'm penciling in about 2 rate hikes starting in the fourth quarter of 2026. It won't be an aggressive rate hiking cycle. Then there's the government. There's a lot a government can do. And I think the government has learned a lot of lessons from the pandemic playbook when the informal sector is more hurt. So, for example, credit guarantee scheme, for example, rural unemployment benefits, some subsidies here and there, hopefully more cash transfers. All of that, I think, will become a part of the government playbook. And then finally, there's FX. I'm sort of bringing it up because markets are talking a lot about it over the last 2 months. The fact that the currency has been one of the weakest in Asia, and it's not just been in during the energy crisis, but over the last year, the INR has been one of the weaker currencies in Asia. Should something be done about it? I think something should only be done about it if there is a sense that the currency is undervalued and artificially low. It's very hard to read what fair value is, what valuation is in short run, but I think the authorities have made up their mind that the currency is quite undervalued and they need to do something to push it up. We have been waiting for some package for the last 2 months. There have been so many news articles. The big concern in the markets have been, why hasn't the government come out with a package yet? My sense is it's also keeping an eye on Hormuz. If Hormuz opens on its own, oil prices could come down and the currency could see a sharp appreciation, at least one jump, and then they decide from there, what package is needed. So they've just been waiting for that. And they have not activated a package. But if currency comes under pressure once again, then I think they will start thinking about a package quite closely once again as well. Timing is very uncertain, but my sense is today or tomorrow, now or a couple of months down the line, we will see a package that will be announced.
Wow. Okay. And Pranjal, would the government or can and should the government have the thought of start thinking of capital inflows predominantly and stop worrying about CAD too much? Steps. So many people are writing about this, right? That maybe reduce the withholding tax on FI investments in bonds. It was there till 2023 or thereabouts, and I think then wasn't extended, so on and so forth, and multiple other things. Is that a right recipe, or eventually not thinking too much about the current account deficit could come back and hurt the rupee?
Well, there are many views out there.
What's yours?
My general sense is that in the medium term, we have to get some growth drivers started. Only when growth drivers start, then we start seeing FDI inflows. I have always noticed without fail that once FDI inflows start coming in, then we also see FPI flows into equity markets follow soon after. That's the best way to get inflows back again, revive India's growth story. But that is the harder part to do. That's the hard thing to do, right? In a world where there are two big growth themes going on, China plus one and AI, and India does not seem to be a prime beneficiary of either, what should India do? I think that is sort of the troubling matter. My personal view here is that all of the trade agreements India has been signing, if you can get them activated quickly, on the back of that, we could get some FDI coming in, and that could, help revive India's manufacturing. And once, some FDI comes in, it becomes a magnet for other. And my sense is there could be one growth story coming out of trade deals and India's manufacturing coming up gradually that can become an important growth driver for India. But that will take time. It doesn't happen overnight. So the big question is, in the meantime, should you let the currency go wherever it wants to go? And, it could go anywhere. It could go to 100 plus as well, or it could go to 93. Or should you do something to push up the currency while we are waiting and watching for FDI? And that is the big call authorities are taking. There are many things they are thinking. There are something on the current account deficit front. How do you narrow that? They've already raised petrol prices. They have had all of these import tariffs on gold. Generally, those tend to reduce and narrow the current account deficit. But I think they also now need to think about how do you get more capital in. I think some of the easier measures could be asking India's exporters to bring in dollars a little earlier than normal, like instead of 15 months, bring it back in 9 months. Getting some of the oil PSUs a permanent window to go and get dollars directly from PSU banks or RBI and not come into the market. These are some easy steps. The tougher steps are Do you give a subsidy to get in foreign inflows? Because that can be a little controversial. It could have some unintended consequences. There are two sort of schemes that are floating around in people's minds. One is subsidized ECB windows, in which corporates can bring in money at a subsidized rate, mostly the PSEs. And second is, again, getting in NRI deposits to come into the economy and give them some subsidies, something we had done back in 2013. So I think these two are sort of, in the horizon as well. I think eventually one of them will happen. My personal sense is that ECB can be cheaper, but it'll bring in lesser amount. FCNR is more expensive, but can get slightly higher amount in. And then there are all of these market deepening things of which I'm a huge fan. For example, lowering or right sizing how we tax FII investors, especially in India's bond market. If it's equity markets too, that's even, greater, but at least the bond market, because that can also pave in India's way into some of the global bond indices and get us money, not immediately, but over the next 2 to 3 horizon. And this kind of money is very sticky money. It doesn't come in and leave immediately. Then there are some other steps. One last one I wanted to mention was restricting outflows from our country. Should we not allow Indian individuals to take out money abroad? Should we halt Indian corporates to do too much investments overseas? These could have some negative consequences as well, as they could spook markets. But because they are very large numbers, I won't be surprised if the authorities, go ahead with this as well. Eventually, I think whenever they sign, take out a package, it will have 4 or 5 different measures, not one big bang.
Yeah. The last point perhaps would be seen as very negative and a bit panicky. So I don't know if that will happen. The government has shown no signs of actually panicking so far. But Pranjal, I wanted to ask you about another, I would say, debatable issue. Should the RBI be defending the rupee actively? I mean, officially the RBI does not. But that 95, 96, 97 is painful. There is one school of thought saying that let the rupee find its level even if it's 100. Don't bother about it. What do you think?
It's a very tricky one. Today, if you ask an academic, they'll tell you that, let the currency depreciate, because that can correct a lot of your problems. Once the currency has depreciated a lot, your exports become cheap, your imports become expensive. So exporters start exporting a lot, importers stop importing. On its own, trade deficit narrows and the currency strengthens. This is called the J curve, and a lot of economists say the J curve should be followed. But if you talk to a practitioner, they'll tell you that once a cycle of depreciation picks up and sticks for long, then it sort of loses its limit, and then the cycle can be unending. So you should come in with some big package to at least break that cycle. I'm sort of torn between the two worlds. My general view is that we should allow the currency to depreciate sufficiently, given that our balance of payments has been in the negative for the last 2-3 years. This is not a short-term problem. This is a long-term problem. Maybe it's a structural issue right now. We have to respect that. So some currency depreciation, I think, is a good idea. But yes, if at some point you think it's getting excessive, then you can take 1 or 2 steps. But eventually, there's no guarantee that these steps will work. So we're in a tricky world. There are no right answers.
There are no right answers. Yes, it is a tricky situation. And in some sense, yeah, Pranjal, we kind of stuck between, if there is a term worse than a triple whammy, then kind of we're suffering from that as well right now. But yeah, tough job. Glad it's not mine at least. But I'm hoping that some of your advice is falling in the right ears as well. Thank you so much for speaking to us today.
Thanks for having me.
Yeah, it's not an easy task, Tamanna, right now, and some of it is not necessarily possible to correct via policy alone. A cycle needs to play out. It's very difficult.
Yeah, I think we should also look at the fact that we have been shielded from some of the harshest kind of impact that we could have been seen as a nation.
As a nation.
Yeah. Markets are one part of it, but still relatively we've been shielded in terms of prices at the pump, in terms of daily lives being disrupted. A lot of that disruption is playing out in other countries that import this quantum of fuel. Yeah. It's because of the size and might of India that we've been relatively shielded. We're sitting in this AC studio and doing this show aram se. And that's not happening all over the
Yeah,
world. And I
yeah.
think people don't realize that sometimes. We'll take a very quick break. On the other side, we have Anmol Jain, Joint Managing Director of Lumax Industries, speaking about their earnings performance and the outlook for the new financial year. All of that and more when we come back. We also have a review of what Q4 looked like.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Welcome back. All right, we're talking to Lumax in focus after posting a stellar set of quarterly numbers with a healthy order book and strong EBITDA margin growth. But before we speak to Anmol Jain, Joint Managing Director, Lumax Industries, to understand the key growth levers, Puneet is joining in to set that conversation up. Puneet.
Well, thank you for that. Just 4 key points, as you rightly mentioned. It's been a very strong quarter for the company. Now, it largely operates in the lighting space, so has been a big beneficiary of the new SUV mix as well over the last few years, because the lighting industry actually has changed, going into LEDs as well as more stylish in that sense. So Lumax, both industries as well as auto, has been a big beneficiary of that. The second key one, a 30% revenue growth for quarter 4. Overall, also, it's been a very strong year for the company as well. And in terms of margin profile, that has improved to 10.3% now. So sustenance of that will be the second key aspect. Third one has been in terms of management change. Anmol Jain, of course, we speak to him for Lumax Auto, now is the joint managing director for Lumax Industries as well. And finally, the evasive question that if the merger between the two companies is on the cards, those are some of the key aspects apart from, of course, the growth outlooks amongst key factors.
And the growth outlook is a key factor simply because of the stellar performance in this quarter. Anmol Jain with us. Mr. Jain, thank you so much for speaking to us here at NDTV Profit. Always a pleasure to have you. What has worked for the quarter gone by? And it has, in a sense, also mirrored what's happened with the entire OEM space, right? Q4 has been strong all round. From what they're telling us, Q1 is as strong, if not stronger.
Thank you, Tamanna, for having me. First and foremost, Tamanna, Q4 was a stellar quarter for the industry at large. Our Q4 was the highest ever revenue in terms of Lumax Industries. It is driven by largely 2 or 3 things. One is, of course, the organic growth within the industry. Second is a higher wallet share concentration, which, based on our order book, we've been able to deliver. And third is, with the technological changes, the value content per vehicle continues to increase. So because of all of these factors, we could report a healthy 30% growth year on year in quarter 4. In terms of quarter 1, it's too early to tell. I think given the volatility which is there in the, whole supply chain as well as the war crisis, I still feel that quarter 1, we do not see any pullback on demand at the retail or the production levels. However, it's like a wait and watch. We're very cautiously optimistic that the growth momentum continues through the remaining part of the year as an industry.
So you're seeing no troubling signs so far, is the point that you're making in quarter 1. In your conversations going forward, is there any murmurs that you're seeing from key clients on concerns about consumption trends, etc., Anmol? Or is that skipping by completely right now?
Well, as of now, from a demand offtake, from a production, we are not hearing any murmurs of any downfall. However, the input prices have skyrocketed. I think it's unprecedented in terms of whether it's the manpower cost because of certain minimum wage hikes in certain states, or the input commodities because of the war, supply chain disruptions continue. So because of that, there is a lot of pressure on input costs. Of course, we are hoping that we will get compensated from the OEMs. It's usually a time lag of 3 to 6 months, but it's going to be a wait and watch, with the increase in fuel prices, which the government has recently announced. And I personally feel that there will be perhaps a lot more fuel price hikes going forward. So given all of that, one will have to wait and watch in terms of the real demand offtake, whether it does taper down or it still kind of holds steady. You have to understand that last year, quarter 3, post the GST rationalization, there was actually a massive price drop in the hands of the consumers. So even after these price escalations on account of input cost, oil prices, I still feel that there will be a certain delta in terms of end price saving in the hands of the consumer. So we'll wait and watch. But as of now, we're not hearing anything in terms of pullback on demand.
Yeah, Anmol, good morning. Neeraj here. We had a I wouldn't say a peer of yours exactly, but from your sector, if you will, 3 or 4 days back come in and say that if the momentum continues, the current year, which is FY27, could turn out to be the best year in history. So I'm now kind of flipping the tone and asking you that if you were to look at a blue sky scenario of things staying as they are and not worsening, could you actually have amongst the best years that you've had for your company as well, historically?
Well, definitely, Neeraj. I think if the momentum continues as an industry, year on year, we've actually outperformed the previous year in terms of industry numbers. And even if the growth were to slow down, we will end up delivering a lot more units for the year compared to where the industry stood in FY26. So definitely, if the growth momentum continues, we will look at one of the highest record years again. And I think the investment cycle is something which continues. I don't think there is a stall on the investment cycle, whether it's at the OEM end or it's at a tier one end. People are investing in expanding capacities, and we're no different. We have a solid order book, and again, auto industry usually works. And someone like Lumax for the lighting systems is an early onboard supplier. Usually, the lead time is about 2 years from order to SOP. So we will continue with the investment cycle, hoping that the growth momentum also continues.
Just one more point is on how you mentioned in the earlier part of your conversation about input costs becoming a point to watch very carefully. But this comes on the back of a year wherein you've had your highest EBITDA margin, if I'm not wrong, in last many years, right? Which I mean, your EBITDA growth was way stronger as a year than your revenue growth, which is music for the ears, I'm guessing, as an entrepreneur. My question is, can you maintain this, or is it difficult to call that out in a year which has got these, these issues surrounding us right now?
I think the EBITDA margin expansion was largely on account of a few things. I think number one being the operating leverage. I think with a 23% growth year on year, there was a lot of operating leverage which we saw. Also, there was a lot of prudent cost management. So all of that put together, and in certain cases, some of the new order book did yield a better material margin for us. So all of that has led to a margin expansion. I do believe that we should be able to sustain the current margins of double-digit EBITDA. And again, if the growth momentum continues, we'll probably also have an upward increase on the margins by perhaps 30 bits or so for the full year FY27. The margin pressures continue because of the input costs. But again, as I mentioned earlier, we do have a kind of an understanding with the OEMs that, with a time lag of 1 quarter out, we should be able to get most of these price escalations compensated.
Mr. Jain, you mentioned earlier in this conversation that you hope OEMs will accommodate the price rises that you have suffered, input costs as well as labor, etc. Is this right now a grey area? Is this conversation on? Is there clarity if you will have to absorb those price hikes, or will they be passed on?
So, Tamanna, I think the OEMs are pretty fair that the price escalations will get eventually passed on to the tier one. I don't think the question is whether they, give you the price escalations or not, because again, a few percent here and there, I think we all, through certain improvements, are able to absorb. But as I mentioned earlier, the price escalations are actually unprecedented, where we've seen certain commodity prices go up by 30-40%, manpower costs go up by almost 20 to 30% as well. So it's not the question of whether they will compensate, but more importantly, how soon can we get this compensation? Because it does put a lot of pressure on the cash flows. And traditionally, we've seen a 1 quarter, 2 quarter lag when the price corrections are done. But we are hoping for price corrections to happen sooner, probably on a monthly basis for certain commodities, or at least a bi-monthly or quarterly basis for the rest of them.
Okay, thank you so much for speaking with us. Anmol Jain, Joint Managing Director, Lumax Industry, is joining in for the outlook for FY27, which is looking bright, but everything right now is with conditions attached, I think, for all companies and industries. That was not quite the case in Q4. Q4 had a mix of a fundamentally strong quarter with a bit of a hint of the geopolitical crisis, because that started right in the end of Q4 in the last month or so. In fact, the Nifty Q4 earnings saw marginally positive performances, strengths in margin and pricing driving upsides. Sharad is joining in to encapsulate what the Q4 review looked like.
Well, yes, after almost 2 months of tracking the Nifty 50 index, of course, that March impact which Tamanna spoke about, that did come in, but not so much. You can expect that in Q1. But let's give you the entire report card of how the overall earnings for the Nifty index has actually panned out. And largely, let's see what's happening here. More than, you could say, 15 stocks are there whose numbers actually beat the street estimates. Inline set of numbers also were on the positive side. So if you add it up, for both, you could say the positive and the inline stocks, they have actually done well. But stock specific also, let's see what's have been there. They have missed estimates. Max Healthcare, the growth has been impacted by adverse case mix and oncology decline. Also, apart from this missed estimates, we also have the Coal India, on the other hand, they have actually beat the estimates. Interestingly, they have beaten because of better FSA, average selling price and the e-auction volumes. Also up next, if you look at the other stock which should be on your focus, that is Adani Ports. FY31 target is something which the street is bullish on, and they have given a higher ROC range also going ahead. Up next, if you look at it, we have Nestle, strong beat led by higher ad spends as well. And we have seen a lot of FMCG stocks actually beating the street estimates. Tech Mahindra, the next stock in focus, 10th consecutive quarter of margin expansion. You can imagine with the volatility in the IT, still the company is outperforming. Also, the next stock on the list is Eternal. They beat analyst estimates on the profitability and the quick commerce segment. That is where the profitability improved going ahead. But let's talk about the misses, what's there which should be in focus. ONGC, I would like to point out, very weak set of numbers, and they have missed EBITDA estimates for the 7th consecutive quarter. Big concern. Another one from that space is Reliance. Earnings miss largely owing to weak oil and gas performance. Up next, we are having the next stock is Dr. Reddy's, a sharp fall in US business, and that is where we had seen a big correction also in this stock. NTPC, interesting name, it's a regulated business, but nevertheless there was a big miss due to lower power generation, and their operational numbers also got impacted. And lastly, I'd like to point out that is of course Max Healthcare, where there was an impact in this adverse mix. So this is the entire picture for the Nifty scorecard, and these are the important outliers as well.
Okay, thanks for that, Sharad. Now let's get in a very important voice. Vikram Sahu, India CEO and country executive, BOFA, Bank of America, joins in right now from the sidelines of the 2026 India conference. Vikram, great having you. Thank you so much for taking the time out and speaking to us here. This is Neeraj here. Good morning. What is the mood like at the conference? What is it that you guys are messaging to the participants who would have come in from across the world? And what is that feedback in the initial days of this conference about India, about growth, and about the fact that we don't have an AI play?
I'm sorry, I couldn't quite hear the question. Apologies. Would you mind repeating that, please?
Sure. Vikram, if you can hear me, this is Neeraj here. I was trying to understand what's the feedback that you're getting from participants, both corporate and the money managers, in the first few hours or days of the conference.
Okay, I'm gonna ad lib over here because I think I got the gist of the question, but the earpiece is a little crackly. But I guess I'll have to confess to being mildly surprised as we entered into this flagship conference of ours, because when you look at what's been happening with India over the last year, what you've seen is valuations correct off highs. You've seen foreign institutional investors selling India over the last year. And I was not really sure about what the participation was going to be in the conference. And what we found, to our very pleasant surprise, is that there's been a 30% increase in the number of foreign institutional investors who've been attending the conferences here. We have over 400 individuals present over here. And I guess what that would say to us is that while FIIs have been selling India because valuations were stretched and because it's been turbulent times with issues like West Asia or the overhang of AI, it still tells us that they're prepared to kick the tires, talk to companies, talk to policymakers, get a firm understanding of what's happening on the ground here, and try to understand whether this is a good entry point for their portfolios and for their investments in India. So I've been very encouraged to see the participation that we've had in the conference.
Well, that's music to the ears. Vikram, are people shrugging off the non-AI trade in India and looking at the future, or are there some other reasons for this constructiveness?
I'm really struggling because I can't really hear the question.
Okay. What we're going to try and do is just try and fix this EP a little bit. But Tamanna, I'm really interested in knowing this. For the country head of BOFA to say that he's positively surprised with the participation and that people are talking of looking at India anew, I think it's a very important point.
You know, at the lowest point is where the most opportunity usually lies. And think about it, when we're speaking to managements, we're speaking and we're looking at data in terms of business updates will now start coming. We're looking at Q4 results, we're looking at ground reports. It's definitely not looking that dismal. Vikram, can you hear me? Tamanna here. Let's first do an audio check before we go ahead. Can you hear me at all?
Tamanna, we've got a workaround, and so I can hear you now. So please go ahead.
Okay, I suspect you're having a bit of an echo. We're going to try our best. My biggest question to you, Vikram, is that you've talked about how there was a positive surprise in terms of the participation in your conference, the voices that you're hearing there. What then, in your view, is the biggest concern when it comes to investing in Indian markets from a global perspective?
Okay, so the fact that investors are prepared to come here and engage in a continued dialogue doesn't mean that all the reservations have been put to bed. And so there are basically three areas that we're seeing conversations about. The first one is a subject that's not of India's making. And that's the turmoil in West Asia and what this means for India given our dependence on energy imports from GCCs and from West Asia. Now over there, the $64 million question is about duration of conflict. Because if you were to see a resolution of the situation in West Asia tomorrow, that overhang would quickly be removed. If on the other hand, this conflict were to be for an extended period of time from this point on, then obviously it would have implications for the Indian economy, for Indian companies. But I guess the point to make over here is that India is not the only part of the world that's going to be affected negatively by this if this were to continue. So it's not an India-only factor. So that's the first topic of conversation. The second topic of conversation is, well, what can the Indian government do to be responsive in this situation? And over here, I have to say that the Indian government and the Indian administration is getting reasonably high marks by investors, because if you look back over the last 6 or so months in the period since Diwali, we've seen a slew of both domestic reforms, which have been in discrete areas, and if you accumulate them, they actually accumulate to substantive change when it comes to reforms. And then second, we've also seen trade deals being struck with a number of geographies, including a framework deal that was announced with the US in February, where the first tranche has yet to be finalized. And what investors want to see over here is more of the same. They want to see a continuation of this, and also in addition to that, what they would love to see is the government continuing to focus on removing regulatory cholesterol from the system and trying to improve on ease of doing business. And then the third area, and this is a kind of a known unknown, if you will, is what does AI mean for India going forward? We all know that the Indian economy has been a big beneficiary of IT services over the last quarter of a century. It's a driver of economic growth in the economy. And then there's question marks about whether it'll continue to be a driver of growth in the same fashion going forward as AI makes its presence felt.
I'm wondering, Vikram, in that case, what are the silver linings or the bright sparks that you see in the Indian firmament? Without the AI trade, with a bit of concern geopolitically and on the current account deficit. Where are you seeing that opportunity, and what is making you positive from what you're hearing at the conference?
Okay. So I think the way that I think about this is to say that everything has an appropriate price. So 18 months ago, when India was trading 2 standard deviations above its historical averages, it was fully valued and it was not pricing in risks. When you look at India's valuation levels now, you would argue that there's been a correction. In rupee terms, it's an even more pronounced correction. So the question is to say, is India more reasonably valued now than it was 18 months ago? And the answer is unequivocally yes. Do we have a resolution or answers, definitive answers to the questions that investors have in their minds? And the answer is, well, no, not yet. What they've been encouraged by is by responsiveness of policymakers over here. They've been encouraged by reforms, but they want to see more of the same going forward. And if that were to continue, if we were to see further improvements on things like ease of doing business, then I think that the FDI investments will flow from that. Back to you, Tamanna.
Vikram, Neeraj here, I'm going to try and take one last question here. Your team has been, I mean, when Amish was in our studios, he was speaking about how the possibility of reforms is the best right now because there's a clean political calendar until UP 2027, right? You reckon a spate of reforms will be necessary and a sufficient condition to start getting FDI/FI flows? Or is there something more critical that also needs to come in?
So Amish is right. With the West Bengal elections behind us and UP not going to take place till next year, then we do actually have a clear political calendar. But I do want to sort of again highlight the point I was making earlier, which is when I look at what's been done even in the recent past, while there have been reforms in discrete areas ranging from nuclear to GST to labor, when you accumulate those reforms, they do actually add up to a fair amount that's been done by the government already. In addition to that, what is also happening silently in the background without necessarily the same thud on impact of a big reform that's been announced is the removal of regulations from the books that reduce some of this regulatory cholesterol that I was talking about. So if you were to look at the RBI, for instance, they have made massive strides in the last many months at taking away overlaps on regulations and also then filling gaps in regulations where it's necessary in order for Indian markets and for India to operate efficiently. So I think all of that business still continues constantly in the background. But to your question about whether we would like to see continued reforms going forward, and the answer is unequivocally yes. And again, the good news is that when we talk to policymakers in Delhi, our understanding is that they have identified many priority areas of the economy where they are taking a fresh look at what can be done. And when we talk to industry associations and when we talk to corporates, they're telling us that there's a lot of receptiveness from the government to work with industry to hear what the issues are and try to respond to them. So I'm seeing responsiveness.
Okay. Thank you so much, Vikram, for speaking with us. Vikram Sahu, he's CEO and Country Executive Bank of America, speaking about the outlook on India. Well, let's just pull up the markets before we wrap up. India market opened this morning. It's been a tough morning. And we should pull up the Nifty intraday, where there has been some improvement, actually quite a bit of improvement. You're almost at flat line after starting nearly 200 points lower. And this is the point that you were making, Neeraj, that on the technicals, looking at the PCR, etc., is there scope for a bounce back after a fifth day of poor opening or a fifth session of poor opening? It seems there is.
Yeah, let's see. I mean, we hope for a day which is slightly different than the previous 3-4, wherein highs and then lows.
Yes, there's lows and then hopefully highs. Well, that's all the time we have on India Market Open. From Neeraj, me and the team that put the show together, thank you so much for watching. Stay tuned. Ask Profit up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative. From stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade.
Welcome back. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachharani, and with me, as always, is Puneet Zaveri. And this is a show, of course, that gets all your stock-related queries answered. You can send us all your stock-related queries on the numbers that are flashing on the screen up there. You can either WhatsApp us or also give us a call. But before we start doing that, a quick check as to how the markets are doing. Well, as far as the Nifty 50 goes, let's try to pull that up. It's a narrow range of trade. Down by about 0.2%. So nothing, much happening there. Nothing positively happening there. In fact, the VIX is up almost 3%, indicating volatility. Let's try to pull up the heat map as well to see as to what the heat map is looking like, and as to what are the counters that are kind of putting that pressure. NTPC, yet another day of pressure, 2.8% of a downtick. Bajaj Finance also seeing a downtick of around 2%. Power Grid, Cipla, Dr. Reddy's, Bajaj Finserv are some of the other names that are also under pressure. A lot of pharma names now seeing profit taking after the kind of rally that we've seen in the past 5 to 6 odd weeks. On the flip side, you've counters like Infosys, Tata Consultancy, HCL Tech, Tech Mahindra. All of these IT names still, yet again, stealing the show today for second day in a row, with Infosys and TCS gaining about 5%, HCL Tech and Tech Mahindra in that range of 2 to 4% each. But there's Hindalco, which is also doing fairly well, up 1.3%. And Eternal also up by about 0.64%. So that's with regards to where the Nifty 50 goes. Let's try to pull up the sectoral heat map as well. And IT has to be the top sectoral gainer. And yes, it is. 4.1% of a gain is what the Nifty IT is seeing. The metal pack is also seeing some gains on the back of Hindalco gaining. Realty again in green today. We have to see as to how that fares throughout the day. But pharma, the top loser. So a lot of pharma names seeing profit booking. You have healthcare also under pressure. You have something like Nifty Bank, Nifty Private Bank also not doing fairly well, and defense also seeing some profit booking coming in. Let's try to put up the advanced decline ratio, because that will give us a picture as to how the broader end of spectrum is doing. Largely, you have around 1300 odd advances versus that of 1200 odd decline. Almost even Stevens is what we're seeing on the advanced decline ratios, but slightly in the favors of the bulls is what we're seeing, and that that chart has crisscrossed at least 4 times in the last 2 hours. So that's with regards to how actions have been changing between the bulls and the bears. Let's try to quickly lastly pull up the BSE 500 and see as to where the action really is in the broad end of spectrum. There's actually Glasscoat topping that chart, up 8.2%, so followed by Sonata Software, Birlasoft, Mastech. So IT names again, pack as a whole is doing fairly well. But on the flip side, you have something like an RHI, Magnesita, Jamna Auto, VIP Industries, NHPC, as well as Rajesh Exports seeing downtick anywhere in that range of 4 to 7%. So of course, that's with regards to where the markets go. But let's start taking all your stock related questions, and to answer them, today we are joined by Astha Jain, Senior Research Analyst at Hem Securities, and Swati Hodkar, AVP Technical Research at Nirmal Bang, joining us now. Welcome to both of you ladies, and a very good morning to the both of you. The first question that we have is from Mohit, who's writing us from Ludhiana. He's got around 500 shares of Bandhan Bank that he's bought at the levels of 187. He says his time horizon is for the next 2 years and wants to know as to what should be the next course of action for him. Astha, I'll come to you on this one. A very good morning to you. Your view on Bandhan Bank?
Hi, good morning to everyone out there. So talking about Bandhan Bank, first of all, I think investor is earning good profits because the cost price is 187. But here, since the view is long term, so I would recommend that one should hold this counter for the long term perspective. Now, if I talk about the fundamentals also, fundamentals seems to be on the decent side. The company or the bank is able to show some improvement in their legacy NP or GNP ratios, and I think that is mainly going to help the bank going forward in maintaining good ratios. And my idea here is to stay invested in this counter, because if these ratios will show some sort of more improvement, then definitely the bank will going to benefit. So some sort of a green shoot has started emerging also in certain segments of the bank. And what I believe that improvement in the ROA as well as ROE is definitely helping the bank and posting some good numbers going ahead. Stay invested in this counter if there is no hurry to book profit, and price target can be set at the present level at around 230 to 235 odd levels.
Right, okay, so that's the view coming on Bandhan Bank. But, before we start taking your next query, we all know that, since yesterday we've been covering the Bank of America conference, and to, take forward this and to have a very interesting conversation in the consumption space, we're joined by Aditya Mathur, who's the Senior Analyst of Consumer Goods, joining us now. Aditya, very good morning to you, and thank you so much for taking out the time. Mahima, this side, the first question that I had in my mind was, today also we were, kind of trying to understand as to why in the last 2 days we've seen a lot of FMCG names under pressure. Could be on account of FI's outflow, could be on account of the entire IMD cutting rainfall forecast, etc. But Q4 is where we've seen that there has been a strong uptrend in all consumption names, be it paints, be it your FMCG staples, be it jewelry, etc. Right? So, do you think that this is finally the beginning of the broad-based consumption recovery, or there's still more to go? How are you seeing this cycle?
Sure. And firstly, thank you so much for having me. It's great to be talking to you. You're absolutely right. I think the fourth quarter, and I would actually argue even the third quarter, both seem to show a decent recovery on the broader consumer side. And whether it's staples or a lot of the discretionary categories, we've seen that, I would say, in aggregate terms across the board. But I think coming back to that point on why the market is reacting the way it is that perhaps a lot of this, according to investors, is a bit backward looking, right? The world has changed quite a bit in the last couple of months post the West Asia crisis. And I think, of course, people are looking at it purely, number one, from a commodity cost point of view or gas availability point of view, and then maybe from a Middle East exposure point of view. But I think the bigger question is what actually happens to demand going forward from here. I think we are seeing inflation, which is likely to pick up. We have seen fuel prices go up. We are seeing company after company taking up pricing of certain products just to kind of offset the cost push. So in many ways, the fourth quarter, while it's being great, third quarter also being quite good. The big question mark is, does that sustain going into fiscal year 27? I think that's the big question mark at this point in time. So I think it's a little hard to extrapolate what we saw last quarter going forward.
Correct. And Aditya, what we saw in the last quarter was, largely driven by, I think, two things. In the staple space, we saw good volume recovery coming in. But if we take a look at the paint space, it was largely on account of both volumes and pricing as well. So FY27, if you think that the growth is here to stay and sustained, what is going to be the major factor driving it? Is it going to be pricing? Is it going to be volumes? Or is it going to be still premiumization taking it ahead?
Again, a very relevant question. I think so far it has definitely been a little more of a balanced growth, perhaps volume being a bigger driver of the recovery that we've seen perhaps in the second half of fiscal year 26. I would actually like to believe that pricing takes a bigger role going forward, just given the extent of price hikes that we've seen companies take. So whether it is paints, whether it is a lot of the FMCG names, be it on the home and personal care side particularly, but I would say even on the food and beverage side, I think pricing will perhaps be a bigger driver. We would actually argue that from a revenue growth perspective, we do see an acceleration, but a large part of that will essentially be pricing led, and perhaps volumes will be stable at best or may come down a little bit, just given the level of pricing and inflation that we see in the economy.
Aditya, how are you looking at valuations then? Because a lot of these names have seen significant amount of value correction, right? And a lot of them are at the 3-year low or a 5-year low. But at the same time, they're still not cheap, right? So how are you looking at valuations in the entire consumption space? Be it staples, be it paints, be it jewelry, etc.?
No, I think valuations have definitely been a little bit all over the place, and you're absolutely right. We've actually seen them come off in a large number of large cap mainstream names. I think the only thing I will say there is a lot of it is a function of the relative growth that we are seeing also. I think arguably we have seen earnings downgrades, I would say, in the last couple of years, which is why I think the valuations have followed suit. I think we can perhaps say this for the broader market as well, but I think clearly I can see that in my space. The only thing I will say here is that perhaps as we spoke about the third quarter and the fourth quarter, I would say the extent of earnings cuts that we saw had actually moderated a little bit. So I think if you ask me, it's just a function of how expectations and the overall growth trajectory moves. As I said, I think there are still quite a few moving parts. So from this so-called recovery that we've been seeing, I would say, we are in a bit of a evaluation mode. It's still early days. There are lots of moving parts. So I don't want to extrapolate what we saw in the last quarter going forward. But I think essentially it's going to be how growth pans out, and that's how the relative valuations will sort of pan out in my view.
Fair, Aditya. Just one last question from my end is that from a 2 to 3 year perspective, if you were to play the entire consumption theme, would it be via jewelry? Would it be via paints? Would it be via staples or consumer durables? What is the best way to play the theme?
I think lots of interesting subsectors that I think will become relevant. Jewelry definitely, I think, is a space where which has actually been really resilient now for the last many years, I would say. Yes, perhaps there has been some news flow in the last couple of weeks. There has been some supply tightening. There has been a high base. But if I were to look at it from a slightly more longer term perspective, I think it remains a very resilient category. And I think a lot of the leading companies, whatever we are seeing in terms of supply tightening, etc., actually would aid the overall formalization process. So that's definitely an interesting space. I think there are a lot of other spaces, especially targeting the premium consumer, right, or the so-called upper income consumers, where despite a lot of the macro volatility that we are seeing, I think clearly the number of people who are actually entering the top, the upper middle and the upper income households is rising, right? So I think whether it is, let's say, premium alcohol, whether it is some of the more interesting retailing names, and I would even say even within staples, right, people who are kind of exposed to this so-called premium consumer, if you ask me, that seems to be a pretty safe place to be in, especially if you give me a slightly more longer term time horizon.
Right, Aditya, thank you so much, for helping us answer all those questions. And I'm sure that anybody who's tracking consumption now knows what to do. So thank you so much for taking out the time. All right, so of course, that was an entire conversation about the consumption space. But, the other important story that we're tracking is about the Vedanta Group. Now, it's under the Enforcement Directorate's scanner. Shrimi joins us with more details on these searches. Shrimi, over to you.
Yeah, so ED has conducted searches at 2 premises linked to Vedanta Group in Delhi and Mumbai as part of its ongoing investigation under Foreign Exchange Management Act, that is FEMA. A top official says that action is related to alleged brand fee payment made by group entities to their parent company. Official also indicated that searches were aimed at gathering documents and evidences linked to the transaction being examined under the FEMA provision. And in fact, the 2 teams of ED covering 1 location each in Delhi and Bombay during the operation. And the searches were launched on Monday and concluded now, is what official confirmed to NDTV Profit. Now, the investigation is essentially focusing on examining the nature of payment made towards brand usage and whether the transaction complied with the foreign exchange regulation. In fact, authorities are also scrutinizing the relevant financial records and agreements as part of the probe. Now, further details are awaited as investigators review the material collected during the searches, and in fact, they will decide the further course of action. But do remember the fact that FEMA provision is mostly civil in nature and not unlike the other provision which is criminal in nature. So they will decide further course of action basis what they found during the search operation. But group has not made any comments so far on the latest enforcement action.
Okay, Shrimi, thank you so much for getting us those details. In fact, viewers will keep you updated as and when we get updates on this story going forward as well. So, of course, that's with regards to where the Vedanta Group goes. Moving on to, our stock-related questions. I think Manav has been waiting by, who's calling us from Gurugram. Manav, a very good morning to you. Go ahead, ask your question.
Hi, good morning to everyone. So today I have a query on BSE. So I've been holding on to 20 shares of BSE at an average price of 2,300.
Okay.
So the stock just hit around 4,200 or 4,300 mark. So it's now hovering around 4,000 mark. It's been down a little bit. So just wanted to know the strategy now for me. Should I book partial profits or should I hold on to it? Or should I, when should I re-enter at what price?
Fair, Manav. Got your question. I'll take this up with Swati then. Swati, he's bought at attractive levels, right? 2,300 is where he bought 20 odd shares. So he's sitting on good profits. Do you think it's time to book partial profits, continue to hold, maybe add more? What should be the strategy?
Good morning, all of you. The view is definitely positive, Mahima, but whatever the rally we have seen in the last 6 weeks as such from almost 3,000 to 4,400, so the profit booking cannot be denied and the counter is sitting at the overbought zone. So I believe at the current market price, you should definitely book your partial profits. And if you want to re-enter into this particular counter, any dips towards to 3,500 levels will be the attractive levels to take a long position because it's support levels provided by the 50 days moving average. So the partial profits are recommended to book at the same day.
Okay, so that's the view coming on BSE, but also let's take a look at the F&O space as well and understand as to what the cues are indicating. Sharad is joining by to give us exactly that perspective. Sharad, I think yet another day where IT is stealing the show.
Well, yes, we are seeing that and the momentum is showing a good strength, and just remove the IT pack. That the stress is still continuing. Just look at it. Tech Mahindra, HCL Tech, Infosys, TCS. These are some big jumps happening, intraday jumps. We'll be getting you those numbers also of what is the biggest jump coming in. But apart from that, the banking segment is not holding up. And of course, you could see NTPC, one of the top losers, are down almost 2.5%. Now, of course, the earnings is down. There's some earnings downgrades also happening. That's what the brokerage houses are doing. But let's look at the others. Important stocks, and of course it's just like a repeat of yesterday. Infosys, TCS, they are the strongest long build up in the F&O segment, and also the short covering. I doubt there will be any other segment apart from IT, and yes, it's just IT and IT as well. But long unwinding, let's see what's happening here. Dr. Reddy's and Amber Enterprises make it to the list. Both of them stocks almost 1.5 to 2% down in trade. And let's look at the short build up. It's Force Motors on the back of a weak May sales update. That stock is down almost 5%. On the other hand, NHPC, the OFS opens up, and we have seen last week Coal India was under pressure on the OFS opening, and now it's NHPC's turn. That stock is also down 5%. So largely reactions are coming mostly on the IT side, which is positive, but after that it's largely neutral to negative for others.
All right, Sharad, thank you so much for getting us those details with regards to where the F&O cues go. But the next query that we have is from Shankar, who's writing us from Bengaluru, asking about Samvardhana Motherson. He's planning to buy around 500 shares and wants to know whether the current market price is the right price to enter for the next 1 month. Swati, I'll stick with you for this one. Your view on the charts for this one?
But the long-term view is definitely positive, but whatever the rally we have seen in the last few trading sessions, I believe that the selling pressure is likely to be intensified and we might see the correction, which will take a stock towards to 130 to 130 levels. So wait for some more time, let the stock correct at the lower levels, and any dips towards to 130, 132 can be utilized to take a fresh long positions.
Okay, so that's the view coming on Samvardhana Motherson, and it's time for our first rapid fire round now. Swati and Asa, you both know the drill. The first one is on Power Grid. Our viewer Raj from Jaipur has bought it at the levels of 298. 150 shares is what he's holding. From a long-term perspective, average or exit, Asa?
I think averaging can be done, but at the lower level of around 270. So Power Grid is hold for a long term. Averaging at 270 is recommended with a price target of 310.
Okay, the next one is on Mazagon Dock. Harsha from Vijayawada has bought 55 shares at the levels of 2,800. From a short-term perspective, hold or sell, Swati?
I would suggest to hold on by maintaining a stop loss of 2380.
Okay, the next one is on Viatech Vabag. Our viewer has bought it at the levels of 1341. 100 shares is what Rajiv from Kerala has been holding. From medium term, continue to hold, Swati?
Yes, definitely you can hold on by maintaining the stop loss of 1500. We are looking for a target of 1640 to 1670 levels.
All right, the next one that we have is from Pranav. He says that he's been holding, he's been looking to buy Coforge. Is this the right price to enter from a long-term perspective, Asta?
Food is looking good from the long-term perspective, but not at the current prices. Maybe at the lower prices of around 1520 to 1515. One can enter into the counter with a price target of around 1580 to 1600.
Okay, short-term view on MTAR Tech. Sarath from Dubai is asking this. His buying price is 8050 on this one. Swati, your view on the charts?
My view is a little bit cautious because the counter has shown a negative divergence. I will suggest to exit your long positions. Any dips towards to 61, 6200, you can take a long back.
All right, the next one is on Embassy Developers. Our viewer AM Reddy from Mysuru is asking specifically to you, Astha, whether they can collect this in bulk right now. Any view?
Embassy Developer, I think one should hold this counter and not collect in the bulk. This is what I believe at this point of time.
All right, okay. The next one that we have is coming in on Black Box. Our viewer wants a 12-month outlook on this one. He's bought it at the level of 761. Any view on the charts, Swati?
View is positive. For a longer term horizon, you can definitely hold on this particular counter, looking for target of 1100 rupees to 1200.
All right, that brings us to the end of this first rapid fire round, of course. But viewers, time to slip into a very, very short break. But we'll be taking a lot more queries, I promise, on the other side of the break. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, No hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative. From stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers tuning in, you can give us a call or send us a WhatsApp related to your stock related queries and numbers that are flashing on your screen up there. The next question that we have is on Force Motors. Our viewer Prashant from Chennai wants to know if this is a good time to kind of enter this counter or not. Asta, I'll come to you on this one. We've seen good rally coming in this counter on the back of strong numbers, but the business update coming in is not very strong, and that's why we're seeing that pressure on the counter. But overall, your view on this counter?
Yes, results were really supportive, and right now this counter is just driven by the short-term sentimental impact of not posting very good set of monthly numbers. So my idea here is he will get more chances to enter into the downside, and hence recommending buy on dips and not at the present level, maybe at the level of around 17,500 to 17,300 zone. So counter is looking good from the fundamentally long-term perspective, but in the short term, some price pressures can be seen just on the basis of the news flow about monthly sales number. So buy on dips is recommended.
All right, okay. The next one that we have is on Emcure Pharma. V. Murli from Bengaluru is holding 300 shares at the levels of 1680. From a short-term view, does adding more of this counter make sense, Swati?
Not at the current level, Mahima, because as of now we are witnessing some selling pressure in this particular counter, and it's on the verge of giving to takeouts of 20 DMA on the closing basis. I believe we might witness some more selling pressure, which will take a stock towards 1620, 1630. Those levels will be the attractive levels. So wait for some more time. Any dips towards to 1620 can be utilized to take a fresh long positions. After that, the immediate target will be 1750 to 1800 levels.
All right. Okay. The next one that we have is on MRPL. So Sheila from Bellary is holding this at the levels of 179. She's holding around 5,227 shares. Wants to know the short-term targets on this one. Swati?
See, as of now, we are witnessing that the counter is making a multiple supports nearby 140 to 143 levels, and we might witness some sort of a bounce back rally towards at least 155 to 160 levels. So you can definitely hold on the long positions by maintaining the strict stop loss of 143 rupees on downside.
Okay, so that's the view on MRPL. The next one that we have is on IDFC First Bank. Radhakrishnan from Kochi is holding 340 shares at an average price of 63 rupees. He wants to know if this can possibly move upwards and should he continue to hold this from a long-term perspective. Asta, your view on IDFC First?
So IDFC First Bank, first of all, here the investor is making profits. So that is one part of a relief. Now, if I talk about the fundamental, what we have seen that there is one positive and one negative. Now, what is positive is that we are seeing the improvement in the asset quality, and what is negative, the kind of news flow regarding fraud, etc. So that has, impacted the sentiment. So these are some of the factors which are right now leading to the stock prices momentum. My idea here is that it is a good investment opportunity for the long term. In the short term, maybe some news flow impact can be seen, but in the long term, there are various factors which can lead to the stock price momentum towards northward direction, and that is first of all the revival in the MFI space. So that is here to stay, and we believe then definitely this revival will help the company in posting very good asset quality numbers going ahead. So overall, my idea here is just hold this counter for the long term perspective with a price target of 75 to 80.
Well, let's go across and take a caller now from Hyderabad, and Murli has a stock query for us. Murli, very good morning to you. Welcome to the show. What's your query?
Good morning to all the panelists there. I have a query on NBCC. I have about 200 shares at an average of 34.
Okay.
I booked some profit when it went up to 120. So can I see that level in about 6 months or 1 year time to hold it?
Got it. Pertinent question, Murli, as well. But what would you recommend here, Swati? Is there a chance for NBCC to go back to the 120 odd level? He's bought it at 34, so currently sitting in gains and has booked profits before as well.
First of all, congratulations. He has bought at very attractive levels and shown the patience to hold this particular counters in a good momentum period. Definitely, the stock has a potential to reach up to 120 to 125 levels. Since he bought at a very attractive levels, I will suggest to hold on this particular counter because the momentum is really positive. If you look towards the weekly and the daily charts, the counter is trading in an upward rising channel, which shows the strength. Even in this kind of a market, the stock is trading in a positive way. So I believe the volumes and the price momentums look attractive at the CMP. Looking for a short-term target of a 120 to 125, you can hold on by maintaining a stop loss of 95 rupees on the downside.
Okay, all right. So that's the view coming in on NBCC. The next one that we have is on ITC. Meenu from Kerala is holding 120 shares at the levels of 420. And looking at this from a long-term perspective, Astha, what is the view like?
So here the cost price is really high. It is at 420 where the investor has purchased this counter. So my idea here is just to stay invested in this counter. Although, I mean, the kind of cost price which investor has incurred may take a fairly long time to achieve those levels. But I think if we look after the current fundamental, first of all, the cigarette business has really working well. And that is main focus of the company, that the cigarette business is doing good. In fact, agri-business, we know that there is some sort of a revenue decline which happened in the agri-business, but that is due to West Asia impact, the kind of news flow going there. So my idea here is there are some short-term knee-jerks which this company is facing in the numbers, but in the long term, it will move upwards. Although in the long term also, we are not very much, positive about the price target of reaching to the 400 level. But yes, in the long term, we can see the prices reaching towards the level of 320 to 330. So for those initial target, at least one should stay invested in.
Got that view, Astha. But let's go across to another query now from Hyderabad. And Ravi is actually calling us now. Ravi, very good afternoon, very good morning to you. Thanks so much for joining in. What's your query?
Yeah, very good morning. I have query on GE Vernova T&D India.
Okay.
Currently, I'm holding 18 shares bought at 3170. And this stock has been falling.
Ravi, I think we lost you, but we got your query that you bought it at 3170 and holding 18 shares. But Astha, this counter as well, right? It's starting to see some profit booking, maybe elevated valuations amongst other factors. But what should Ravi do according to you?
So there are a few factors which are really working well for the company. First of all, they have posted very strong set of numbers in Q4 FY26. Secondly, the order inflow is very strong. I think it has their order book has shown the jump of around 30 to 35%. It is like 35 to 37%, I should say. So there we have seen a rise in the order intake for the company. So I think all these will help the company in posting good set of numbers. And if company will able to perform strongly on the financial front, definitely it will lead to higher EPS and then will lead to the lower valuation at the present moment of a time. So factoring in the future valuation, the stock does not seem to be that overpriced. And hence my idea here is to stay invested in this counter with the price target of around 5,000 to 5,200 at the initial levels.
Got that view, but let's take another query now coming in on WhatsApp, and Mars from Delhi is asking us a question on Ather Energy. Now he's bought 889 shares at 975, so he's built on a very big positions on Ather Energy. Asking what he should do with this counter now. Astha, we've seen a very good run up for Ather. Of course, that is also led by very strong market share gains for the company, even in the month of May as well as in FY26. But at 975, what would you recommend Mars to do? Maybe reduce his positions a little bit, or should he continue to hold according to you?
So yes, talking about Ather Energy, first of all, what we believe that the stock fundamentals are very, very strong. But that doesn't mean that the quantity which one is accumulating or buying should be higher, because the stock has already seen a very strong rise in the prices. So this is one point here I want to highlight, that please buy in the small quantity, not in the small quantity, but the quantity should not be very, very large in one stock, or it should not be a concentrated buy. Now talking about Ather Energy, what we have seen that there is electronic two-wheeler demand is very robust. So that is very helpful for the company. And now the company is also expanding a lot. And this expansion of the company will help in their expansion of the margins as well as their market. So overall, company seems to be a decent fundamental counter. But my idea here is that it will take fairly long time to go to the higher levels. So just wait and watch. Don't exit at the lower prices. Try to exit at around 1,050 to 1,100 odd levels. So just hold this counter till those levels come.
Okay, so that's the view coming on Ather Energy. The next caller, I think Sudhir is calling us from Bengaluru. Sudhir, a very good morning to you. Go ahead, ask your question.
Good morning, madam. Good morning to the panel. Madam, I have bought HDFC shares at 770 average price, 500 numbers. Can I hold it for next 1 year so that, or I have to come out? I wanted an opinion.
Okay, Sudhir, when you bought this, what did you see? Did you see the charts?
Yeah. Actually, in the last, I have in the last 2.5 months only I bought with an average price of 770.
Okay. Okay.
I thought HDFC will do in the long run better.
Okay, all right, Sudhir, got your question. I'll take this up with Swati. Then Swati, HDFC Bank, how is it looking on the charts right now?
The HDFC Bank is currently under the selling pressure, but the interesting observation that we have already seen a very strong retracement from almost 1,000 rupees to 700 levels, and the counter is fitting in an oversold zone. So slowly and steadily, we will witness some sort of a trend reversal in this particular counter. The buying price is attractive, no need to book your losses at the CMP. I believe that the stock has a potential to reach up to minimum 800 will be the short-term target, and about at 840 levels can be seen. So as of now, you can definitely hold on the long positions.
Got that view, Swati. But the next question coming in now, it's on Tata Tech, and Venkat from Chennai has bought into these shares at 870 do. Now, we've seen a revival in the price post quarter four earnings, Astha. But is there enough evidence at this point of time, or should he wait for another quarter, maybe see if the growth sustains?
So talking about Tata Technologies, my idea here is, yes, we have started seeing some sort of revival. And definitely the kind of Q4 number which this company has posted were above estimates. So, and in fact, they are also guiding for some very strong growth on the basis of the organic growth. So my idea here is the kind of guidance which this company has started giving for FY27 especially. I mean, they are guiding for the organic double-digit growth. So definitely that will help the company in posting good set of numbers. So stay invested in this counter. for the price target of around 780 to 820 at the initial levels.
Right, okay, so that's the view on Tata Tech. The next one that we have is coming in on ONGC. Our viewer Bhaskaran from Chennai is holding 240 shares at the levels of 200 rupees and wants a 6 months view on this one. Swati, what would you recommend?
At the current levels, I will suggest to book your partial profits because already you are earning a good amount of money. And the counter has the immediate support levels at around 260. If it's break those levels, which are the previous swing supports level, then more selling pressure is likely to be intensified, which will take stock towards 245. So at the current level, I will suggest to book your profits. Fresh loans can be initiated back around if the counter comes down to 245 to 250 levels.
Got that view. The next question coming in from Satyan, and his question is on Ajanta Pharma. Bought shares at roughly around 3,200 rupees per share. Since then has seen some correction down almost 10 to 12% odd at this point of time. But, Swati, his question is if he should continue to hold on, what would be some of the stop losses and targets that you're watching out for?
Yeah, Ajanta Pharma, as of now, I'm witnessing a negative crossovers from the averages point of view also, and it is trading below the 50 and the 100 DMA. If the stock doesn't manages to break out of 2930 levels, till the time the stock will be under the pressure, and which will try to touch the fate of a 200-day moving average, which comes to nearby 2750. So I will suggest to exit your longs positions and wait for some more corrections. Any dips towards 2700 can be utilized to take the long positions.
All right, so that's the view on Ajanta Pharma. The next one is on electro steel casting. Viru Pakashay from Bengaluru is holding around 1,000 shares that he bought at the levels of 110 a year ago. Wants to know whether he can continue to hold this. Astha, any view on this one?
So talking about electro steel casting, my idea here is just to hold this counter, because here the view is long term. So definitely long term views is positive. Now, if I talk about the fundamental, it is one of the leading manufacturer of the ductile iron. That is what we call DI pipes. Now, what are the positive about this company is, first of all, it is a good long-term bet to believe on, because they have got the market leadership in this space. So that is also looking very attractive. And secondly, if I talk about the valuations also, valuations seems to be on the decent side, along with the export opportunity which this company is having. So if there is any improvement in the demand, definitely this company will going to benefit from that. And hence, I recommend a hold on this counter. Initial price targets can be set at around 85 to 90.
Got that view, Astha, but let's go across and take another caller now from Hyderabad. And Shady has a stock query for us. Shady, very good morning to you. Welcome to the show. What's your query?
Yeah, hi, Puneet. Yet again a nice suit.
Thanks.
So, I have a query on physics wala, and please divert this to Asta because I genuinely follow her conviction. I feel her conviction is pretty good. So I just feel like the losses are narrowing, and probably the turnaround story comes out by Q1 FY27 or Q2 FY27. So I just want Asta's view on this. I haven't entered the stock yet, but I'm planning to enter. So. That's my question. Yeah.
Firstly, Shrini, many congratulations. I think you've been a vocal supporter of my Blazers at this point of time, so I appreciate it.
He's never appreciating my suits. That's not cool.
Shrini, why are you not appreciating Mahima's suits? Is her question to you firstly, before we get your physics wala advice.
Just kidding.
But let's go across. Astha, we've seen on physics wala actually be a very interesting counter, right? It's been a stock that's been under pressure over the last quarter or so. And I think just broken through that today as well, below that 100 mark. What would you recommend and what was your view also at the time of the IPO?
Okay. So at the time of the IPO, I was not very much positive about this counter. Why? Because first of all, I'm not very much satisfied about the kind of business model this company is having. Because we have already seen in the business model like education, there is a lot of dependency on the teachers, and we all know if teachers have got a brand name and if they shift to some other institution, that will definitely going to affect the footfalls in that institute. So I think there is a lot of dependency on the teacher. And if you see in the past also, we have various stocks which are listed from that space, and we have never seen them yielding very strong, appreciation in the stock prices. Now it has come at the price of around 109. It is quoting below that issue price. So I'm not very much positive about the business model. It is not about the company, it is about the business model, which I'm not very much comfortable with. Now, second thing which I believe is valuation concerns is always there. Thirdly, yes, they have posted very strong growth in the revenue, but still profitability is not that stable. So valuation concerns are there, profitability is not that stable. And business model should be like that there should not be a dependency on any one particular thing. And here, lot of dependency on the teachers. So overall, if anyone wants to enter into this counter, enter at the lower level, but I'm not very much a strong supporter of this counter at this moment of time.
Okay, all right. So that's the view on physics wala. The next one, I think Siddharth is calling us from Jaipur. Siddharth, go ahead, ask your question.
Hi, thank you. So my question is related to MTAR Tech. I have bought 51 shares of MTAR Tech at 2290. So I'm sitting in a decent profit now. Wanted to know if I should hold for long or should I book profit now?
Okay, so that if this is decent for you, then I'm just wondering as to what amounts to good profits for you. But congratulations, because you've spotted it at really attractive price levels and you've made over 2.5 lakhs rupees on this one already. I mean, notional, of course. But I'll take this up with Asta. Asta, I mean, not everybody can, catch counters at such attractive levels, right? So he's managed to do that. Do you think he should continue to still hold, or do you think that he should book partial profits?
I think booking partial profit is recommended at this point of time for this counter, because this counter has seen a sharp jump, and now the valuation concerns are a little bit hovering around. So book partial profit, remain invested in the partial quantity for the price target of 8,000 to 8,200.
Got that view, Asta, but let's go across and start the rapid fire round in this edition of Ask Profit. Asta as well as Swati, you know the drill. The first question on Force Motors, Asta Jeet from Kolkata holds shares at 18,980 and stocks, under pressure today, possibly on the back of, monthly sales updates for May. Asta, would you still recommend him to hold?
Yes, I would recommend him to hold for the long-term perspective, not for the short-term. And I think he will definitely see his cost price.
Okay, the next one is on Apollo Microsystems. The average buying price for Himanshu from Gujarat is 215. Continue to hold, Swati. Swati, I think you're on mute.
I'm really sorry, Mahima. Definitely can hold on the long positions for a target of 435 to 440 levels.
Between Bajaj, TVS, Hero and Ather, I think Astha, you gave your view on Ather, but within this space, what do you like? And that's the question that Thomas has for you.
TVS Motors.
Okay, the next one is on Eternal. Our viewer Murli from Hyderabad has bought it at the levels of 7800 shares and wants to know whether it will reach 300 or not. Swati, possibility on the charts?
Yes, up to 280 levels we can witness a positive momentum, because that is a resistance provided by the 200 DMA. So up to 280 levels, definitely we can look towards targets. You can hold on the long positions.
Nidika from Pune bought Tata Power at 556 though. Asta, she's mentioning that it's not performing, but would you recommend that she bought at elevated levels, and what should she do now?
Yes, I think she should hold it patiently and try to exit at the higher level, because cost price is high. So don't exit at this point of a time, but try to exit at around 450 to 480 odd levels. Partial hold.
Alright, okay. The next one is from Mahendra Rao. He wants to know the price range for LG Electronics for the next 3 months. Swati?
At the current levels, the view is little bit positive only because we are witnessing a very strong momentum rally. 1600 to 1640 levels can be seen as long as stocks maintain 1500 support.
On Bajaj Finance also, Swati Vijay from Chennai wants to know a short-term target. Of course, I think with a broader market correction, the stock's also under pressure, but your view?
My view is a little bit cautious because the counter has given the breakdowns of the support levels. 840 to 830 levels can be the near-term target for this particular counter. Resistance is provided at 900 mark.
Okay, the next one is on Texmaco Rail. 1200 stocks bought at an average price of 164. Mahindra wants to know whether to hold, average or exit. Swati?
I will suggest to hold on. If you want to looking for the average, 91, 90 levels are the good levels to take the average of position.
Got it. The next question is on HFCL, and a viewer wants to know if it's a good time to add for the long term. Swati, of course, you actually asked. I'll ask you this question because it's in a massive run up. Is it still sustainable to buy into right now?
So don't buy at this point of a time. Maybe at the lower level is recommended at around 175 to 178 odd levels for the price target of 200 to 210.
Okay, Tata Steel 275 shares bought at the levels of 150. Sunil wants to know whether to hold or book profits. Swati?
I will suggest to hold on this particular counters. Immediate target will be at 240 to 260 levels. Downside, it has a good support at around 200.
Got it. Lalu Raji from Kerala is holding on to VA Tech Wabag at 1341. Asta, should he continue to hold his 100 shares? Is it a good time to buy more?
I think buy more, but at the lower level of around 1530. And remaining quantity hold discounted for the price target of 1580 to 1600.
Alright, the next one is on Cummins India. Sagar Pathak from Mumbai wants to know if it is fairly priced at the current market price, whether this is the right time to buy it. Astha?
Buy at the lower level because yes, price seems to be on a little bit higher side. So buy at the lower level is recommended.
Well, it's all about IT today, and Sumed Lakar is holding. He's asking if it's a good time to enter Hexaware Technologies. Now, Swati, we've seen buying from the lower level of 415, 450 odd. Is this still a good time?
Yes, definitely. This is a good levels to take average positions, but definitely you should have a little bit margins on a downside as well. 500 levels can be, you can average your positions. Looking for a target of 600 to 640 levels on high side.
Got it. Well, that was the last question of the rapid fire as well as this edition of Ask Profit. But Swati as well as Astha, thanks so much always to give us some perspective across a whole bunch of stocks and spaces. But viewers, all the time in this edition of the show. But stay tuned, KYC comes up next and we'll see you at 2 p.m. for Ask Profit, the afternoon edition.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative. From stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim.
Hello and welcome to KYC. You're watching NDTV Profit and this is me, Sharad Dubey, where I get you the hottest companies in KYC, and also this includes recent listings, their Q4 numbers and also hidden gems. But today also I've got a very interesting company, but I'm going to give you some hints. Try to guess it. Of course, this is a recently listed company and a Mumbai-based tech-enabled lender. Interesting, all right? Let's understand more. What else hints to be there? Delivered a very strong set of Q4 numbers as well, and has been recently listed on May 8th, 2026. Now, I'm sure you must be understanding which company I'm talking about, and the stock is up 55% from the IPO price. चलिए guess करते कौन सी कंपनी है. आपको मैंने किश्त के साथ थोड़ा hint भी दिया था, and that's the hint as well. The company's name is on EMI Tech. The branding is Kisht. So this is what we're going to talk about. But why are we calling this recently listed company? First of all, धंधा समझना ये है क्या? That's the business model. The first question we'll try to understand, what is Kisht all about? Is there a big digital angle to it? If yes, how is it going to survive against peers? इसका moat क्या रहेगा? Strong Q4 outlook for the next 2 to 3 years. What has the management planned? Also, if you look at it, third important point would be the margins. Will they improve because of the economies of scale? That's something to look out for. And also the outlook for the usage of AI. Will this change going ahead, especially on the operational numbers front going ahead? Also, apart from this, we're looking at the expansion and the growth plans. Is there any strategic guidance to it? That's the main question we'll try to understand and decipher from the management. And the off-book versus on-book. How does the product mix stand? On-book is on your own books, on the financial institution. Off-book is, of course, on the third party. And Ranveer Singh, the chairman and CEO and the ED of Kisht, will try to decode his business models, the outlook ahead and what the industry standards are. लेकिन ये कंपनी करती क्या है? Let's go deep dive into it and understand Kisht में क्या बात है, क्या नया बात है. It's a recently listed company. It was founded in 2016 and it's headquartered in Mumbai. Also, of course, it's a technology-first digital lending platform, which I had mentioned earlier. And as we go into the details, we see it serves India's mass market and mass affluent segment. Middle class hua, higher middle class hua. What is it they're offering? They offer loans and loan against property, to both salaried and self-employed segments. इसकी रेशियो भी मैं आपको थोड़ी देर में बताऊंगा. Almost you could say 1.12 crore customers which they already have in their rosters as well. They have been supported by 45 plus lending and co-lending partners. This is how the company is expanding. जो P&L sourcing होती है 100% comes in from digital. So it looks digital first. Let's try to understand what else should be there on our radar. Now, LAP, the loan against property as we call it, that delivers through almost 98 branches across 8 states and union territories. Apart from this, if you look at it, the company has 7,000 crore plus AUM. इन्होंने 7,000 crore का आंकड़ा भी पार कर लिया है. So that's of course we could say a small and mid-size company. But AUM mix क्या है? That's important. I had earlier explained you on book versus off book. It's largely 50-50% if you do the analysis, and if you look at it, on book means अपने खाता में. That is the most simplified way to put it. Off book होता है दूसरे के खाता में. That's a type of a business जब आप NBFC में रहते हैं. But let's try to understand something more. They have a borrowing cost of around 11.5 to 14.25%. This is very much important. ये इनका raw material होता है, लेकिन ये आज जो ब्याज में देते हैं इसका of course higher रहता है, and that is where they earn the spreads. ये तो मॉडल हुआ, लेकिन पैसा आता कहाँ से? Where is the funding coming from? Bank, it's roughly 20% and of course if you have NBFCs and funds, that's of course 33% and almost 46%. So this is how the banking fund, the funding channels actually are working. But apart from this, looking at the customer profile, customer kaisa hai, there's important points which I picked out from their investor presentation. It's pretty interesting and it shows some good momentum. 52% are self-employed customers. 81% reside in the top 100 cities. So that's an important takeaway. And 32 years, एकदम नौजवान जो है इनके customers हैं, इनका average customer है, and the CIBIL score, that is 746. That's the median number. That's on the higher side. So the customer quality is good. Q4 numbers were very strong. Operational quarter, if I talk about it, and if you look at it, the asset quality that has improved as well. There are other points also I'd like to make कि Q4 में क्या खास था. खास ये भी था कि portfolio expand हुई, both personal में भी और loan against property में भी. The bounce rate, technical है चीज़, but I'll try to understand ये operational number ही कह सकते हैं. That has also improved. Bounce rate हो या collection efficiency. So this is a positive sign if I like to make it in the simplified manner. But why am I bullish in this counter? There's a good insti buying momentum happening post the listing. So of course the bhav from the IPO price is up 55%. Looking at this, bullishness is coming on the operational performance and even the guidance looks strong. Apart from this, more economies of scale expected. ये tech और AI का जो माजरा है, ये इसमें देखना होगा कितना growth company में आता है, और asset light business model is also there. So this is something which we'll try to understand how this model actually works. But apart from this, let's talk about the rating parameters, what it means for the company. And there are 8 rating parameters, but इस बार मैंने tweak कर दिया है. This time for this company I have changed the rating parameters. Income statement, balance sheet, I have kept it as it is, but instead of cash flow I have gotten operational numbers and asset quality. These are things which you should analyze when you are having a company who is there into lending. Shareholding street credit ज़्यादा नहीं होगा. Company को you could say just it's been a 1 month also since the company has been listed. We'll try to compare the return ratios, also what the growth has been. याद रखिएगा data कम रहेगा, so you have to take everything with a pinch of salt. Outlook is something which the management came out with first time after its listing in its numbers. So we'll try to get all of these details. But let's try to understand the first one. Income statement, what has happened, total income. There's a good significant jump from 1353 crore rupees, is jumping to almost 2200 odd crore rupees. Even if you look at the PAT numbers, there seems to be a good jump. So it's a strong thumbs up when it comes to the income statement. अब लेके आते हैं balance sheet, जहाँ पे हम 2 important parameters को track करेंगे, net worth और net debt to equity. Over here, of course, you could say some adjustments are there, so slight bump up has happened, but nevertheless, the balance sheet is still properly capitalized and see a good up move from the net worth also. Almost a 30% increase in the net worth is also coming in. Of course, there are some benefits coming in post the listing. but net it's a neutral rating right now for balance sheet. So we spoke about income statement, we spoke about balance sheet, लेकिन operational parameters क्या है? This is a very interesting to track for a company like Kisht. Of course, FY26 operational numbers, the registered users, they went up 29%, the customers served, they went up 28%. So net, there is a strength in the operational numbers as well. But let's talk about the asset quality. इसमें GNPA and NPA ratios लेके आया हूँ to simplify things how it matters. And of course, remember this was the peak for both GNPA and NNPA ratios, and then after that it has kept on falling down. It's at around 2.1% right now, and same thing over here, NNPA also, this was the peak. It's decent. That means the asset quality has been improving going ahead, and that is a good sign for a lender like this. So net, it's a strong positive thumbs up when it comes to the asset quality. Let's talk about shareholding, and remember, iska history bahut kam hai. Promoters are having roughly 25% stake in the company, but the majority of them is by the retail 51%. But also there's a good participation from the institutions also for a company like this. This of course includes FIs and DIs. Combine them both, it's 24%. So positional setup bhi acha hai. IPO ke baad bhi insti buying hua, and we'll try to understand in the shareholding pattern going ahead. So it's a neutral rating right now. Street cred, let's see what has happened yet, and from the IPO price and the listing price we have taken it. Remember 8th May ko listing hua hai. There was a good 10 to 11% listing gain as well. So from the IPO price, the stock is up 55%, a good momentum coming in. And on the other hand, from the listing price also, the stock is up 39%. So that shows strength in this counter, and we are seeing that. So it's a positive thumbs up when it comes to the street cred. Also, let's move on to the next one. That's the return ratios. ROA, that is return on average AUM. Another one is return on assets. ये simplify करके आपको बताया है, and that's where it's currently standing at 5.05 and 24%. And if you look at the increase in both of these return ratios, there's a 22 bips jump coming in and almost a 622 bips when it comes to the ROA. So net return ratios are good, but let's give in a little bit more time to judge the company. So it's a neutral rating right now. I've kept it from my side. So हमने 7 ratings तो कर लिया, लेकिन आखिरी rating बहुत important होता है outlook का. AUM growth, they are targeting 40%, and that's a very big, kind of a move coming in. That means they are trying to keep that momentum with them. The credit cost expected to reduce by 10 to 15% on a year-on-year basis. Maybe there is an AI angle to it as well. The GNPA targeted to remain below this 2.25%. That's interesting. Currently 2.2%, so that's the band which they have given out. ROAUM, that is return on average AUM, is expected to be around 4.5 to 5% range. And also, looking at the ROA, that's expected to come in between 19 to 21% in the range. So a little bit of mixed, but most of them are positive, triggers coming in. But let's give it more time. Let's try to understand the business model, and then we'll come back to this outlook. So it's a neutral rating right now from my side when it comes to Kisht. Let's talk about the KYC ratings. कितना number किसको दिया गया? Largely income statement and operational numbers, asset quality have been really strong for the company, and I've given it a strong thumbs up. And on the other hand, let's take some time out for street and shareholding. That is where I'm trying to understand, will this momentum continue in the IPO or not? But the return ratios and outlook, they are decent, but let's give it more time to judge the company. So net, on the higher side of my average ratings, I get you these numbers. It is 6 out of 8, and that's largely strong for the average KYC ratings. But let's talk about our few, speaker in next coming in, Ranveer Singh. He's the chairman, CEO, and executive director at Kisht, and a little bit of snippets about him. He has over 20 years experience in consultancy and finance as well, and also he has held important roles in McKinsey, Shinka Tech, and Creva as well. Apart from that, the education is top notch from IIT Bombay and IIM Bangalore. But this conversation continues, but after a short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead.
Welcome back to KYC, and we are joined in by Ranveer Singh, the Chairman, Chief Executive Officer and Executive Director at Keshta. Good afternoon, Ranveer. It's always a pleasure to have you. I just want to understand first and foremost, what's your business model for Keshta? You're coming first time at NDTV Profit, I know, especially in my show KYC. Just wanted to understand what's your business model and what's your moat?
Sure. So first of all, thank you for having me. Really a pleasure to be here and talking about our business model. Let me try explaining in the most simplest form. We at Kesht have created a platform that allows customer to come in. They go through a process. The process can be anywhere between 6 to 8 minutes. They have to fill the details. They have to, give their bank statement, many other things, 6 to 8 minutes. And in that 6 to 8 minutes, I collect lots and lots of information, which allows me to run my underwriting models, which uses machine learning, which uses AI. And based on that, I'm able to take a decision on whether to give a loan to the person or not, and what is the amount I should give. When I say 6 to 8 minutes, in 6 to 8 minutes, the money is transferred in customer's account, not some sanction given, etc. So it's a very convenient and a very dignified way of taking loans. These ticket sizes are not very high, so they range from anywhere between 20,000 to 2 lakh. So the average can be anywhere depending upon the risk profile of the customer. But in summary, this is broadly what we have developed. And on the back of that, we have been able to acquire a large base of customer. As your presentation was talking about it before this, 11.76 million. Not a single one we have ever met in person. Always on machine, always they come.
So that means the business is full 100% digital.
100% digital as far as the unsecured personal loan is concerned.
But the loan against property, I feel there are some branches.
Yes. So loan against property is 7.3% of the business. Because of this act of collateralization, you cannot make it 100% digital. Because you can do the sanction, you can do approval, you can do underwriting, you can do all other checks. But when it comes to, putting a lien on the property, you have to go with the customer to the SRO. That's why it just can't be 100% digital.
Fair enough.
But other than that, everything else is very, very digital.
Ranveer, I was just checking the numbers. Q4 numbers are quite strong. And just wanted to understand, what led to this growth, and do you think this momentum will continue in the next quarter or Q2 as well?
Yeah. So first of all, there are two factors which have been defining as far as Q4 numbers, and not only Q4, even if you go back Q3, Q2, Q1. First and foremost, there has been a very relentless focus on going after customers who are high quality. We are living in an environment where, there are pressures around what is happening outside.
So how do you define
globally.
a customer who is a high quality? Is it some CIBIL score or something?
Yeah, so combination of CIBIL score is only one thing. There are broadly 3 parameters we look, but then there are 7,000 variables which are on those 3 parameters which we end up collecting. First and foremost, the customer should not only have an income level, but a sustainability of income, because sustainability of income is very critical. Second, should have shown a good track record of repayment in the past. Last but definitely not the least, which is less talked about in the business, but see, digital lending is all about fraud management. If I am able to identify early on the customer I am giving loan to, he's not fraud, he or she doesn't have any willingness issue, you are actually dealing with a very, very good set of customers in Indian populace. And that is what has kept us. Particularly Q4 numbers, I think one number which you very eloquently pointed out, our risk numbers have come down significantly. 2.9% has come down to 2.12. In my guidance also, talking about what will happen in future, we have said very categorically, without any ambiguity, it is going to come down further by 10 to 15%. So it is that momentum which is going to drive the...
You mentioned about 7,000 variables and you are digital first, so AI, Gen AI also definitely comes in. Yeah. Just to simplify it for our audience, what the benefit of AI comes in? Because you are having data, a lot of underwriting related data is coming in. So what do you make out of this data, and how much AI layer helps you in that?
So first of all, the simple answer is it helps in a very huge manner. Because there are things which only AI can do, which ML model, machine learning models or the traditional models could not do. For example, today when I underwrite a customer, I don't underwrite on the static view. A customer, what he has done in the last 3 years, getting all the context, AI is able to do it. These are very, very, very difficult to...
So the AI can basically predict कि ये बंदा जो है लोन वापस कर सकता है कि नहीं?
ये बंदा लोन वापस कर सकता है कि नहीं? Just to not to make it too technical, what AI does it gives me a rank ordering of a customer from 1 to 16, and it will say Ranveer Singh falls into bucket 3. Bucket 3 का risk is इतना %, and it gives a very high degree of predictability. Because risk is never about, the lending business is never about dealing with high risk or low risk, but it's all about being able to predict risk in the right manner. Till the time your prediction is within the plus minus 5-10% within your acceptable zone, this is a good way to run the business. So AI helps me not only rank order the risk, कि Ranveer Singh is lesser than say perhaps you from a riskiness standpoint, plus also ensuring that whatever they have predicted, it plays out to that extent at a portfolio level.
Wow, that's a pretty interesting take, and for all our viewers who are trying to understand the business model about it, I think this is a very important statement you have made. But there comes economies of scale also, right? And as you are growing, your tech-led platform, there'll always be a further scope of up move in the operational margins going ahead. How do you see this? What are the key qualitative factors here?
Yeah, so the key qualitative factors is today, if you talk about my business, I have almost 400 people who are only focused on either technology team or analytics. Now this 400 people, once my scale becomes 2 or 3 times, they're not going to increase. So that cost remains same. So one of the big thing for a business like me is there is a huge operating leverage, and the operating leverage comes with the scale. I still run with a very high fixed cost because I have made huge investment in technology, in AI, in team, in all other infrastructure which goes into making all my systems are in-house. So as I think about the scale further, the great operating margin improvement also comes on account of what is called as an operating leverage, because this fixed cost is not increasing.
Right, Ranveer, so this is what happens, the lot of startups or even new age thinking companies from the legacy side, 1 या 2 साल या 3 साल tech पे बहुत खर्च करते हैं. So are you also in that spending mode, or that work is already done?
So a large part of it is already done. But at the same time, because I'm a tech company, I also carry the onus of being in the forefront on any new technology and any this thing. So जो मैंने अभी IPO किया, in that IPO, it was very clear, 75% of my capital is going into, further
NBFC.
And NBFC, but the remaining 25% is going into investment further.
So okay, these are tech R&D investments.
This is a tech R&D investment primarily. So that investment will continue, but as a proportion of the total, that becomes a small, because we have already invested a great deal, lot of learnings.
So technically the stress in balance sheet technically comes down a bit
absolutely.
now going ahead.
Absolutely. And that's why the leveraging, the operating leverage thing plays out.
Fair enough. Apart from this, looking at the expansion and growth plans, what are the targets looking like? Because your core business is digital, so it will be very difficult for us to understand, at least for the other business, the LAP segment, any targets which you are keeping. It's a 7% right now, right?
Yes.
Will it increase to 10, 15? How are things looking like?
So in terms of the guidance, we have been very clear. First of all, at an overall level, which includes both PL and LAP business, we are going to grow at a rate which is north of 40%. And just understand, I'm talking in an environment where all the other concerns which are happening in economy, etc., yet there is a degree of confidence and conviction with which I'm saying it will be more than 40%. Now, in terms of the ratio of LAP versus PL, of course, LAP will grow, but the specific number we are not putting it because it would be unfair for us because the PL is growing at a very fast rate. So as a proportion, of course, it will increase. The thing that we have mentioned is today we have almost 100 odd branches. We are going to put 80 more branches in this year, which is in a way indicator of how the LAP focus will only increase going forward.
Right. Ranveer, on book and off book, एक अपने books में रहता है, एक दूसरे के books में रहता है, and the way you have played it is very smart, 50% right now. So the market is trying to understand your asset heavy or asset light. So what is it right now?
A very good question. See, first and foremost, I am a believer that you need to follow a balanced strategy. If you increase the off book higher, you are exposing yourself to vagaries of market where it is not a great strategy. So as far as guidance is concerned on my liability
strategy,
so
it'll be 50-50 only, you'll try to manage and
I will manage 50-50. I love off book because in that case, I don't have to put any capital. I just have to keep 5% of the total book, which is called as a first loss default guarantee, and I get a benefit of full this thing. But at the same time, I also want 50% on book because 50% on book gives me an immense level of flexibility. That's the book that I have. I'm not dependent on anybody. If something happens, I can always, toggle between these two.
Right.
So this balance approach gives me a great service.
That's the point which I wanted to make. Ranveer, it's a pleasure to have you here. We are running out of time, but of course our conversation will continue in KYC and NDTV Profit. Best of luck for the future.
Thanks a lot, and thank you for having me again.
Yes. Thanks. So that's an interesting story coming in for Kisht or on EMI Tech. Strong Q4 numbers and guidance also looks strong. For interesting stories like that, keep following NDTV Profit and watch KYC.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative.
Another range-bound day of trade today on the Lal Street, with benchmarks trading in the red. Most key sectors trade in the red, and barring IT, which is the top gainer. IT stocks continued their strong run, with Infosys and TCS surging in an otherwise tepid market today. Investor sentiment remains upbeat as the global AI boom fuels expectations of stronger technology spend and rising demand for IT services. NHPC trades under pressure with the government stake sale OFS opening. The government will sell up to 6% stake in NHPC via an offer for sale. Starting today, the centre intends to offload a base stake of 3% in the company, with an option to sell an additional 3% under the green shoe mechanism. Ola Electric Mobility trades under pressure after opening its qualified institutional placement issue to raise approximately 500 crore rupees. The issue consists of nearly 13.9 crore equity shares with a floor price of 37 rupees 74 paise per share. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar, and let's take you through the market momentum for the day today. Well, if you really take a look at Nifty 50, it is 0.4% down in trade, and it has been quite a listless day of trade today, with a fair bit of volatility also coming in. But all in all, the market movement as well as the momentum is not looking very confident. Let's also take a look at the internals. Well, barring the IT sector, which was the case yesterday as well, all other sectors are in the red. So therefore, IT is the only one, after being beaten down, getting a lot more recognition now, with a little bit of that narrative shift in the AI impact on the IT companies. But apart from that, it's the bank which is taking the charge in terms of really dragging the overall market as well. Some of the key banking names are also the downers. And also, when we talk about the mid-cap universe, it is a huge underperformance to the key indices as well. What's really working for Nifty 50 despite an overall weakish sentiment is definitely the IT sector. So the big names like Infosys, TCS, HCL Tech are the ones which are adding maximum amount of weight. In fact, 100 points or so of Nifty 50 gain are really coming in from the top three IT names. So barring that, the cut would have been deeper when we talk about the key market. When we look at the other internals, numbers as well. Well, some of the sectors that you must look out for is pharma as well as energy and the financial services space. And of course, the oil and gas space, which is hugely impacted by the oil movement. So rupee as well as oil, both are important aspects. The three things which are really impacting the overall market sentiment has been the global cues, the US-Iran tension, our own energy crisis, and then the upcoming lower than estimated monsoon season. And most of the companies, especially consumer driven across all spaces, have really said that it is going to be a year where the margins, the next quarter margins could be impacted. But pharma is down and out. Let's get chatting on what's really happening in that particular sector. In fact, Neha Manpuria, who's the senior analyst of pharma and healthcare at BofA, joins in now. Neha, always a pleasure to chat with you on NDTV Profit. My first question, do you think that the pharma sector, again, after many years, is at an inflection point where it's not the generics, but the innovation, R&D and new molecules which are really driving the momentum, and all the big players are really gearing up for that particular competition? Neha.
Thanks for having me on the this one interview today. A couple of points on what you mentioned. Yes, we are seeing companies, pharma companies, move beyond generics. But I think we should not limit it just to innovation. Specialty is one part of the investment that companies are making, but you've also seen a fair bit of capital allocation that has been made in areas like medtech, OTC, CDMOs. So I would say companies are getting more broad-based to diversify what the medium-term growth drivers would be, but it's not only limited to specialty. That being said, obviously a lot of these opportunities or investments are much more longer duration versus what generics used to be. So it would also require to see how execution is in these areas, how companies are able to scale up acquisitions that they make, investments that they make, to drive either upside from revenue generation or possible potential synergies because of M&A that they do in these specific areas.
Right. So Neha, definitely that is a thrust really coming in. So I would say that there is a two-pronged strategy that is the next level of growth, and also a very aggressive and distribution channel based approach when it comes to the sales as well. Some of the private equities have really got that going with JB Chemicals, and also Chris Capital also invested in Novartis. These are the plays of pushing down the sales aggressively. What's your view on that?
So I think in terms of private equity investments coming in, I think that's always been there in the sector. It's not new. We've seen their interest shift. It was previously in hospitals, then you saw it in CDMOs, in domestics. So I think the private equity interest has always been there in the sector. I think it's just shifting between the sub-segments. But increasingly what you're also seeing is listed players step up to participate in the opportunities, and probably even in some cases buy out private equity stakes in companies.
Right. So Neha, if we really look at the broader basket, and of course pharma as well as healthcare, even the healthcare space is the one which is now catching up on a lot of momentum. There is a large hospital chain which is now coming for the IPO, irrespective of market conditions, is what I hear, because the healthcare space is really commanding valuation and has a pocket of investors keen on that space. What's your view on the hospital space? And after a lot of consolidation, private equity money, expansion being done, what are we looking at now?
So I think in the hospital space, what we're seeing is obviously margins did go up meaningfully post-COVID. And now, like you mentioned, they're entering into an expansion phase. And I think that would be the key to watch, how companies are able to navigate, their margins, particularly as they add more capacity. I think the discussion, rather than just focusing on, X capacity is being added by companies, the discussion is also getting more nuanced in terms of which are the micro markets where capacity is being added. Is there certain markets where we're seeing more disproportionate addition versus another? The second is, not only the ramp up of new hospitals, but also could there be an impact on the performance of existing hospitals in certain markets because of clinical talent churn? Because every time you see a new hospital come up, obviously the key driver for whether the pace of ramp up in that hospital would be the kind of doctor team you're able to hire. So I think it's important to see not only the amount of new capacity coming in, but where is that capacity coming in? And in the markets where you're seeing capacity addition, are the incumbents facing pressure because of clinical talent or doctor churn? I think that's the way I think about it. Companies that will be able to, manage this transition, I think there is a differentiation being made by companies in terms of brownfield versus, greenfield expansion. Obviously, brownfield allows the companies to ramp up these beds much more quickly. But I think it will be key to watch in terms of how companies are able to manage margin during this expansion phase to decide, on how the street rewards them, particularly in terms of earnings upgrades and downgrades.
Right. So Neha, apart from the healthcare space, which is hospitals, apart from that, a lot of eye clinic, oncology, and a lot of other also fertility, these are the spaces now that are really coming in on investor radar. What is the growth momentum and outlook that you're seeing there, and how much will it add to the growth of the overall pharma and healthcare space?
You're right. Over the last few years, we have also seen a bunch of these, single specialty, hospitals, chains, etc., coming to the market or planning to come to the market. I think there are two ways to look at it. There's some of these single specialty, which work in a standalone format, and therefore you could look at them as a combination of, let's say, retail healthcare with hospital play, because you require some amount of investment to build that network like hospitals do, but probably it's not as capital intensive as it is for hospitals. And there's a segment like oncology, mother and child being the other one, where you also have sizable investments being made by your multi-speciality chains to sort of boost their presence in those areas. So I think there it's a little bit difficult. The areas there's a little bit of a thin line between whether single specialty will work, or will you see more competition not only from other chains but also from multi-speciality chains which have a stronger brand name in some markets. So I think there's a need to make that distinction rather than painting the entire single specialty with the same brush.
Neha Manpuria, always a pleasure chatting with you. Lots of key takeaways when it comes to the pharma and healthcare space. Thank you so much. All right, moving on to another important discussion of the day, and that is something really weighing on the market at the current moment. We are talking about the monsoon impact, and the government IMD has already predicted 90% of the estimated, and it's going to be below normal monsoons. So while we wait for that and its impact on the economy, HDFC Bank warns that rising temperatures and a weaker monsoon could really pose risks to growth as well as inflation this year, with El Nino conditions likely and temperatures running above normal. So the crop output could really come under pressure, while food prices, especially milk and vegetables, may see an upward push. Sakshi Gupta, who's the principal economist at HDFC Bank, joins in to give us more highlights as well as insights onto this report. Sakshi, welcome to NDTV Profit. First, in a snapshot, key highlights, what do you see? What could be the impact of temperatures rising and lower than expected monsoon on the economy as we see right now?
Yeah, hi, good afternoon. Thanks for having me on the show. Look, at this point, there are three broader themes, I think, that are playing out, and I think that are going to have an impact or could have an impact both on inflation and economic output. One, as you rightly said, is the below normal monsoon forecast for this year. We have seen previously, in the past of the last 2 decades, there have been multiple, episodes of El Nino as well as below normal monsoons. Which has had an impact on both food inflation as well as on agricultural output. On average, we find that 1% deviation in rainfall from the long period average tends to lower agricultural output by about 0.4 percentage points, and this is average. I mean, certain years it's more, in certain years it's less. For inflation, I think what becomes important, and with that, I'm coming to the second factor. I think apart from monsoon is the heat waves, because we find that over the last 5 years, things like vegetables, you have onion, potato, tomatoes, as well as, milk prices become very sensitive to any shocks because of heat waves in the north and northwest part of India. This year, we already seen temperatures rising, and it's getting reflected in some of the tomato prices that have started increasing on a month-on-month basis. So clearly, going forward, I think that remains a risk. And third, I think this is also very important that globally, because of the West Asia conflict, we are already seeing an increase in input costs, right? So from fertilizer prices going up to also now petrol and diesel and transportation costs kind of increasing. And we know that these tend to have second order effects, on everything in the economy. So these are three things that I think we are looking at very closely, over the coming months from an inflation and growth perspective.
All right, so inflation as well as growth, and the thumb rule that you gave is that every 1% drop in the expectation of the monsoon from normal impacts 0.4% when it comes to the lower crop GVA growth. Putting all that into perspective, Sakshi, what is the GDP growth impact that we are seeing, and also how is the monetary policy going to react to an El Nino impact, which would impact inflation on the ground?
Right. This is where things get complicated, right? So let me answer your question on growth first, right? Agricultural growth and overall economic growth in the country. Now, the thing is that we'll have to see how the monsoon season pans out, and the impact on production or yields is actually dependent on when the El Nino impact comes in. So if we see below normal rainfall at the start of the season, which is June, July, where maximum amount of the sowing happens, right, then I think the impact on agricultural production could be much more. However, if the impact of below normal rainfall, comes in only in the latter half of the season, which is, perhaps in August or September, then the impact could be milder. So that is, clearly something that is important. Moreover, I think there are a lot of variations across crops. So this is not uniform because, we have major kharif, crops like rice, and that's the most important. It has very good irrigated area. I mean, almost 70% of the sown area is very well irrigated, and I think that reduces its vulnerability. At the same time, you have certain coarse cereals, oilseed, as well as pulses, which have a lot of high dependency on monsoon rainfall and low irrigation areas. I think that is where the vulnerability could come in. So I think the jury is still out in terms of the quantity or the quantum of impact that the below normal monsoon can have. I think we have episodes of 2023 where there was an El Nino and a below normal monsoon, but the impact on agricultural output was much more benign. And if you compare 2018, where we again had an El Nino event, during that time, the impact was much severe. Right.
All right. So we have to still see, Sakshi. Could you also give historical evidence on the years where it has been an impact and where it has not been an impact? Let's look at the worst case scenario and prepare for that. If we really look at El Nino impact, higher temperatures, lower monsoon, and coupled with the kind of crisis we are seeing on the ground with the fuel price increase, both put together, your assessment and outlook on the economy for the next few quarters.
Right. I think that what we are thinking on the economy right now, as a sum of all these headwinds that you spoke about, is that look, Q1 this year, clearly we know that there's going to be impact on margins, right? Because input costs have gone up, but there hasn't been a complete pass through of that increase by producers at the retail level, and the impact is right now playing at margins, right? So that usually gets captured in the GVA growth. So therefore, Q1, Q2, we could see, between six to 6.5% GVA growth, for India. Second half of this year, I think it would depend on, again, as I said, what is the intensity of the below normal monsoon. Secondly, I think we'll have to wait and watch whether by that time the conflict is over, the West Asia conflict is over, and oil prices have settled down. And third, what really happens in terms of the fiscal and monetary response, because I think that will determine what sort of growth numbers
Let me,
we start seeing.
in the interest of time, let me just intervene there. Sakshi, very quickly, RBI policy is in the next few days. What are you expecting from the RBI? Very quickly.
Right. So from the RBI, we're not expecting any change, Nisha, in this policy. We think they're going to remain on hold, stance unchanged. Inflation is still low. Their estimate for the year is at 4.6. That might get revised up. So we are expecting inflation closer to 5.1%. For FY27. On the growth front, I think there can be a possibility of a slight downward revision in the growth forecast as well.
Right, higher inflation estimate and lower growth projection. Thank you so much, Sakshi. Always a pleasure chatting with you. Thank you so much.
Thank you.
All right, let's focus back on the overall market condition at the current moment. And yes, Nifty 50 has dipped slightly further down, but definitely there is a slight bit of volatility as well as listlessness when we talk about the market today. Let's get chatting with Nishal Maheshwari, a market expert, to decipher the market better. Nishal, what's your view on the kind of weakness that the market is seeing currently?
So, afternoon, Nisha. I think you have summed it up very well. Basically, it's just listlessness. There's no interest in the market. Really, basically, the result season is over. So, at least for the moment, there is not much information on the horizon. There is no news. And as far as the Gulf news is concerned, nobody really believes it till it is going to happen. So that's the way basically the market is at the moment.
How will you play IT sector, Nishal? Is there a change of heart on the IT space with the AI impact or the comments coming in from Jensen Huang of NVIDIA? Is there a change of heart? Because for the last 2 days, that's the only sector which is gaining.
So I would still term it as a dead cat bounce. Basically,
Okay.
the stock had corrected quite a bit.
Yes.
You remember, I think last week when we spoke, I told you that most of these stocks are at now 3 to 5% dividend yield. And I think that could have been a good place for a lot of institutions to buy. I still don't see individuals and HNIs taking a position, but I think it was a good spot for the institutions to buy. So I think it is largely value pickers who are coming. I do not see any change as far as the IT outlook is concerned. I've heard many calls basically on this quarter. None of the managements really have a very clear view where IT is headed, at least for the next 1 or 2 quarters.
All right, so dead cat bounce for the IT sector, Nishal, well put. When we talk about the certain spaces like probably healthcare, to some extent, even energy, renewable energy, these are the spaces which had been doing well given the current fuel crisis. So Nishal, in terms of the valuations, how would you peg some of these sectors, and are they still good investments in the near term when the next quarter could be a little more cathartic than what we have seen?
So I think as far as healthcare and renewable is concerned, I don't think so there is much of an issue basically because both of them are independent of what's really happening in the Middle East. And in terms of valuation also, I think renewable energy has corrected quite a bit. So looks interesting at this point of view. As far as healthcare is concerned, I think the CDMO play has really worked out well within the healthcare. and the local hospitals, and they continue to do very well. Some of the large cap companies also continue to now start showing attraction in the US market. You've seen a couple of them. I think one of them has launched a new NCE and has got an approval for it in the US market. So I think the pharma side basically seems to be okay. Energy, as far as the demand is concerned, very good, very strong in the last quarter calls, basically, which I've heard. But the issue is about valuation out there. I think a lot of that is already priced in. Now we have to see as we go along, basically, if the numbers which they have been guiding is sustainable for more than 2 years, then you will further see price increases happening in the energy sector.
So Nishchal, where to buy at this point after the market has seen enough consolidation, has been lowered, and the next quarterly results are just a month or so away. So looking at this scenario, is this the right time to buy, load up, accumulate certain areas which have been cheap? And where are you looking? And if not, then what is your view?
So I think one should be very, very stock specific in this kind of a thing. There is no overriding theme at the moment because I think the interest rate cut theme is now gone. I think the interest rate rise theme is going to start getting underway in a quarter or two as the US increases its rate, and possibly India will also have to do it given the inflation is going up. So interest rate plays are out of the equation. So one should avoid autos, real estate, all that kind of things, basically, which are interest rate sensitive. The second thing remains to be, yes, currency is in favor. So pharma and IT. IT, I would say, basically for a trading bet. Pharma, yes, definitely for long-term bets, one should look at pharma. And then renewable and energy still continues to remain good. So one should be looking at these sectors. Otherwise, I think metals is another space which I like. And the world is moving away from the softer assets to hard assets.
Right. All right. So Nishchal, many takeaways from there. And of course, yes, metals that you mentioned, that is going to see a good quarter of full realization impact that is coming in the next quarter earnings. And apart from the consumption space, it's just going to see a full impact of the dampener from the war situation. Thank you, Nishchal. Always a pleasure speaking to you. Completely out of time on this edition of Markets at 12. But do keep it with NDTV Profit. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative. From stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Daria, and Sharad Dubey, who's standing at the Profit Market Pit with all the action in the markets. Sharad, good afternoon. An interesting day of trade. The pressure is absolutely there. Nifty, 100 points fall is what you're seeing right now, and it's slumped back to that 23,300 mark. So sell on rise is the kind of action that you continue to see in terms of where markets go.
Well, that's right. Good afternoon, Hiral. And largely we had said that the options data was also suggesting further sell-off, and it's happening in Nifty also. Trying to be in a rain-bound move, but definitely we are near that. You could say that the day is low. We are actually, a little bit of correction has happened. But Nifty Bank, let's pull up that chart and see. Nifty is down 100 points. Nifty Bank almost down 470 points near the day's low. A little bit of concern coming in these counters as well. Only bright scope is the IT space. That's the only bright thing in the entire day's trading session. Let's have a look at what's happening and what are the key factors to watch out for. The muted sentiment continues. Remember, today is Nifty expiry at play, and if you look at the more details going ahead, the pain is being felt across the technical setups for both Nifty Bank and Nifty. What are the key support range which should be on your radar? For Nifty, support range is between 23,100 to 23,250. That's where a couple of bounces happened in the day's trade. Nifty Bank, let's pull out the support range. What happens here? It's between 52,800 to 53,200. Also, apart from this, if you look at it, stock specific moves, Nifty IT has posted the biggest intraday gain since February the 3rd. It's up 4%, little bit of correction. It went up to 4.51%. All sectors in red except IT. That's what we'll be trying to understand. And rupee has weakened slightly after showing 2 days of strength coming in. And also lastly, I'd like to point out a sell-off has intensified, especially in the broader markets, and that's not a good sign. And amongst the sectors, pharma, power, oil and gas, that is where we see the sell-off happening. So apart from IT, Hiral, there is a sell-off in the markets.
Absolutely. I mean, 2 consecutive sessions of gains is what we are seeing when it comes to IT stocks. And I think it's more of a sentimental move with NVIDIA, top head coming out and saying that, what are you even talking about AI? That's not going to be a downward. It is going to be benefiting all the software companies as well. And that's what is turned out to be positive for them. So that's a sector that we will be focusing on. Acme Solar on the back of the QIP that they have launched to reduce debt. You have Anantraj, a 25,000 crore data center plan is what is on their annual. NMDC is in focus on the back of iron ore production that has jumped. And you have NHPC where the government has announced an OFS as well. Force Motors, weak May auto sales data is what is impacting the counter. You have names like Aditya Infotech that have hit an all-time high in today's session. And PTC Industries, the rally has been extended post the numbers. And that 60% upside that Goldman Sachs sees on this counter, a very interesting target price is what they have. Second consecutive session of gains coming in for PTC Industries. Electra Green, Tega Industries, you have all of them buzzing on volumes. And you're seeing profit booking today on 2 pharma majors, Supriya Life and Wockhardt, after the stellar rally that we've seen over the last couple of trading days. But moving on, Sharad, over to you to take the rapid fire with Saumil Mehta of Mirae Asset Sharekhan.
Thanks a lot, Hiral, for that. Good afternoon, Saumil. It's always a pleasure to have you at NDTV Profit. We start our rapid fire segment, especially on the stocks which are coming from the IT space. A very good technical moves coming in and now good volume-based buying coming in both mid-cap and the large-cap space. Do you think this will sustain and carry forward, or a little bit of minor profit booking can be there?
Yeah, I think it will sustain in the very short term, medium term. I'm very positive on the IT sector. Infosys and TCS looks great to me on the charts. I'll be expecting at least 5 to 10% now from here in the short to medium term.
Next stock is Acme Solar. They have launched a QIP as well to reduce the debt. Wanted to see in the chart, what's the key levels to track, and is there any kind of alpha to be made here?
Very positive on the stock, and I'll be expecting the stock to continue the trend. Hold on to it. In fact, buy more if you can. The stop loss would be 295.
Next stock, Anantraj, a very big 25,000 crore, data center plan being launched by the company. Your views on this? Is there any positional trade happening, or do you think it will stay in that consolidation phase?
He's been consolidating for a very long time in a broad range. I'll wait for a breakout. A breakout is about 610. Once it gives a closing about 610, probably then we can go long positionally.
Right, like Coal India OFS, NHPC OFS is also there, and of course market's not liking that, and there's a sell-off there. The stock is down 5%. Do you think on a medium term, at least on the monthly charts, is a good time to enter into the stock, or will you avoid this counter?
Yeah, at this point of time, avoid. It's at a very crucial levels, of course. 70 would be my support zone where I'll revisit for for a buy trade. But at this point of time, avoid.
Right, Force Motors weak sales coming in, and stock of course falling as well. Important stop losses to track, or do you think if somebody is already owning the stock, they should have a hold rating on that?
See, my view is bearish in the short term, medium term both. I'll expect the stock to go down till at least 16,500, and if it does not sustain there, then 15,000. So I'm bearish on the stock.
Right, that's the end of the rapid fire segment, but a very important update has come in from Adani Power. Tomorrow, remember, is an investor day also, but they've come out with an interesting presentation. It's very concise, and a lot of details have also come in. To decode that, we are joined in by Varsha. Varsha, what is there in this presentation?
Well, overall, the presentation talks about the power capacity, the India power capacity, which is expected to reach 1,000 gigawatt by FY32, and the peak demand is expected to jump to 388 gigawatt from 245 gigawatt. Now, talking about how Adani Power will scale and how the company has been positioned into, so the operating capacity stands at around 18,330 megawatt, and the target capacity is around 42,000 megawatt across 13 projects. stocks. Now, talking about the revenue visibility, 95% of the capacity, if I were to talk about, is under long-term PPAs, and the fixed charge ensures stable income for the company. Talking about the cash flow, if you see, almost 20,000 crores of cash flow has been generated every year, and expansion is mostly funded internally, low dependence on debt per se. Lastly, if you see, massive capacity expansion already secured, stable earnings and high growth visibility is what we are seeing for this counter.
Thanks a lot, Vasha. Just hold on. We'll be talking about Acme Solar in some time with you. But getting back to this counter, Somel, your views on Adani Power, a slight correction coming in the day's trade. But of course, Adani Group of stocks have shown a good technical up move, and tomorrow is Investor Day also. Your views on the charts for Adani Power?
See, I'm very positive on Adani Power. In fact, all the power stocks, it has been correcting a little bit. But I think in the very short term, there might be more correction a little bit till 210, 215. That would be a buying zone. Revisit around those areas, and then we can overall structure still remains positive. So buy on decline should be the strategy.
Right, buy on decline strategy for Adani Power, and there's a standard disclaimer also coming in for the Adani Group of stocks, which we are addressing right now. But Acme Solar, another segment from this, you could say from the power, renewable energy segment, is Acme Solar. Interesting corporate development has come in. What it is, to decode that, we are joined in again by Varsha. Varsha, what's the entire news flow on this?
Well, they've raised QIP money, this is to for the growth capital and of course to reduce debt, I would say. Overall, the issue size can go up to almost 2,800 crore, which includes, green shoe option as well. QIP is priced at 9% discount to the yesterday's closing price, and the company plans to utilize this money largely, towards the debt payment. Lastly, on to the base QIP, if I will talk about, stand at around 2,600 crore, and total dilution over, may increase to almost 11.82% post issue. So that's, one of the concern, the dilution factor. But yes, your debt will, go down significantly post this QIP.
Thanks a lot, Varsha, for that. I just wanted to get that perspective in. Somel, for Acme Solar, stock is doing well in trade. And we had mentioned earlier also that there is a good momentum coming in. Anything else on the charts from the power segment which is looking good? Because you had mentioned about bullishness in this segment. We discussed Adani Power, we discussed Acme Solar earlier from you. But is there any other stock?
Yeah, I like NTPC as well. NTPC is a good stock. It has been correcting. There is no doubt about it. There are a lot of stocks which are correcting at this point of time. But these, I think these are buy on decline stocks. Maybe you should wait for a basing out pattern around 200 daily exponential moving average, which is around 360. That will be a very crucial level to watch out for. Another crucial level is 350 for NTPC. So NTPC would be my topic in the power sector.
Okay, so that's with regards to where the power sector goes. NTPC, though, the stock is at the day's lowest levels as we speak. But moving on, the cement companies are in focus as well, because if you talk about the fourth quarter, it's been pretty mixed from a fundamental perspective. However, the street is expecting more price hikes that could be on the cards by the companies. In fact, Jefferies has come up with their report. They're saying a mixed Q4, weak pricing, follow through is what they're looking at amidst the cost pressures. Ultratech, however, has outperformed with a strong delivery if you think about both on the volume per unit front as well as EBITDA front. And if you talk about the industry demand, that has remained absolutely steady at around 7 to 7.5% on a year-on-year basis. In terms of pricing, it's a marginal uptick of around 2% that we've seen on a sequential basis. So that's in terms of the fourth quarter versus the third quarter of FY26. And this is mainly because costs have been easing as well. Now, the elevated energy prices, that is one of the near-term earnings risk that one should be watching out for. And the cost shocks are historically hard to pass through in a short term, and that's the nature of the entire cement industry. However, they do prefer Ultratech Cement and JK Cement. Nomura is saying that more price hikes is something that is warranted, and this is mainly to protect the spreads as well because of the pricing or the cost pressures that could be coming in. The margin comfort, that is something that will fade away as the input cost escalates as well, that we've been talking about the energy prices, and that does require another set of price hikes that could be slated in the month of June 2026. And it's very interesting to see what happens with the cement industry, because it all depends on the market. If the market is able to absorb the price hikes that the cement companies take, because if the market is not in a position to absorb the price hikes, they're always reversed. If you talk about the spread trends, that remains challenging because of the fuel inventory benefits that will differentiate in the first quarter performance. Your initial dealer checks are indicating average price hike of around 5 rupees per bag for June 2026, and this is overall. In the south and the east, demand continues to be subdued. In the western market, they're expecting a 15 rupee per bag hike, that could be announced for June. And in the central region, they're expecting everything to remain stable amidst the steady demand. Dealers in the northern region are reporting a proposed hike of around 10 rupees per bag as well. And they also prefer Ultratech, Dalmia Bharat, ACC, Ambuja, Shree Cement, Ramco and Novoco. So that's with regards to the cement pack. Somil, how are you looking at the cement players as well? Because in between, we did see summative strength that was being built up in terms of charts as well. But from here on, fundamentally, yes, there could be concerns in terms of pricing pressure, whether they are able to take a price hike that the markets are able to absorb or not. But on the charts, what is it looking like?
The cement sector is at the moment correcting. If you see JK Cement, Ultratech Cement, Dalmia Bharat, all on the downside, downward trend. But overall, in the medium term outlook, I like Ultratech Cement. Ultratech Cement remains my top pick. Avoid at this point of time, once it gives a breakout above 200 daily exponential moving average, to be very specific, the Ultratech Cement, which is around the resistance of 200 daily exponential moving average is around 11,832 levels. So if you get a close about that level, I think that will be a great entry point. But at this point of time, avoid cement sector.
Right. So cement sector, there is an avoid coming in from Somela. But another stock in focus is NMDC. Largely inline set of numbers the company has reported. Margins, however, there was a kind of a dip coming in. But the May business update, if you look at it, that has also been mixed, where the production that has gone up, but the iron ore sales on the other hand has come down as well. But management, the con call, are expecting a range bound pricing. The Q4 numbers, if you look at it, the volumes are strong and the valuation upside is unlikely. That's what the brokerages are all talking about. Q4 EBITDA that rose 29% on a year-on-year basis. And in the con call also, there is a bullish commentary on the capex targets. But to understand more, we are joined in by Amitabh Mukherjee. He's the CMD of NMDC as well as NMDC Steel. Good afternoon, sir. First question definitely is going to ask is the fourth quarter numbers. They were largely in line. How are the realizations and also the pricing trends actually looking like?
Well, I think the pricing right now looks, at least in the short term, to be stable. You see, there was a substantial increase in steel prices in the period December to February, and accordingly, we had raised our prices. After March, prices have been more stable. So I would expect the prices to be range bound in the coming few months. At least the first quarter and the second quarter, I would expect stable prices rather than volatility. I don't expect much volatility either up or down in the iron ore prices.
Right. There was a slight dip if you look at the iron ore sales in May, but the production improved. So what are the production targets we are looking like for NMDC?
No, there were essentially logistics issues, not a demand issues. So we had, these are the time Q1, we also take shutdowns, especially in Karnataka. We have had a changeover of the agencies who are engaged in that. We have introduced a new system of incoming and outgoing. So these things are stabilizing. Even in Beradilla, I think initially we had to take a couple of shutdowns. So these are not a demand related problem. These are essentially logistics related problem. So I guess by June, by this month, we'll be able to sort out these issues, and the dispatches would be back to normal levels.
Right, strong top line growth coming in. Of course, there are some reasons for NMDC steel sales also. But what's the long term volume commitment or any kind of a billing arrangement here?
No, that was essentially a particular stopgap arrangement only. We do not see any long-term value in that. This quarter, we have not made any coil sale from NMDC Steel Limited. And unless there is a pressing need to do so, I do not feel the requirement in this financial year. Hopefully, even if there is some quantity, it will be very meager, and I don't think it will add any value to our operations. That was a particular requirement on a long-term basis, and I don't think it has any further utility going forward.
And what is the overall capex target looking like for FY27?
This year we did around 3,300, which was the highest ever. If you leave out the procurement of land. And this year, we would almost double it to around 5,500 to 6,000 crores, because most of the capacity enhancement programs have been tendered out or are on the verge of being awarded. So 5,500, 6,000 is what we are looking at this year. Going forward, of course, it will still escalate to around, I think, 8,000, 9,000 in the coming next few years, so that by 2030, we are able to spend all the money and execute all our projects that are ongoing right now.
And will there be more HRC trading with NMDC Steel in Q1 to mitigate the cash flow issues?
No, as I said, that there won't be too much HRC trading at all so far as NMDC is concerned. Q1, we have not traded any amount at all. And I don't see that being done in Q1 or Q2 this year at all. Even Q3 and Q4, even if it happens, it will be a very meager quantity based on some immediate requirement, maybe, yes. But otherwise, I don't see anything happening on that front at all.
And what's your view on acquiring, overseas assets? Any kind of mining is at play? Your view on that.
Oh yes, we are aggressively pursuing not only coal but many minerals, including lithium and copper and other things. They are at various stages of negotiations. Some of them are at very advanced stages. Obviously, due to confidentiality clause, we'll not be able to divulge the details of the countries or the vendors. But yes, I believe that at least this year we should be able to acquire 2 or 3 assets abroad. That's the minimum that I'm talking about, because a few of them are in very advanced stages. And we are also very actively looking at rare earth minerals abroad as well.
Right. Speaking of minerals, the critical mineral segment also is where the government is pushing really hard. And what's your view or outlook coming for NMDC in this space?
Oh yes, as you know that we have opened a new subsidiary completely and fully dedicated to critical minerals, and now we are pursuing this internationally also, wherever we have an opportunity, we would like to acquire and then operate these assets. Within India, we have had a MOU with Gujarat Mineral Development Corporation to develop their the asset they have, and then take it forward for processing and up to the oxide level here also. So we know that this is the future. We are aware of the importance, and we are taking all steps possible in this direction to meet the requirements of both critical and rare earth minerals.
All right. Thanks a lot, Amitabh sir. It's always a pleasure to have you at NDTV Profit. And that's the management of NMDC. The stock is doing well in trade. It's up 4%. Brokerages have also largely given a neutral to positive rating for the stock. Saumil, just wanted to take your views in this counter. A good momentum is coming in. Yesterday we saw some good buying in the metal space. Do you think NMDC has that much steam left for a further up move?
Absolutely, very positive on the stock. it has been, it was consolidating 2 or 3 months back, and it broken out of that full triangular pattern, taking support at 200 daily exponential moving average, looking great on the charts. I think you should hold on to it. Medium term support is around 86, a little deeper, I know, but I think that has become a base for NMDC now. Should continue the uptrend. I'll be expecting a target of around 105, 110 levels for NMDC.
But it's interesting to see with what's happening in the markets as well. We've reclaimed that 23,400 mark. We're at the day's highest levels. There is something brewing in terms of where markets are concerned. That's what it seems like. We're up nearly over 200 points from the day's lows in terms of Nifty 50 as well. If you have to look at Bank Nifty, let's pull up that one on the screens. From the lows, a little over 600 points is the kind of surge that you're seeing in terms of Bank Nifty as well at the day's highest levels. Let's look at the contributors to Nifty 50 and then we look at the Bank Nifty components. What is contributing? You have the IT majors, Infosys, TCS, HCL Tech, but HDFC Bank as well contributing to the kind of gains that we are seeing. What is not is a Reliance Industries, NTPC, L&T and a Bharti Airtel. Overall, if you have to look at broader markets, let's pull up the mid cap and the small cap indices intraday charts. There also you're seeing a recovery in terms of mid cap 150, but still we're trading in the negative. And likewise, that surge, that recovery from the day's lows is coming in on the small cap index as well, but still under pressure to the tune of 0.2%. Somil, the way that recovery is panning out right now, we're almost heading towards the 23,450 mark in terms of Nifty 50. What is it that's happening according to you with that sudden surge that we are seeing on Nifty and Bank Nifty?
The market were trading between a range. The range was on the downside, 23,250 was the a lower end, and the upper end is around 24,100. So that is the range. Now that the markets have taken support at the lower end of the range, it has started bouncing back, and that's what I was expecting, that the markets will stay range bound, and we'll have to find opportunities in different sectors, different stocks. Of course, when it goes up till the upper end of the channel, upper end of the range, we start shorting weaker stocks. Now it's the time for us to, find stronger sectors and buy these stocks where there is a lot of momentum.
So very quickly, your top pick at this hour with the surge that you're seeing.
See, I think I like in the medium term outlook, I like United Spirits. Definitely, United Spirits looks great to me. You can keep a very small stop loss around 1235, and I think the next target for United Spirits would be around 1340.
So United Spirits, the top pick in this surge in today's session. Thank you so much for joining in. Always a pleasure to speak to you as well. But we're completely out of time on this edition of Trending Stocks from Sharad, the team that put the show together, and myself. Lots more lined up. In fact, catch the full conversation with Walcott Chairman Neeraj Shah. My colleague is in conversation with Dr. Habil Khorakiwala. And that's going to be an interesting one. Please stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
from the beginning, I had a concept of a business, not a research organization. We are the most successful antibiotic research organization in the world. We've got 6 drugs, USFDA has given. No company has got more than 1 or 2. Our advantage, unlike other molecules, we have compassionate patient, 80. Means there is a lot of real life data. And one of our purpose, which is beyond business, pure profit, is that I want to equally make our drug accessible.
Sure.
All over the world.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade. Spots the
An interview with Dr. Habil Khorakiwala, especially after what's happened in the last 48 hours, or maybe I can say over the last 2 years, would essentially be now trying to figure out how is it that he, who's gone through this whole journey, thinks of work hard, if I can call it work hard 2.0, and matching up the short-term benefits with the long-term goals that might have come up. And Dr. Khorakiwala, thank you so much for joining in. And my colleagues were telling me, Neeraj, do you want to go and interview him? And I'm like, I absolutely will go and talk to him. I don't want anybody else to do this. I'm wanting to ask you, are you a relieved man today, or are you now an even more ambitious man today?
I am more ambitious.
Okay.
In the sense that actually I am 83 years old today, right? And you see the energy, and both mental and physically also I am very fit, God grace. But personally I feel I have to build a new organization in next 3 years or 4 years. It is that important, because a business organization is very different for new drugs than what we used to do. You know, a generic drug, biosimilar drugs, in terms of business, it is more commercial. Whereas a new drug is all science and medical approach, fundamentally. And now that kind of skill sets to manage, collect and do it is a very different order. And the method and approach you use is of a different order and different dimension. Because when a new drug is there, a doctor is reluctant to use any new drug. However, scientifically you can try to tell him. Especially our drug, which is antibiotic, which is used in critical cases.
Sure.
And he has a critical patients. So whatever he has used, he knows the side effect, he knows it damages kidney, liver, but he has used it for 5 years, 10 years. So he's comfortable.
Sure.
So it takes time for him to adopt a new drug, and unless the medical and scientific part is communicated properly and effectively through various means.
Okay. I can imagine. Okay. Wow. So, well, in 15 minutes, I have to club all of that. So, I'm going to try and make it quick because I have a lot of questions for you, sir. First, now that you've got both US FDA, DCGI approval, what are the tentative launch timelines, both US and India?
About 6 months.
US and India both?
About 6 to 7 months, a few months here and there.
Okay. And what's your expectation about the approvals from some of the other regions?
Europe, we have already filed in Jan, which was about 3 months later than USA. 3 to 4 months. So we'll get in 3 to 4 months.
Got it.
Because this is a fast track everywhere in the world. USA given a date 31st May, 6 months back. And they stuck to the date. Similarly, European authority has given some date, but their method of calculating is different, so I don't know exact. So that is what there. And Europe, we will be introducing little later because it requires a price approval at every country.
Got it.
So generally, if you have a market in USA, it will take 1 year more to go into Europe.
Okay. What do you expect the initial sales traction to be like in the first 6 to 12 months? And what would Zenix's contribution be, for example, for Wockhardt as a company, let's say in FY27, FY28, as the case may be?
See, 27 there would not be very much because hardly 2-3 months are there, initial new. 28, certainly we will have some contribution coming, but the peak comes, it really takes off after about 12 to 18 months because initial time, as I mentioned, everywhere it takes to enter the hospital, get the doctor convinced. They will use it, they will experience it. Our advantage, unlike other molecule, is that we have compassionate patient, AT, means there is a lot of real life data. Clinical trial is not a real life data, but this is a very real life data. So, and they are used in extreme cases, so we are going to have case study of each case. So we believe that that is one way to overcome the initial fear. And very fact, 80 patient means at least 60, 80 doctors have used it.
True.
In India.
Got it.
And 6 of them are American patients.
Got it. Okay. Well, in which case, sir, could you tell us how is it that you are going about the distribution or licensing conversations at all? Because you've spoken about lab to market. Would you do this entirely in-house? Would you want to pursue some other methodology or routes to?
We explored licensing route for the US. We explored. But we also simultaneously create alternative to do it ourselves.
Okay.
So both were running parallel. Because I said if I don't have a choice, I won't get the value in licensing. But if I have a real choice, so we chose to go ourselves.
Okay.
For 2 reasons. One is, it's not the one molecule company. We are going to have over the years number of drugs coming in. So we are building up a business. From the beginning, I had a concept of a business. not a research organization.
Of course.
So unless I complete that, second, as we saw research, we thought new drug will not come, that's why we were there. Similarly, if large pharmaceutical companies worldwide don't have the research molecule of their own, where is their business? So there is a white space we see.
Okay.
Worldwide.
Sure.
And that is what we want to capture.
For how long? For how long do you think, sir, this white space exists for?
Our idea is we don't give up our white space.
Okay.
Because we are the most successful antibiotic research organization in the world. We've got 6 drugs US FDA has given. No company has got more than 1 or 2. And these are research boutique companies. And we have 360 degrees, everything we do. About 15 different disciplines do you require. And tomorrow I build a business organization.
Sure.
You have the entire space for yourself, but it will take, that's why it's a very challenging situation. But worth doing.
And you're driven for it. Okay, so let me try and piece this together, sir.
Second,
Hari,
I have
please.
got the talent available.
Okay.
Because if big guys are not going to do, we experience this in US. I got the best people available in US. Collectively what I have, even a large multinational may not have. Because they all use Zenic in US, you would be surprised. In the industry.
Got it. Okay. Okay. So then piecing this together, sir, you want to do Work Hard 2.0, build it out, as you said, in the next 3-4 years, as the case may be. You are gonna do this in-house and not in partnership, because the market was rife with this belief that for the US geography, for example, you will partner or sell the Zenic rights to a US entity instead of trying to build it out in the US. You are saying you're not gonna do that, you're doing anything in-house. How does the roadmap look like over the next, let's say, 6 to 18 and 12, 30 months, let's say? If I look at 30 months, what does it look like? Revenues, margins, etc.
See, the question is, it is first 12 to 18 months. We hope that we either will break even with our own cost of business or make a small profit.
Okay.
But after that, top line is my bottom line.
Right. And what's the peak sales visibility you reckon, sir? Let's say FY29, FY30?
That is a tough question, but I know my peak is 1.5 to 2 billion for the life of the product.
Got it.
The peak sale per year.
That starts, you reckon, FY30?
No, peak won't come as early as 30, but it may take another 1 or 2 years more.
Okay. Okay. But the trajectory will start from FY29.
No, trajectory will start from FY29. 29.
Got it.
Trajectory one would see coming 29 and it will accelerate.
Got it, sir. You also mentioned having some of the other things, other 4 or 5 in the pipeline as well. I would reckon none of them are as big as Zenic, but some of them are important enough.
I do not know they are not as big as Zenic.
Or are you saying that you know that some of those could be as big as Zenic?
No, see, the question is, Zenic is scientific marvel.
Sure.
In terms of science is so high and so everybody understands that. Others are not as big as scientific marvel, like 6777. But if I look at it from practice point of view in United States and Western market, it's a once a day. Versus Zenic is 3 times a day, Emlavir is come is 4 times a day. And these are IV fluid, these are not tablets.
Sure.
So once a day outside the hospital market of antibiotic is about 40% of total market. Because after some time people put it outside the hospital. And your intensity of the organism with a right drug goes down. So that is where my 6 triple will sit. So I don't know, it is not small, But is it big as Zenic or bigger or a little smaller? That is there.
Okay.
The similar issue is our nafithromycin. Even in India, it may not, because the price points are very difficult here. And but it is outside the hospital, so there is no constraint on price once you are outside the hospital.
Got it.
You are covered by insurance, all kinds of insurance. And it is a 3-day oral treatment, so I need a little larger field force, but market is very large. So we have to estimate all these markets.
Wow. And you are in the process of that. So in terms of having the manufacturing capability and the capacity, if you will, sorry, not the capability, the capacity, would supply ever become a challenge? Would having a front-end team ever become a challenge for Zenic? Let's start with that. As you launch in 6 months' time, could there be challenges? Or is the supply chain that you have and the capacity that you have good enough?
No, supply chain...
The capacities.
Capacity is non-issue.
Not an issue.
Not an issue. Hardly in terms of units, the $10,000 product, we make 100 times more here.
Got it. Okay.
So
fine.
it's a non-issue.
Okay, non-issue. The other thing would be pricing, sir. US and India. How would you think?
See, we will discount US prices by at least 75% to 80% in India. And one of our purpose, which is beyond business, pure profit, is that I want to equally make our drug accessible.
Sure.
All over the world. Equally accessible. So if US can take 10,000, India, if they accept 2,000, 2,500, I have no problem.
Got it, sir. Does this change your DNA, sir? Do you move towards wanting to becoming a global innovator rather than a manufacturing and a hospital play?
We are fundamentally getting into a transformation or metamorphosis inside. It will be a very different organization 5 years from today.
And this different organization building this out, does it take a near-term toll on return ratios, margins, etc., or will you be able to balance it out?
No, I don't think that is done historically.
Okay.
My financial problems and issues are past, because new drug is a high risk situation and requires a lot of investment for every drug. Even we continue to invest in research in clinical area, it's no longer from a risk management point of view.
If I can rephrase my question, sir, I didn't mean that it'll make you a financially vulnerable organization, but it may have an impact on the strength of margins from what they are to maybe
it will improve only.
It'll improve despite the investments, despite the change, etc.
It will improve.
So you reckon, sir, over a 3-year period, what could the...
we have not calculated, but it will be...
But sir, आपके तो DNA में होगा ये. How you built this organization over the last few years, the challenges that
I don't know what
through.
is our margin today. You will know better.
But from wherever it is,
at least 10%
higher.
3 years and 4 years, at least 10%.
At least 10% higher from where it is right now.
Because my ratio will go on changing.
I hear you, sir.
And this is once my investment is there in creating organization. Rest is not there. So everywhere where we create organization, initially there will be there. So since we go globally, so it will not grow as fast as we. But give me 5 years, then it's a very different cup of tea.
And it could be a very different cup of tea or organization even on the revenue front as well.
Everywhere.
You projected some numbers per se. You reckon you could comfortably beat that?
We will do better.
Much better.
Because we are looking fundamentally, as a company, and as a person, if you see my history from beginning,
sir.
I am following, knowingly or unknowingly, initial years and now knowingly, a blue ocean strategy. You are familiar with red and blue ocean strategy?
No, please, for me and for the benefit of our viewers both.
So red ocean strategy, which 99% of a company follow, means you do better, you create differentiation, you reduce cost, or you create differentiation by increasing cost or something. A blue ocean strategy is take a different path, where whatever you do, your differentiation is massive, and it is not at a higher cost, lower cost.
Okay.
So, like biological, we were earlier movers. Somehow we did not execute well. Now that we are putting in, developing clear strategy in diabetes, only focus on diabetic area. Like anti-obesity product came, the whole industry is there. From the beginning I said I'm not going, because I don't go where everybody goes. So we don't want to do a street fight.
I hear you, sir.
So that's fundamentally what it is. It is a major transformation taking place.
Okay. I have 3 last questions. I know there's paucity of time, but 3 last questions. One, for executing any of the plans now or over the course of the next 12 to 18 months, would you now need to raise any fresh capital? I'm guessing capital will now be available on tap after this, but would you need to raise capital?
I would like to be happy with liquidity so that I don't have to think about it. Okay, that's my, personally I think. As of now, I'm happy with our liquidity. So tomorrow, if for whatever reason we need, we will raise it. But we have no plans to do it. My assessment is we may not need it.
I hear you, sir. Okay. Last 2 questions, sir. One is for the team which would have done this. And broadly speaking, we've spoken a bit about it, about how when this team which has developed Zenic or which has worked on Zenic was formed, it was formed in a completely different way. And what a success story it is for them as much as it is for you as the chairman of the company. Could you talk a bit about it?
To them, it is their purpose of life is achieved. Now, what do you want? All my scientists, the leadership position which are their majority, the purpose of their endeavor is achieved in their life. It's not one product, a number of products. So the level of motivation, they always, why they stayed? Because they see something is coming and they believed in it. Now they've seen it is accomplished, and as an organization we supported in good times, bad times, throughout. So they saw that, and that is not a very common thing. So my team, and there is no alternative they have, there is no other organization where they can use their talent and their knowledge.
Win-win for both sides.
Huh?
Win-win for both sides.
And I will take care of them because they have done so much for the organization and for themselves.
My last question to you, sir, personally. In the journey that whatever, I mean, I have tracked now, not very closely, but tracked your journey for 22 years ever since I have been a financial journalist. And it's not been all rosy. You've had periods which could have been stressful as well, but you stuck to the cause, you stuck to the task, if I can call it that. And how has it been? Just maybe briefly talk about it, sir.
Yeah, we went through twice a major financial crisis. One, this the derivatives caused us a problem about in 8, 9, 10, around that. The business was good, the power cash, but this caused temporary 2-3 years hassle. So we overcame, and then obviously I left operations normally to go ahead. I was not too much, I was focusing only on research part more. So that was there, and now since research is fulfilled and we have to create different organization, I got back into, but I'm more at a strategic level.
Of course.
Now what we are doing for NC program, I would be personally driving it for next few years because it is a different way of working. So I put Zahabia, my daughter, to be in charge of US operation. Murtuza will be looking after my European operation. And rest of the world we have appointed a president for India. And she would look after the emerging, all the other markets. markets. And she comes from multinationals whole career. She knows selling new molecules and everything. How cool. So before we let you go, give us a health hack or two. I would love to be even half as fit as you are at your age, if I reach that age, of course. You will of course reach. Everybody can do that.
Give us some health hacks, sir, before we let you go.
There is nothing accepting you are transparent as a person. You behave what you are, you do all the time, so you don't have any internal stress managing. Second, one has to be very active in life. The moment one decides to retire, that is the beginning of the end. Irrespective of age. Age is a number. Wow. And physically you have to reasonably take care.
Okay, maybe we'll do a longer conversation around the journey and health, but thank you so much, sir. Today, congratulations. I love the line that you are more ambitious than relieved right now. So kudos to that. All the best for Work Hard 2.0.
Yeah, thank you.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast,
Welcome to NDTV Profit. You're watching Small Cap Buzzers, and I am your host Mahima Vachrajani. And we're going to talk about a lot of small cap names on this show. Plus, we're also going to have a chat with the Bank of America analyst who tracks oil and gas very closely. But before we do that, let's take a quick look as to what we have on the show for today. The first management that we're going to speak to is Sharebhadra Finance, where net interest income was driven by steady loan book expansion. AUM mix led new used two-wheeler loan segment. The second management that we're going to speak to is Hardwin India. Growth here was led by sales of the kitchen basket. Via series, sharp margin uptick in terms of the overall financials took place, and plus healthy growth guidance given by the management. Revenue milestone of 1,000 plus crore by FY32, growing at a CAGR of 30 to 35% is what the management is expecting. And lastly, IFGL Refactories is the one that we're going to talk about, where volumes are at almost 18 times its 30-day average, and Infobeam Technologies is the other one where volumes are almost at its 8 times 30-day average. So those are the two names that we're going to talk about in detail when it comes to this small cap show. But before we start doing that, let me welcome in Bharat Subramaniam, who's a senior analyst energy of Bank of America, joining us now from the sidelines of course, the 2026 India Conference. Bharat, thank you so much first of all for taking out the time. I think we've been talking about how oil is the new gold, and that's been happening right since the Middle East crisis. We've seen as to how crude prices have shot up, have been so volatile. Considering the entire geopolitical scenario right now, where do you expect this volatility to be at by the end of, let's say, FY27 or maybe for calendar year 2026? What are your expectations, and on the back of that, how are you seeing the entire energy space?
Sure. First of all, thank you very much for having me on the show. Look, as you rightly pointed out, a lot is to do with the geopolitical crisis that we're currently seeing, the Middle Eastern war. I think if we do see the war continue and drag on, does pose an upside risk, I'd say, for crude oil prices. And if we do see some sort of a peace treaty being signed, then there could be some downside risks. So within that construct, we are actually far more positive, I'd say, on the upstream exploration and production companies as compared to the downstream oil marketing companies. A couple of key reasons. One, obviously, is higher crude oil prices essentially means both higher oil as well as gas realizations for these companies. Currency depreciation has certainly helped as well. But the other key theme that we see developing here is on energy security and an increased focus, I'd say, on deep water exploration and production and ultra deep water exploration and production. Last year, we had the ORD Act amendment that was passed, which has enhanced regulatory stability for the upstream players. While we do see the domestic exploration and production players remaining as anchor investors, we do see that this being positive for your global majors to come to India and invest in these deep water fields. Of course, the caveat here is if we do see a windfall cess being introduced either on crude oil or on, say, new well gas, that could obviously cap realizations for these companies. But given the context today with an elevated crude price environment, currency depreciation, and as I said, the thrust on energy security, our top picks would definitely be on the upstream exploration production space rather than the downstream oil marketing companies.
Okay, got it. Considering, that this is a space which both benefits as well as kind of not benefits from rising crude oil prices, right? And at the same time, we've seen valuations also for a lot of these counters fluctuate on the back of that. You did, of course, mention that right now you would be kind of looking at upstream companies more. But from a valuation comfort point of view, what are the areas where you are finding valuation comfort, and at the same time, if somebody were to play this theme, what would be the right approach?
Yeah, sure. So look, I think a lot will really depend on where crude oil prices go, because obviously, as I'm sure you'd understand, earnings are obviously dependent on where commodity prices go, and as well as currency, I think is another key point to watch out for as well. Look, obviously I can't comment on single stock, but within that context, I'd say, as I said, we obviously prefer the upstream players, but within the downstream space, we'd actually prefer players who are not as much exposed to marketing, that is your retail sales of petrol and diesel, and our relative preference would be for those that have a lower net marketing sales to refining throughput ratio. So those are the companies in the downstream space that we relatively prefer as well.
Okay. And then Bharat, how are you looking at energy transition? Do you think that, India is kind of adopting it in the right way and then kind of penciling in oil demand correctly? I mean, what's your view on that entire aspect of energy transition?
Yeah, so we actually see energy security and transition to actually be a key theme and a policy imperative as well. I'd say within the oil and gas space, there are three potential solutions that are probably being looked at. One of which I've already covered, which is the deep water as well as the ultra deep water exploration production. Number two, I'd say, is in terms of biofuels. Here we could see strong growth over the next 5 years or so, led both by ethanol as well as compressed biogas. Today, we think there is possibility to substitute about 120% of the current natural gas demand in the country using compressed biogas with existing material that exists in India today. And number three would be coal gasification. The government has a target of 100 million tons by FY30, and recently they did announce a 37,500 crores of capex incentive. This is on top of about 8,500 crores of incentive that was announced in Jan 2024. So within the oil and gas space, we think that these three could be key solutions that are looked at in the future, just to ensure energy security and and broader energy transition as well.
Right, Bharat, thank you so much for taking out the time and giving us all those insights on the entire space of oil and gas, and of course speaking with us at NDTV Profit. All right, with that, viewers, it's time to slip into a very, very short break, but don't go anywhere. We'll be discussing a lot of small cap buzzers on the other side of the break, so do stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective.
Welcome back. We are watching Small Cap Buzzers. Well, let's see how markets are doing. We've seen a sharp recovery when it comes to the benchmark index. Well, Nifty 50 is up almost 0.59%. Let's see who are the contributors when it comes to benchmark. You have TCS, Infi, HCL and Tech Mahindra, gaining when it comes to Nifty 50. There you go. All IT stocks is up actually today. Even on the loser side though, you have NTPC, you have Power Grid, Dr. Reddy's, Cipla, Bajaj Finance, which are on the losing trend. But let's also see the heat map, sectorial heat map. Well, barring media and pharma, everything has turned on to green. I would say Nifty Auto is up almost 0.76%. Nifty Bank is up 0.41%. There you go. Nifty IT, what a rally over here, 4% gain since it's been buzzing since morning, I would say. Nifty FMCG is up 0.42%. Let's see what small cap and mid caps. Let's see what Nifty mid cap 150 is doing in trade. Overall, if I were to also talk about the small cap buzzers, you have HCL Infosystems, you have IFGL Refactories and Infobeams Technologies, buzzing in trade on the back of volume. So good recovery when it comes to the overall markets. But time to dive into the FNO market setup and the cues shaping in trade today. Let's bring in Sharad for more details.
Well, yes, of course, there is a good recovery in the market and the IT space is doing well. But let's look at the long build-up stocks, what's happening. If you could just show the long build-up stocks where we are seeing a good momentum. The short covering also, it's only IT which is doing really well. And if just could show the short covering also, and we'll see whether the mid-cap IT names like LTM is also coming up. Let's look at the long unwinding name also, what's looking there. That's Bicon and Umber Enterprises, and also lastly, I'd like to point out the short build-up. That's Force Motors on back of weak sales and HPC on OFS opening. So these are the stocks in the FNO space.
Right. Well, thank you so much, Sharad, for all the details. Well, moving on to our first management, which is Shalibhadra Finance. This is on the back of Q4 FY26 numbers, I would say. And to give us more details on how was the quarter gone by and what lies ahead, we are joined by Mr. Manish Doshi, who is founder and director at Shalibhadra Finance, and Vatsal Doshi, who is managing director at the company. Welcome, gentlemen, and at NDTV Profit. Always pleasure to have you. I just wanted to understand, first point, of course, would be we've seen a strong growth when it comes to your profit numbers in PAT. What led to this growth and what's the outlook for FY27 when it comes to PAT?
Currently, I will give a brief about what we do. We are an RBI registered NBFC and we are into small ticket loans in rural areas. We give loans to customers who do not have proper documentation and do not have proper CIBIL scores. So that is our forte, small ticket loans in rural areas. And currently our AUM is 212 crores. And our further target is within next 3 years, we're targeting 500 crores of AUM. And currently we operate in 3 states, that is Gujarat, Maharashtra and Madhya Pradesh. And we are targeting from current 61 branches, we reach 100 branches by FY29. So that is 500 crores of AUM in 3 years and 100 branches in 3 years. That is our broader vision.
Understood. Hi, to both of you gentlemen. Mahima also joining this side. My question, Minesh, is to you. With regards to asset quality, that slightly in terms of net NPA has risen to around 1.17%, right? Considering that you going ahead will be expanding in terms of geography as well, what is the kind of levels that you'll be watching out for, and what gives you the confidence that you'll be able to maintain at least your net NPAs at these levels?
Answer better. Right. So we have put in place a few risk checks. That is, we are giving loans only to customers who have their own house. We have put 700 plus CIBIL score requirement. Also, we have a minimum down payment requirement of 25%. So these are the basic checks. Also, we do reference check of the customer. We take local references of that sarpanch. Also, we take reference of the customer from same village. We make an assessment of how much property that customer owns. So these are the basic checks, basic policies that we have put in place. And we are pretty confident that going forward, the AUM will increase, but the asset quality will remain constant.
Vatsal, if I wanted to understand from you this, you have a target of around 500 crores of AUM by FY29. Just wanted to understand, which segments will lead to this kind of AUM growth, and just if you could also, let us know the AUM mix that you are targeting.
Right. So currently, predominantly, we are a vehicle finance NBFC. We finance on vehicles like two-wheelers, three-wheelers, cars, tractors. We are expanding into newer segments like salaried personal loan, loan against property, home loan. So going forward, these newer products will contribute more towards the AUM. Within next 3 years, we are targeting that the existing vehicle finance products will contribute around 60% of AUM, and the newer products like home loan and salaried personal loan will contribute around 40% of the AUM.
Okay, got it. The other aspect is with regards to your margins and spreads. They've declined despite of cost of funds being stable. I just want to understand in terms of this kind of pressure on margins and spreads, is this temporary going forward? What is the cost of funds that you're targeting going forward? Because from what I understand that you've also indicated that from a really long-term perspective, you'd want to grow your AUM to around 1,000 odd crores without raising any fresh equity. So how will you kind of plan to manage and balance both of these?
Right. So there are two parts to it. Firstly, the margins, what we are targeting is we are targeting good quality customers. The customers who have good CIBIL score, who have good repayment track record. So that is why there has been a reduction in margin. We are targeting good customers. For them, we are offering good rates. So because of that, we are able to maintain good asset quality. And because of that, the margins have declined to some extent. Talking about the second part, currently our net worth is around 180 crores. So as per RBI guidelines, we can reach up to 1,000 crores of AUM without further raising equity. That is through by ways of debt. So we can raise debt from larger banks through term loans. Also, we can raise NCDs. So by way of debt, we will reach 1,000 crores of AUM without further dilution in equity.
Got it. The other aspect is with regards to you entering into micro loan against property. Here, I think if I'm not wrong, the ticket size is below 5 lakh rupees. Just want to get a sense as to what is the idea behind doing this, one. Second, how will and where will the yields be at because of this? And thirdly, how will you manage the asset quality here? Because, these being micro loans could have higher risk of default.
So what we are targeting is we are targeting home loan and mortgage loan with below 5 lakhs in rural areas. Predominantly, these are Gram Panchayat properties. On these properties, normally larger banks do not finance. So they have an ancestral house on which they require some loan to renovate that house, or maybe they want to start a new business. So that is the segment which we are targeting right now. And these are the same set of customers to whom we are giving a vehicle loan. So the set of customers remains the same, the assessment mechanism remains the same. So we are pretty confident that the NPA numbers would also remain constant. And talking about how we will do it, so we have our own 61 branches in all these areas. And so we have this network, and using this network, we'll enter these new products.
Got that point. Well, thanks so much, gentlemen, for joining in and having a conversation with us. It was a pleasure having you at NDTV Profit. Thank you so much.
Thank you.
Well, moving on to the next management, which is Hardwin. A company has seen a good set of numbers, especially in Q4 FY26. And to, speak about what were the key drivers behind this growth and what lies ahead. To speak about that, we are here joined by Mr. Rubal Sayal, who is Managing Director and CFO at Hardwin India. Mr. Sayal, welcome at NDTV Profit. You know, a great set of numbers by the company when it comes to the last quarter. I think you have reported highest ever annual numbers. What were the biggest key drivers for this kind of growth? And, you know, considering the FY26, where you going to end up FY27 with when it comes to revenue and margins?
Good afternoon, everyone. Let me brief you. Like Hardwin is basically it's a brand of hardware industry which was established by my father in 1965, and we are into all kind of locks and handles, door fittings and door closers, glass fittings, and is the only company which has been listed in hardware and NSE and BSE. So we've been working like it's a 60 years old brand. The people, we have a network of around 5,000 dealers and 50 distributors across India. And over the 6 decades, my company's end was like the people have a trust on us and my dealers have a big faith on us. So the reason of expansion and the good profits are only because the people have a trust on us. And if you talk about this 26 results, we have a 18% comparative to last year, 18% growth in the PAT, and we did a turnover of 200 crores, which we are expecting to at least in next 3 to 4, about 30 by 32, our estimated revenue would be 1,000 crores. What we are focusing now. Reason being behind would be the number of dealers and distributors going to be double in next few years, and we have started focusing, which we never been doing before. That we started focusing on exports from last year, and this year we have already gotten orders from Dubai for 2 major orders, and a lot of orders are in pipeline from which our revenue and profits are going to increase a lot. And in this case, we'll be able to give you good results in coming years. And this is a reason, like.
Right. So when you say 1,000 crores, Mr. Sayal, hi, Mahima also joining the side, by FY32, that means you almost grow your revenues by 10 times. Pleasure hearing that. But my point is on the exports part that you just mentioned. First question is as to what percentage right now is exports. I believe that it would be a small percentage, but since you mentioned Dubai, just want to understand if there is any disruption that's come in from the Middle East side and has hampered exports, and what is the strategy going forward, and do you think the margins will be better there?
Yes. Export, about the numbers, I cannot say right now, because as I told you, we start focusing seriously from the last year only. And without the heart of that, we got an orders from Middle East right now. And we are, and the profits about, if you talk about the profits, we are getting a good margins rather from internationally. If we sell, we get a good margins, irrespective of what we sell domestically. So the profits are going to increase when we export. But regarding the export of, like we are focusing Africa, South Asia, and Middle East, these are main focus areas, and which we are very seriously. And for to export in the future, we are increasing our capacity of the products, like manufacturing capacity also we are increasing. And for that, we have taken one more land in Delhi. And in next 1 year, this will be focusing on exports only.
And sir, lastly, on to the value-added products, because if I'm not wrong, that the margin year on year, the sharp uptick in margin that you have seen is of course due to the change in product mix, if I'm not wrong. If you could help us with the contribution from the value-added products currently, and what's the target?
Value added in the sense, like we have not much added the product. If you talk about this, my father started this company with door closer and floor springs. Then over the period, we made into the furniture fittings, door fittings, and the glass fitting, then kitchen fitting. So over the in this so many years is one of the in kind. This is an architectural brand in India which gives you the maximum range of products. And it's like if somebody is building a house, we can at least 60 to 70% we can feed that house. That is a USP of our company. And in coming years, the major we are going to, as you know, the people in India, there is a high demand about the security products, and we find our growth and good opportunity in security products, which maybe in this financial year we are going to launch the digital locks and digital safes and everything like that.
Okay,
so digital locks. That would be a good venture for us, and which is going to increase our sales as well.
Sure, Mr. Sahil, thank you so much for taking out the time and helping us answer all those questions, and all the best for FY27 as well as for your FY32 targets. But with that, viewers, an exclusive story. Sources are suggesting that Coca-Cola may be reworking its India bottling strategy, which may lead to gradually reducing its stake amid intensifying competition. Let's get in my colleague Nimit in for more details. Nimit, is Coca-Cola kind of aiming to mirror Pepsi's bottling model unit?
Absolutely, that's what our sources tell us, that this is a part of Coca-Cola's, the IPO announcement of the partial stake sale is not just Coca-Cola like other international conglomerates in India looking to exit the market at huge profits. This is actually a very strategic disalignment with their bottling business, similar to, like you said, what Varun Beverages and Pepsi did a few years ago. Now, there are a few reasons for them to be doing this. First, they're globally realigning their franchisee systems and their alignment models, and they're looking to let the bottlers be handled by their local partners there. They're looking to move out of that space globally. Secondly, the bottling business has not been doing as well as they anticipated. Just from numbers, we can see that HCCB, which is the bottling plant, the revenue declined by 9% to 12,700 crores FY25, which is the latest numbers we have, and the profit in the same year fell by 73%. That's not a mistake there, 73% to 757 crore, which shows a huge impact on margins as well. They don't see this as a very profitable business that they want to run, and they want to let their local partner control it. And it looks like this whole IPO process and stake sale is going to be a way for them to get out of this business and continue working only on their brand while giving away the franchise to Jubilant Bhartiya Group.
All right. Well, thank you so much, Nimit, for all of those details. But viewers, it's time that we wrap this show. This is all the time that we have got on this edition of Small Cap Business. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
Hello and welcome. You're watching Ask Profit, the afternoon edition here at NDTV Profit. I'm Mahima Vashajani, and with me, as always, is Puneet Zaveri. And this is a show, of course, that gets all your stock-related queries answered. And before we start doing that, let's take a quick look as to how the markets are doing, because strong recovery is what we've seen from the day's low point for the Nifty 50. Almost trading at its day's high point. 130 points of an uptick is what we're seeing, above the 23,500 levels, by the way. With regards to where the heat map goes, largely still led by the IT pack. You have counters like Tata, TCS, Infosys, HCL Tech, Tech Mahindra, Wipro topping that chart, and something like a Trent and Tata Consumer and Eternal also doing fairly well. So consumption at least has reversed. But on the flip side, you still have NTPC, Power Grid, Axis Bank, Bajaj Finance, Dr. Reddy's, Cipla still seeing profit booking in trade today. Pharma, especially as a pack, is seeing profit booking today. Let's try to pull up the sectoral heat map. And there also things have changed, right? You have a lot of these names now in the green. IT still topping that chart, up 4%, followed by Realty, Auto, PSU Banks, FMCG, but Pharma continues to be under pressure. Let's try to pull up the advanced decline ratio, because overall, if you take a look at the mid-cap 150 and the small-cap 250, there's recovery there as well. There you go. A lot of crisscrosses is what you see there, but still, there's now 1,600 advances versus that of 1,000 declines. Much more in the favor of the bulls as we speak. The mid-cap 150 is up 0.17%, and the small-cap 250 is doing slightly better than the mid-cap 150, up 0.3%. But both of them still underperforming the benchmark. So that's with regards to where the markets go. Let's start taking all your stock-related questions. To answer them, we're now joined by G. Choklingam, founder and MD of Economics Research, and Akshay P. Bhagwat, who will join us shortly, who is the VP at JM Financial. The first question that we have is on Walk Hard. Our viewer wants to know if this is still the right time to kind of make an entry into this one. Mr. Choklingam, a very good afternoon to you. I'll come to you on this one. Everybody out there wants to now know that, of course, on the back of a positive news flow coming in, the stock has rallied a lot. Now it's also seen correction. Where do you think, if an investor wants to make an entry, first of all, does it make sense? And if yes, at what levels?
Those who already entered, they can continue to hold, because the management promises are looking very robust. But I am personally conservative. After seeing such a massive rally, normally I don't take risk in chasing them. I would say that wait for at least another 40 days. You will have a June results and see how it is progressing on the revenue and as well as bottom line. Then one can decide to buy the stock. That's my view.
Mr. Chokalingam also highlighted that in just another 40 days we will go through with quarter one cycle yet again. So that's the view on post quarter four. Not too much respite. But the next query, and this one's coming from Sudha from Hyderabad. A query is on Sagility, and she wants a fundamental outlook if these current valuations are good to buy. Stocks up 2.5% today. But Mr. Chokalingam, we saw those those recoveries from the lows of almost 37 rupees on Sagility. Is now a good time, according to you, to buy the stock?
Now, post correction looks reasonable. One can consider it.
Okay, all right. The next one that we have is coming in on, this is on Bondada Engineering. V. Murli from Bengaluru is holding 1,000 shares at the levels of 329. Wants to know from a one-year perspective whether he can continue to hold this or not. Mr. Chokalingam, any view on this one?
I normally skip this stock. I am not comfortable looking at the decomposition of revenue and expenditure stream. I may be wrong, but I'm not getting confidence in the stock.
Got that view, Mr. Chokalingam. The next one, that's coming in now. It's on Grow. Our viewer Ram Iyer from Mumbai is holding shares at 188. Let's pull up that counter now. And he's holding 1,000 shares of this counter. So bought very recently, I think, because it's very close to the current market price. Mr. Chokalingam, his question being if he can continue to hold on to this counter or sell out. I think, Mr. Chokalingam, a big long-term story, right? So what is your view on this one?
For a very long term, one can hold, because capital market is perennially a growth story. And this company also done reasonably very well in the short span of time. So 1 year there is some risk in my view. Stock can fall even 15-20%. But if somebody has, beyond 1 to 2 years, 3 to 5 year view, very long term, definitely all the capital market related stocks would give a very decent, quite attractive return.
Okay, all right. I think we've got a caller. Murli from Hyderabad is calling us. Murli, a very good afternoon to you. Go ahead, ask your question.
Yeah, very good afternoon to everybody. My question is on Ujjivan Small Finance Bank. I have about 500 shares at an average of 38.57. So what is the long-term view? I sold a couple of hundred shares when it reached 64, 65 level.
Okay.
So I'm presuming it will touch that level again.
Okay, got it. Murli, got your question. I'll take this up with Akshay. Then Akshay, a very good afternoon to you. Your view on the charts for Ujjivan Small Finance Bank?
Yeah, first of all, good afternoon to all. So Ujjivan Finance Bank, I think overall the technical trend is pretty positive, but from a long-term outlook, you need to give it more time, minimum 1 year plus of holding. So right now on technical charts, 45 is the support base which the stock has set up, and it's setting up for the next move. It may take some time, but the possible targets you can look forward to is around 90 to 110.
Got your view, Akshay, but let's go across, take another query now, and this one's on UCO Bank. Mr. Reddy is actually asking this question because he's holding shares at 37 rupees per share. So currently sitting on a loss and holding 20,000 of them. So, he's been holding on for a while and currently, sitting in the loss, asking what he should do with this counter now. Mr. Chokalingam, we've seen that PSU rally, I think, and I think he, unfortunately, Mr. Reddy bought it at the top at 37. Would you recommend him to continue holding on to this counter now or switch out?
One can definitely hold, PSU bank like this because they are all trading around one time adjusted book value, and these banks have reduced the net NPA also substantially. So fundamentally very, very appealing, but they are not enjoying the market momentum now. So for medium to long term, one can hold, and also the industry, the credit growth is very strong. So the bank like Google Bank will definitely do well. But I'm not sure whether one can make money, decent money in the short term. But beyond 1 year, definitely it should give a quite attractive return.
All right, okay. The next one that we have is on Samman Capital. Our viewer has bought 120 shares at the levels of 160. Wants to know if this is a good time to exit or still continue to hold. Akshay, what's your view on the charts?
See, right now the stock is nearing an important resistance zone on technical charts, and the resistance is positioned somewhere in the range of 190 to 200. We need to see whether the stock manages to stage a breakout or not. It's a multi-year breakout. So if the breakout does happen, it will result in a very strong positive move post 200. So right now the suggestion is continue to hold. We will again reiterate and check how the breakout or the stock moves around 200. If it breaks 200, you can be positioned for possible target still 240.
Got it. Well, the next question, coming in now, it's on Praj Industries, and Aparna is asking us a question. She's holding 571 shares, but at 544. So currently, sitting on a loss. Asking Mr. Chokalingam, your view for the next 2 years, what she should do. It's been a very volatile counter, Mr. Chokalingam. What would you recommend?
It's as you rightly said, volatile, but also it's a very good management, good balance sheet. The problem is that, its performance is associated closely with the crude oil price movement. So right now oil prices are quite stubborn, but in 2 years, I believe the crude oil price can correct, and alternate theme like Praj can have a lot of pressures. So therefore, hold it for 1 to 2 years. But if you get any decent return of 15 to 20% from current level, one should exit.
Okay, all right. So that's the view on Praj Industries. I think we've got Venkat calling us from Bengaluru. Venkat, very good afternoon to you. Go ahead, ask your question.
Good afternoon, Mahima and Puneet. I'm a big fan, in fact, of Mr. Chokalingam. And based on his, view only, I purchased Oracle Finance, which is doing well now. I have got a query regarding now, the black box, which I bought 20 share at the rate of 761.
Okay.
Okay, I would like to have the outlook from Mr. Chokalingam for the next 2 years. Whether I can hold it now, because it has run up a lot now. And I want to know whether I can still hold it or switch over to Hindustan Copper.
Okay, all right, Venkat, got your question. I'll take this up with Mr. Choklingam. Mr. Choklingam, he says, by the way, he's a big fan. He's asking about black box. What's the view like? Should he shift to something like a Hindustan Copper instead of holding this? Is his query.
Thank for the kind words. Now, coming to black box, stock has done phenomenally well already. And alternative given is Hindustan Copper, that also trading at a very high valuation. But of course, I would suggest if black box moves up even 5-10%, one can consider selling it and then shifting to Hindustan Copper if it is available at more or less same price, because though valuation is stretched, Hindustan Copper is expanding the capacity in a big way. So therefore, that could be a preferred bet in the medium to long term.
Got it. Well, Mr. Chokalingam as well as Akshay, we let you go on that note. Thanks so much for joining in because an important conversation today, because we've seen auto sales data for the month of May has been very strong, following up from April. So we've seen 8 straight months of very strong demand post the GST rate cut. But with fuel price increasing, is the annual of growth expected to continue as well? We had a chance to get Mr. Rahul Bharti, the Executive Director at Maruti Suzuki, as well as get his perspective of what a boost that they are currently seeing on the CNG demand as well as on the EV side. Let's listen into what he had to say. We have exactly the right person in the studio, the management of Maruti Suzuki, Mr. Rahul Bharti, the executive officer of the company. Mr. Bharti, always a pleasure speaking to you. Thanks so much for joining in. Now, there are multiple aspects, right? We've seen the GST rate cuts boost demand over the last 6 months of FY26, but that seems to be continuing even in April and May, and that's very visible in the numbers for you as well. Over a 30% growth in exports as well as in the domestic market, despite the backdrop that now you're seeing that impact on fuel price hikes amongst others. If you can give us some perspective to start us off with that, how has the demand still continued, and is the customer buoyancy expected to continue as we speak?
Yes, Puneet, that's right. So after the GST structural change in pricing, and it was a great gift from the government to the people of India, we've seen excellent demand. April and May, our domestic Maruti Suzuki domestic sales growth was about 38%. Incidentally, that was also in exports. And the good part is that it is broad-based growth. Every segment for us is growing, starting from the mini segment, for example, the Alto and the Espresso, that grew by 140% year on year for these 2 months, April and May. Hatches also grew. SUVs for us is growing because we've added some very strong models like the Victoris recently. SUVs grew for us 49% year on year. So are the sedans and the MPVs also. So every segment is growing. All powertrains are growing. And you spoke about the fuel price increase.
Hikes, yes.
So far, it is probably premature to judge. But what we have observed certainly is that after the Prime Minister's announcement, that call for austerity and saving petroleum, saving forex, we've seen in the past 10, 11 days about a 40% jump in our CNG vehicle bookings and almost about 100% jump in our EV bookings. So that's very positive. And what we have also seen in this period is that when concerns on fuel price go up, customers naturally drift towards more fuel efficient cars.
Yeah.
Unfortunately, Maruti Suzuki models, any segment we take it, it's about 15 to 20% more efficient than the corresponding peer group models in that segment.
And you mentioned a very important point, right? Because the Prime Minister's call essentially to conserve and fuel, and you mentioned some numbers, 40% growth in CNG, 100% growth, of course, on a lower base on e-Vitara segment and the electric segment as well. But just in terms of that point, right, for CNG specifically, have you seen those customers that were on the sidelines also make decisions a little quicker? Or are those customers right now that you have who've booked the CNG vehicles were somewhere 50-50 between buying CNG or petrol, and with this, the decision just became very clear?
Many customers are now, fresh set of customers are considering CNG actively. One, not only because it is economical, but of course, there is some amount of environment sensitivity growth also happening. But because CNG is now a very, very convenient product. For example, our Victoris, the CNG cylinders are placed below the floor. So the boot space is not compromised. The power and the drive feel is not compromised. So with enhanced engineering and of course fuel efficiency, new set of customers are embracing CNG
as a fuel. The other aspect that what we've seen has been a big milestone for you is exports. Now, I think last year you sold about 4.4 lakh vehicles which were exported. It's a big target for you as well. Many congratulations. Over the last 2 months, though, you've seen the war happen, but your numbers aren't showing the stress right now. So is it that you are looking at alternate routes which are adding through? And in terms of your push for electric vehicles as well, I think you have one model right now with the e-Vitara. You guided for 5 by 2030 odd. But how is that launch pipeline now? Is it that you are looking at accelerating some of those key segments given what we've seen currently in the world as well as in India?
That's right. So when this war happened after a very good set of 4.47 lakh last year exports, we were slightly apprehensive whether this momentum will continue into the next year or not. So we guided that at least 25-26 export numbers will protect in 26-27 also. Having said that, in April and May, our exports have grown by 38% year on year, which is way above the flat guidance that we had given. So what has worked for us is a very de-risked portfolio. We export to about 100 countries. And the e-Vitara is an incremental export generator, which we are exporting to mostly Europe and Japan, but total about 46 countries. That has helped us incremental growth. Even Middle East has not become zero. It's just that some part of the demand we are doing through a circuitous route. We are crossing the whole of Africa into the Mediterranean and then trying to service that demand with some higher cost, which is fine. I mean, part of business. So a de-risked portfolio and incremental exports from the e-Vitara. e-Vitara is now our third largest exported model out of India across manufacturers. So that's a very big positive. And as you rightly said, for the domestic also, we will be displaying another EV in the Bharat Mobility Show in early 2027. And we will be, we are commissioning another EV dedicated plant in Gujarat with 2.5 lakh capacity starting about August to September. All that capacity will not be available on day one. It will have a ramp up, but yes, 2.5 lakh per annum capacity will be there. Today we are averaging about 5,000 e-Vitara exports plus 2,000 domestic. That's about 7,000 per month, which is a significant number given that we've entered only in August 25. But with another model and another plant, I think EV volumes will get a good boost.
So, because you know the numbers that you're giving are also very interesting, right? Almost 7,000 if I add for the e-Vitara. Even if for 10 to 12 months kind of a number, not like to like, but you will be getting 84,000 from there itself. And last year, I think from that 4.4 lakh number, it was only quite a smaller number. I think just 15 to 20,000, I think, for the e-Vitara last year. So that Philip should already cross 5 lakh for you, given that logic of electric vehicle being a larger part of our portfolio this year.
So what you're saying is that our guidance...
It should be at 5 lakh.
We wish it comes true. There is some amount of uncertainty because of the war. Fortunately, we have several geographies. Japan is our second largest export destination now. So many things are working positively. So maybe at some point of time, we'll have a relook at on our guidance.
Just, you know, one last question, because what we've seen post the GST rate cut, 8 months of demand sustenance. This year, and it is expected that your first half growth will be, of course, bigger and much higher compared to the second half, because that base effect comes through in the second half as well. So how are you looking at this year in terms of growth. I think you guided for a 10% growth, but we also have, of course, festive season coming up, and the expectation is that the demand continues given what we will see, of course, with the GST rate cuts, but also on cost will be something to watch out for. So is this one of the anticipated seasons for you this time around, and how are you looking at FY27 as a whole for growth?
See, we are putting up 2 plants within this financial year. One we have already put up in Kharkhoda, 2.5 lakh capacity. Another plant in Gujarat, another 2.5 lakh capacity. So total 5 lakh capacity. That will take us to very close to 3 million. And that's a significant jump. I have not seen many countries where a single manufacturer increases
adds 5 lakhs in one
5 lakhs in
particular
a single year.
Yeah.
Considering that one plant takes about 2 years to get commissioned. So we are, on an average, we are putting up almost one plant every year or every 1.5 years. So this is about the maximum from the supply side. If we calculate this supply side, and these plants will have a ramp up, you don't get 100% capacity on day one.
Yeah.
About 4 to 5, 6 months, you need to reach full capacity. So if we look at from the supply side, it will give us about 10% growth. So to that extent, we are constrained by supply. We cannot grow beyond that. Some amount of stretch may be possible, which we are working on. Fortunately, the value chain is secure. Our supply chain has ensured that all component supplies are in place. So from a supply side, 10% growth may be possible, maybe some stretch. And of course, on the demand side, it is slightly premature to think about the impact of these price increases. But one thing can happen. During times like this in the war, the customer transitions towards more fuel efficient cars. For example, CNG. CNG has grown for us phenomenally, and we are already seeing a 40% rise in bookings. So that way, we feel optimistic.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim.
Welcome, you're watching India Market Close and it's turning out to be a fantastic afternoon. What a comeback for the Indian markets, and it's not been an easy one. 23,500 reclaimed, advanced decline ratios looking robust. Across the board, there is a big move upwards. Of course, IT continues to be the star. Let's go through it one by one. I'm going to start with the Nifty intraday because that's going to give you an idea of how we have reclaimed this spot. You're at the high point of the day, just about 0.65% up. So in that sense, we look at it, nothing to get too excited about. But the fact that we were doing so poorly, that you've climbed 150 points odd, is really heartening. So some of that interest coming back up. Let me pull up the mid cap and the small cap before we get to the Nifty heat map and the contributors to give you a sense of what's happening there. Also at the high point of the day, 0.22% up. But you need to look at the retracement from the lows, because that's actually going to tell you the full story, not just if you see about that 0.5% uptick. And that's happened in the last 1 hour or so, where you've seen the markets coming back in a strong form and fashion. Let's pull up the Nifty heat map and give you a sense of what's happening there. I mean, it's IT all the way. When is the last time you saw TCS up 6% and Infosys up 5%, HCL Tech Mahindra? It's as if investors have suddenly, opened their eyes and said, hey, maybe we punished IT companies too much. So you're seeing a huge bump up in all of the tech stocks, and that's what's really moving the markets today. On the losing side, NTPC, Power Grid, Axis Bank, NTPC down about 3%, but everything else doing largely okay. I want to pull up Nifty contributors so you get a sense of where is that magnitude of gain coming from, and it's pretty much IT all the way, with an HDFC Bank for boot. If you look between Infosys, TCS and HCL Tech, you have about 90 out of the 205 points which are up on the Nifty coming in, and HDFC Bank pushing in with another 33 points to the index boom. On the losing side, you have an Axis and an NTPC largely, which is why this is not necessarily the whole market story. But if you look at the advanced decline ratio, you will see anything which is IT and IT allied is also booming up. So there you have it. On the NSE, 1740 gains to 974 losses. I want to see the intraday chart, please, because that will give you an idea of how this market has moved and how the definitive change in stance has happened around here. I would say around 1231 or so, where you've seen the markets now at the widest gap of the day. Let's pull up the sectoral heat map for you, and no prizes in guessing. That will be the Nifty IT right on top, 4% uptick. I mean, that's the thing with IT stocks, right? When the going is good, it's very, very good, and when it's bad, it's really terrible. Today is a good day. Consumer durables doing well. Nifty Realty has gone from the bottom of the barrel to the top three. That was bottom of the barrel in the morning. Consumption stocks, FMCG, everything coming back to force. Pharma stocks are seeing a bit of a pullback, and that is likely because of the profit booking we're seeing in Wockhardt. Healthcare also seeing a bit of a muted kind of a day where everything else is okay. The CPSE index also 0.88% down. I want to pull up India VIX. We'll show you rupee and then we'll show you Brent, because you need to see the full picture to really understand what's happening. India VIX first. Let's look at India VIX right now, and this is important. The slide about 6% down is key. We're under 16 on the India VIX. One wonders what were we so worried about for the last few days, because some of those worries and tensions seem to be easing. We should look at the rupee, we should look at the Brent, because that's what's going to give you an idea of what's happening. Rupee is strong, actually 0.25% stronger at 95.22. So that's a good scene for the rupee in relative terms. The Brent is also down at 93.15. And remember, the market now has a way of reading between the lines to understand what's happening with the US-Iran crisis and that West Asia war. Right now, we're at 93.15. We look pretty stable, all things considered. Let's just pull up the top gainers and losers on the broader markets before we get to the key factors of the day. Balaji Amines, Alkyl Amines, that entire bucket again coming to the fore. HLE Glascoat looking good today. TCS in that top BSE 500 gainers in, as is Infosys and Zensar Tech. And if you look at some of the mid-cap, smaller cap IT companies as well, whether it's a Nugent Soft, whether it's a Birla Soft, you will see all of them zooming today. On the losing side, an RHI Magnesita, NHPC because of its offer for sale more than anything. VIP had an announcement yesterday that it's going to be now not using the Carlton brand anymore, so you're seeing perhaps a bit of a reaction there coming in. Here are the triggers today: a sharp recovery in the markets, a strong recovery coming in on Nifty expiry, and a technical reversal at play post the MSCI adjustment. It's taken a full 2 trading sessions to get that out of our system. The support range for the Nifty at 23,100 to 23,250. For the Bank Nifty, support range at 52,800 to 53,200. The Nifty IT has now surged above 31,000. It's the highest level since April 22nd, 2026, and the market breadth has also improved. The rupee has weakened slightly after 2 sessions, and India-US trade negotiations continue. So these are some of the factors today. Sunny Agarwal, Head of Fundamental Equity Research, SBI Cap Securities, joins us on the show. I'm also joined by Kunal Shah, Senior Technical and Derivative Analyst, Mirae Asset. Sher Khan will speak to him in just a bit. But Sunny, I want to start with your take on what you think has changed market sentiment today.
Yeah, again, good afternoon and thanks for having me on the show. I think coming to market sentiment, I think the 2 important key events to watch going forward is obviously US-Iran peace deal and upcoming RBI policy, which is scheduled on coming Friday. I think both the events are an important event. Despite of a stalemate between US and Iran, we have seen that crude oil prices have come off sharply, and that's a positive sign as far as Indian economy is concerned. And because that entire narrative was against the India, wherein higher crude oil prices, higher inflation, putting pressure on USD INR. So I think despite of no resolution between US and Iran, crude oil prices coming off definitely augurs well for Indian economy and Indian market per se. And in addition to that, I am sure that in the ensuing RBI policy meet, there will be some measures to ensure that there is an enhanced support for USD INR, and that can lead to a positive sentiment as far as overall markets are concerned. Earnings season Q4 has been pretty robust, especially for mid and small cap pack. And there again, it's the bottoms up stock pickers market. So again, we are advising our client that any dip should be focused on on accumulating those stocks where there is a very strong earning visibility over the period of next 4 to 8 quarters. So I think it's a buy on dip market. Maybe benchmark is hovering between 1000 to 1200 points when it comes to the Nifty. But when it comes to mid and small cap pack, we believe that the momentum is still intact over there. And there are many packs where we feel that there is an opportunity to make money in a medium to long term perspective.
Okay. Kunal, let me come to you on where you see the index going. Today is going to be an interesting afternoon to get your index call with 23,500 being brought back or to the table so smartly. Usually we wouldn't reserve such a smile for 23,500, but these are the kind of days we'll take what we get, isn't it?
Good afternoon, Tamanna. Good afternoon to everyone. So I think, so whatever we are trading in that range of 23,300 to 23,800, we broke on the upside. We again came back into the range. And again, we are still trading in that range. So overall for me, Nifty, as long as it is trading about 23,200, which is the support, dips to be utilized as a buying opportunity. Today was a smart recovery, what we witnessed. And probably even for the next couple of trading sessions, I'm expecting Nifty to move higher towards that resistance of 23,800 on the higher end. 23,800 will be now a critical level to watch out for. Once we break above that decisively and have a closing above it, then probably one can see the extension of the move to a 24,500 on the upside. But from the current levels, definitely I'll have a buy approach, 23,200 as a stop loss and 23,800 on the upside. The Bank Nifty index, again, which was showing weakness, again, we have an event coming up. So I'm expecting consolidation to continue in the Bank Nifty index. 52,700, 52,800, which is the swing low, should act as a support on the downside for the Bank Nifty. And we might continue to trade in this range of 52,700, 800 on the downside. And on the higher end, the rejection zone has been 54,500. So I'm expecting Bank Nifty to consolidate, not much there in the Bank Nifty index, but it is probably the Nifty index where any dips you get could be a good buying opportunity.
That's the view coming in terms of Bank Nifty. And Tamanna, it's interesting to see how midday you've seen that good recovery that's come in terms of massive markets. Nifty, Bank Nifty, that's where the strength is. IT already was strong since morning, but this midday strength in both of this sector, in indices is something which is very interesting right now.
Yeah, we talked about that in great detail here because it's as if markets just turned around and said enough is enough. We'll wait and see if there's actually any FI positive figure coming in or new positions coming in which have talked about this. But this morning as well, we had a conversation about how PCR is showing that there will be a technical bounce back. And especially in large caps, we need to see that. I wonder what that's happening with IT as well, because tech stocks are back in the groove as the AI buzz builds and strong partnerships spark fresh comeback hopes. Jasmeet joining in. Jasmeet, I'm going to start by asking you what really has changed on ground. Market mood we can see, but what has really changed in the way IT companies are conducting themselves that the street is looking at them differently? Has anything actually changed?
Well, there are a couple of reasons why the stock is buzzing. The first one, we can see that the overall Jensen Huang's comment on the AI that's led to the overall movement in the IT. But also the second main reason is the bottoms, where after a couple of years of hitting the all-time low, IT has seen the bottom coming up, and that's the major reason why we see the recovery coming in the market as well. Now, if you look at the overall key triggers in the market, we do have the Jensen where they reject the overall AI threat for software firms, while he also mentions that AI will create the largest opportunity ever when you look at the overall software space by giving out the overall solid output. We also know that the IT is well placed when it comes to the AI partnership, given IT has been doing multiple partnerships in the past. We have seen Infosys with Anthropic, and also we have seen TCS signing new deals with the AI partners to inculcate the AI in the system. Further, we also had commentary by the management stating that the AI creates a lot of agents, but there's a huge gap between AI agents and what enterprise can actually do. And to fill that gap, we need IT players. Now, when you look at the other key trigger, we did note that the Q4 was quite stable for the companies, and numbers which came in were in line with the estimate. But the outlook had remained weak. Now, given this change in the overall commentary in AI, we can expect the outlook getting better going ahead. Further, we also know that the recovery seen in AI demand momentum is also something that's taking the overall momentum, given Anthropic done a recent funding round where they see a lot of AI going ahead. Further, Nvidia also came out with a positive result and a great outlook commentary as well. Now, in terms of the brokerages, they have remained bullish on AI, and they've also mentioned that the overall AI sell-off, the AI-led sell-off which we have seen recently, has been overblown by the IT stocks. So let's quickly understand the overall seasonality in the month of June of how IT has performed. While 7 out of last 10 years, Nifty IT has ended in green on the back of that positive momentum, but we also know that on the 5-year average, they have given an average return of 4% in terms of June month. While June has just started, it's been a couple of days, Nifty IT is already up 9% and we expect the momentum to continuing forward as well. Now, if you look at the key performance of the stocks, given the lows which we had seen in the month of May, we do note that Nifty IT has gained nearly 14% from the lows which we saw in the month of May. May 14th is a date when we saw the Nifty IT hitting the bottom, and from then we saw the recovery coming in. Now, in terms of the overall TCS, has gained 9%, while HCL Tech is about 10%, and Infosys leading the chain by gaining 15% highest among the large caps. When we look at the mid-cap picture, we also know that the Coforge has gained the most. It's up about 42%, and in terms of return potential for Coforge, it nearly stands at 6%, the lowest in the mid-caps, which would mean that the Coforge can be the first player among the IT companies to see a re-trigger going ahead and a re-rating which can be expected for the Coforge. Now, when we look at the other key valuations, while the valuations still remain below the 5-year average for all the large-cap players, if you look at the valuations being between 24 to 29, but the current valuations are still below that. But Tech Mahindra doing far better, the highest valuation compared to the top 4, but still a wait and watch of how does this momentum continues. As we have seen in the past 18 months to 24 months, that the IT gains, but then there's sell-off coming up. So this rally is something to watch out for of how this continues going ahead.
And I think which is why our stock of the day is also from the IT pack. Infosys. Now, why Infosys is continuing its rebound, supported by strong AI traction and steady earnings. Valuations also remain below historical averages. With the recent up move, the stock has gained 15% from recent lows. When was the last time, Jasmeet, we saw this kind of an up move in Infosys?
Well, Tamanna, as rightly said, Infosys becomes the stock of the day on the back of those multiple reasons, as you mentioned. And the last time while Infosys saw this rally was in the month of May 2025 last year. And that rally had come on the back of that India-Pakistan ceasefire, which we saw with the entire market had rallied, and Nifty IT was about 7%. But apart from that, we really did not see the Infosys gaining so much without any trigger. While we did note that in the month of September, the Infosys was about 5% on the back of the buyback news. So let's quickly understand what's driving the rally for Infosys. Firstly, Infosys becomes a top leader in terms of the AI enterprise implementation, given it has almost 90% of its top 200 clients using the AI. While the second reason would be the overall Q4 earnings. It has been terrible for a lot of IT companies, but Infosys did have a stable earnings, but the outlook was weak, which can be noted on the back of that overall AI fear that the company also saw impacting the top line. While in terms of valuations, even those remain at a multi-year low, given the stock has already rallied 15% in last 3 sessions, but the valuations are still below the 3-year and 5-year average. Now, in terms of the key events, where the Infosys gained about 5% was last in September 2025, which jumped about 5% on the back of that buyback news which we saw. Further, we also saw the Q3 was quite positive for the company, where the overall Infosys jumped by 5%. And the last one was today, which is about 5.6%. So let's quickly understand what Infosys has been doing in the AI space altogether. While Infosys had recently partnered with overall Anthropic, and where they have seen the deal momentum continuing, further Infosys is skilling up the employees in terms of the overall AI touch as well, while FY26 revenue guidance, which company raised, also creating a positive momentum for Infosys. Now, when you look at the other key triggers, what Infosys remains in focus is the overall valuations. If you look at the key valuations for last 3 years for Infosys, they currently stand at roughly 17.7% the current valuations, and the 3 years at 24, while the 5-year average is at 27 odd times, which is below the current valuations, and we can expect the stocks rallying and matching these valuations, as given the outlook will get better from the Q1 onwards. Now, in terms of the stock tracker, we do know that the Infosys has gained nearly 15% in last 3 to 4 sessions, and further the current and potential for the stock remains at 16% for next 1 year. So although we do make a note that the Nifty IT has taken a positive shape, but Infosys being the top gainer on the back of that AI-led news.
You know, it's very interesting. Thank you, Jasmeet, for that. Tamanna, if you go to see in terms of the performance as well, yes, the previous one was in Jan 2026 in terms of actually getting a 5% up move, but that was on the back of earnings.
I think
the
May
previous
2025 is what
that was the previous one. So January 2026. Before that, it was September 2025, and then before that was May 2025. So 3 instances where you've seen the stock jump up, but that's mainly in terms of either earnings or buyback announcement. In fact, also let's take a quick question with our guest.
No, we need to go to this embargo.
Okay, we have an embargo of Godrej Group.
So Godrej Group has launched their wealth management business with an aim to reach 1 lakh crore AUM by 2031. Listen into that conversation. Piyush Shukla caught up with Pirosha Godrej.
I would want to start with today's investment new platform that you've announced of wealth aiming around 1 lakh crore AUM in the next 5 years. What's the sort of capital you will put in, and what is the strategy behind coming into the wealth business, which is sort of crowded at this stage in India?
Great to be with you. Yes, we're very excited to be launching this wealth business today. Financial services is actually an area we see a huge amount of opportunity in India. We entered financial services about 5 years ago through our lending businesses. We now have both an NBFC and a housing finance company under Godrej Capital. And we felt the wealth management was a logical next step in our financial services journey. You rightly stated our goal for the next 5 years is to create an AUM of 100,000 crore in the wealth space. There is a lot of competition, but there is at the same time a lot of opportunity. There's a lot of demand. I think India is a country that's doing very well. If you look at the country's economic growth in the last decade and the expected growth in the next decade, and the kind of wealth creation that will result in, the kind of financialization that will result in, we think there's going to be huge demand for wealth management services. And we'd like to bring the Godrej Group's philosophy of trust-based, long-term thinking to this industry and combine that with cutting edge tech and wealth management opportunities and services.
Sure. What is the sort of capital that you will invest in this wealth management business? And other than you already have a lending subsidiaries, NBFCs, HFCs, now wealth, what is the next goal for you, or the likelihood of which business you will enter next in financial services segment?
So overall in the financial services space, counting what we've already invested and what we expect to invest over the next few years, it'll be about 7,000 crore in total. A lot of that has already happened in the lending businesses. If you look at the wealth management space, it's actually very asset-light, fee-generating business, so there is no great investment expected. Largely the investment is around technology on the one hand and people on the other. So we think the investment at most would be around 500 crore in the wealth management business.
And apart from wealth, which are the other segments you're looking at?
I think financial services, of course, has a lot of opportunities, but our approach quite intentionally has been to go step by step. We don't want to have a financial services conglomerate launched all at one time. We want to prove ourselves in each of the verticals we enter. We're very happy with the progress we've made on the lending business side. We think that business is scaling extremely well and has a lot of continued opportunities ahead. So that will be a big focus. Wealth management in and of itself is a huge opportunity. So we want to prove success here. We do think there's some allied businesses around wealth management, like asset management, that it will make sense to enter, and we do expect to do that over the next few years. But beyond that, I think we'll play it by ear and see how our performance is in each of the existing categories.
Your NBFC has gained quite large AUM by now. What is the outlook that you would give in terms of listing of Godrej Capital?
So I think Godrej Capital, we're clear we want to list within the next 5 years. So by March of 2031, we would like to list that business. Exactly when between now and then we do it is a little bit dependent on markets and how the business performs. But towards the later stage of that 5-year period is when we expect a listing.
Now we have you, so I need to ask you about the realty sector as well. How are you seeing the demand? We have seen in Mumbai record number of flats being sold. I just want to understand in terms of pricing as well, how are things panning out?
I think the real estate business is continuing to do very well. We had in the fourth quarter of last financial year our best ever quarter from a sales perspective, from a collections perspective. We've also had a lot of business development last year. So that is new projects locked into the portfolio. Many of those will be launched this year. We have some launches underway currently. Early signs seem extremely positive. So despite the global uncertainty and other things, demand seems to be holding up well. We had given a guidance for the year of achieving 39,000 crore of bookings in that business. We seem well on track to do that.
Any inorganic growth that opportunities you're looking at this stage?
No, I think if you mean in the real estate space, I think the focus really is on organic growth. We already have very strong teams. We have a strong brand. I think we continue to acquire land either through outright purchases of land or through partnerships with landowners. But I see that largely as a business that will grow organically. We have, in some of our other businesses, looked at inorganic opportunities. So, for example, in Godrej Consumer Products, we recently made a small acquisition of a brand called Mushtaq, which is the number 2 player in men's face wash. That business is doing very well. Just entered Godrej Consumer Products about 6 months ago, but initial progress is very strong.
Okay. Nothing much happening with the stock, but remember 2030 is 2032, if I'm not mistaken, is when they plan to list this part of the business. Godrej industry is down 3%. The market, though, is in a whole different mood. And Sunny Agrawal, we were coming to you on the whole IT story. Would you buy into this up move right now? Are you convinced that something is convincingly changed, or actually, tangibly changed for these same companies that till a few days ago everyone was saying ki inka kya hoga?
Yeah, definitely, I think it's more of a mean reversion. So we have seen a very sharp correction on as far as valuations are concerned. So now, as discussed very aptly, that right now the valuations are below the 5-year mean, and the reason for that is obviously the slowdown in earning growth. So we have seen a very healthy double-digit kind of earning growth between 2020 to 2024 period post-COVID, and now with an deflationary pressure because of AI, the earning growth, at least for a tier 1 IT company, is going to be in the range of 3 to 5% for FY27, and for maybe tier 2 companies in the range of 12 to 15%, with the likes of Coforge, Tata Tech, or First Source Limited likely to deliver a slightly better mid-teen kind of earning growth. So definitely valuation is a function of earning growth. In case the concerns related to AI related deflation is something which Street is able to digest, then we may see a continuous uptick in terms of earning valuation multiple upgrade. But one has to keep in mind that FY27 is likely to be a muted year in terms of earning growth. Maybe selectively one can look forward to companies from a mid cap pack like Coforge, which has the capability to embed AI and offer a better solution to its clients. And ultimately, the winner going forward will be the company which is able to create value for the client in terms of cost takeout deals or in terms of adding value at a significantly lower cost. So few winners will definitely emerge going forward. I think it's still a 3 to 4 quarter away where we will get a clear winners going forward. The recent deal of Wipro with ServiceNow definitely is a clear indication that at least IT companies are inclined towards offering an AI bundled solution to its client, and that is something which should aid better earning at least for FY28, not so in FY27. So maybe valuation comfort is something
Sunny,
which is driving the value. Yeah.
So Sunny, basically what you're saying is we still have to wait and watch for the next 2 to 3 quarters in terms of sustainability post that, but there could be clear winners here as well. Stay with that. Kunal, coming to you, your top picks at this hour, number 1 and 2, anything that you like in terms of momentum picks from the IT pack as well, with the rally that's coming in over the last 2 trading sessions?
Yeah, see, I think definitely there are 2 picks from my end. One is from the IT pack. So let's start with the IT pack only. The first stock what on my radar is Tata Elxsi. So again, Tata Elxsi has been a good underperformer, and now we finally have seen the double bottom that has been formed on the technical charts, and now the recent resistance, what was there around 43,000, 4,350, 60 zone, that has been taken out decisively with volumes. So again, there's now a fresh leg of up move is likely to begin over here, and we expect 4,300 to be the stop loss on the downside, and on the higher end, I'm expecting targets of 4,700 to 4,850 on the upside. So Tata Elxsi is my first pick on the buy side. Second is SRF. So again, SRF seems to have completed a good correction, and now we are seeing some smart buying coming from the lower levels, and the stock has again reclaimed its short-term moving averages, and it's just tad below its 200-day moving average, and I'm expecting a breakout over this on the upside. So I'm expecting a good change in trend into the stock, so good level to accumulate. So SRF is the buy from the current levels with a stop loss of 2644. and looking for targets of at least 2,900 to 3,000 on the upside.
Okay, let's talk about another space which is showing a lot of action. Pull up Balaji Amines, pull up Alkyl Amines. Both are in focus. Channel checks are telling us that there's some price hikes which have happened. That's why you're seeing a 13 and 15% hike. We should actually show a split window with both the stock prices as well. While we get Varsha in to explain what's happening. Varsha, what's the story with the Amines?
So, according to our channel checks, 35 to 40% of price rise the amines have seen this year, which is a sharp, rise in the prices. This is across all amine products. Now, we have also seen the rise when it comes to the monthly price charts as well. So, monthly increase is also strong when it comes to the prices of these amines products. Well, prices are up 20 to 13% month on month, and momentum is clearly, turning positive for the whole amine sector. Now, what are the key triggers why we are seeing a huge price rise over here? One is, of course, the supply shortage from China and Middle East, and the global supply is actually the global supply disruption is actually tightening the market as of now, and hence we are seeing the sharp uptick in prices. Just to give an example, the product, for example, EDA, the prices have doubled since March, now around $3 per kg. Earlier it was almost $1.5 per kg pre-war, the rates that I'm talking about. Now, of course, why Balaji and Alkyl are in focus? Because this will of course benefit from the higher prices, which will lead to a better realization, and of course the better margins and operating leverage will also kick in, and hence you'll see that in the financials going forward.
Thank you for that, Varsha. Alkyl companies, in fact, post earnings as well have been in focus. If you just pull up the 1 month chart of both these companies today, yes, 13 to 15% is the kind of surge that we are seeing. But if we can just have a 1 month chart of individual companies, you'll see the spikes that did come in. There you go, 51% is the kind of upside that you've seen on a Balaji Amines. And if you pull up a Alkyl Amines as well, 20%. I think Alkyl still has a catch up to play there. Sunny, any views when you're talking about amines companies? Because you're talking of channel checks which are indicating, that there could be price hikes that could be on the annual.
Yeah, things seems to be getting better for chemical companies. At least Q4, we have seen a few certain pack among the chemical, like fluorine-based chemical or for the amine-based chemical companies have reported a decent set of number. At the same time, they have alluded to the challenges regarding the global supply chain, and that is something which continue to remain overhang on the overall chemical as a space. But in case there is a price rise of 15 to 20%, definitely will augur well for all the amines player, including Balaji as well as Alkyl. Seeing that volume growth is something which will be slightly better in FY27 as compared to FY26, and to back it up with an rise in prices, definitely earnings seems to be will be witnessing upgrade for FY27. So need to see whether the price rise is sustainable going forward.
Okay, so that's with regards to where mines companies go. Kunal, on the charts again, 13 to 15% kind of move in today's session. Would you still be a buyer, or would you say after the kind of run-up that we've seen, this is the time to book profits and stay on the sidelines?
I think if you're already holding it from the lower levels, then definitely time to book some profit and continue to hold the rest of the position. Fresh entry also you are taking from the current levels, then I think a little bit of dip would be a good buying opportunity. 1890, this is for Balaji Amines. 1880, 1890 has been a good demand zone, and which has been the previous swing high for the stock as well. So that will be a support on the downside. And if the move continues on the higher end, the earlier rejection zones were around the mark of 2300, 2350. So I'm expecting a move at least towards the mark of 2300 on the upside.
Another one that I want to check on, and Kunal, I want to know what you think about these on the charts. A Newgen Software, a Hexaware Tech, a Birla Soft, let me add to it. Along with the frontline IT companies, you have the entire space which is on fire today. Would you look at profit booking in some of these, or more opportunities coming in?
I think just the pullback has started into these counters, so you will have some more moves continuing here on the upside. So continue to hold, probably more 4 to 5% is what you can see in the very short term.
What would be the view on a Walkhart?
So Walcott has already seen a very good run up on the higher end. So definitely, if you're holding from the lower levels, then it's definitely a book profit. Even if you get any technical bounce, even from the current levels, since last 2 days the stock has been down from 2400 towards the mark of 1968. So even if you get any technical bounce, could be utilized as a good opportunity to at least book profit. You can expect the stock on the downside to again come down and test the support zone of 1600, 1700 on the downside.
Okay, we're going to take a very quick break. Just look at what's happened to markets before we go into that break. We're going to come back and get a take on that as well. Shaving off a lot of their gains. Just as we were beginning to celebrate 23,500, you have seen a dive over there to some extent, about what, 0.4% off or 0.3% off, which has gone off from the markets from the day's high. But you are seeing some profit booking coming in. Clearly, it's tough for this market to keep up those levels. The Bank Nifty also dipping into the red. Same with the mid cap 150 and the small cap as well. We'll take a very short break. We're coming back with BTSD ideas after the break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom.
right, let's go across now to Osho Krishan, Chief Manager, Technical and Derivative Research at Angel One, and Sudeep Bandupade, Market Expert, joining us in this leg of the show. Osho, I'm going to come to you on index levels because the mood has changed so many times just during the span of this one show. We want to know where we're standing right now. Where are you seeing the Nifty?
Very good afternoon, Tamanna. Firstly, thank you for having me at the show. Well, yes, no doubt today we have witnessed more of a roller coaster kind of a ride in today's trading session for Nifty and Bank Nifty both. But for Nifty, the technical structure still depicts a kind of a bleak outlook. So until there will be a strong momentum above the zone of 24,000, the market will decide to have a sell on rise kind of a scenario. But today's candlestick pattern is quite a reversal kind of a signal. So today will be a first day of reversal. So we will be waiting for another trading session that if tomorrow market can see some kind of a strong momentum, then from here onwards we can change the setup. But as of now, I'm having a view of sell on the rise. 23,550, 23,600 is a very strong resistance for Nifty. Even that is the 20-day exponential moving average. So better to stay cautious at current market scenario. But again, today's low and opening both are approximately around the same zone. So 23,220 odd level is a very strong support level. So any breakdown below this can again reinstate strong sell-off in the market. So as of now, maintain a cautious approach. A breakthrough above 23,600 can only give some kind of buying traction in the market. Else utilize all the bounce to go short in the index.
Osho, good afternoon. Would this mean that you have actually short calls in terms of today's session? Because till the time we don't move above those 600 levels, you are staying cautious. Any sell calls?
The overall stock specific front, I am having a kind of a contra view on many of the counters like index in IT, in some of the consumer durable space. I am having a contra view because majority of the counter are at very strong support levels. So again, as I mentioned, that today's low for Nifty is also very crucial because this might ignite a kind of a reversal in the coming period. So today I'm not bearish in the market, but yes, if this continues, then again we will be having a short view in overall or benchmark indices. But for the stock specific front, I'm having quite bullish view in some of the counters. First counter which is looking very positive to me is SCI, Shipping Corporation of India. Currently it is now at 302. I have seen this counter when it was around 296. So the risk reward is not quite favorable at current levels, but still it is having a strong momentum, and I'm expecting 309 to 312 to be seen in the next trading session. So this can be seen as BTST bet. 295 should be the stop loss. 309 followed by 312 is the target that one can expect in BTST.
Okay, so that's the BTST calls coming in there. You know, before I go across to Sudeep as well, let's actually go across to Varsha, who's standing by with the Acme Solar in focus. Let's pull up that one on the screens because they've done a QIP announcement. They are looking at expansion as well, but there is a bull versus bear case scenario building in up over here because the company is a recent listing. They have raised good amount of funds there. The stock now seeing around gains of 8-9%. Varsha, over here, number one, is this kind of gain warranted on the back of the announcement that they've made? And if you have to look at from the time the company listed to now, how have they been in terms of their expansion plans, in terms of utilizing the capex and the money now that will be coming in?
So, you know, one thing, so I'll be talking about the bull points wherein why this QIP is, you know, beneficial for Acme Solar and why Street is actually, you know, giving that benefit of doubt, and we'll also talk about the concerns that investors might have to this counter. Starting with the bull case, of course, the QIP, you know, the main reason for this QIP is to reduce debt and clean up the balance sheet. So this will help to reduce the debt because company has a huge debt currently on balance sheet. So this will help to clean up the balance sheet. But you know, as Hiral was mentioning, the IPO came in November 2024. Look at the share, the now QIP is at 279. No returns till now in the last 18 months, and that's what is concerned when it comes to investors. But you know, the good point over here is that the QIP was actually needed. You know why? Because the projects, because if you see, the projects funded will have 80 to 20% of debt to equity ratio, and hence what will happen, the fresh equity will help maintain that healthy capital structure, and hence people are rewarding to this QIP. But margins may fall once the competition kicks in, considering this space a hugely competitive one. Also, talking about the battery storage, one thing is that, because the next leg of growth for this company is actually battery storage push, because company is expecting 1,000 to 1,200 crore of capex, and this QIP will help to inch up that capex and to augur well company for the next leg of growth, which is BESS, where everyone is bullish on. But BESS means more capital requirement, and investors are fearing that more dilution may come in. Now moving on, talking about the QIP again, which will actually lower the cost of funds for the company, which is currently at a higher level. And again, lower cost of funds means easier wins, easier new project wins, and hence people are rewarding this QIP. But again, this QIP is termed as a forced one and not an optional one for the company. And lastly, the QIP will also improve compliance and governance. And why I'm saying this, because this will meet promoter holding norms, which is as per the SEBI norms, and which will improve compliance and governance for the company, and hence the dilution is expected when it comes to this QIP. But sector has too many players, and oversupply is the concern when it comes to the overall renewable energy projects. But overall, I would say this QIP was necessary, considering the capex that the company has, the huge debt that the company is sitting on, and will help to balance that debt to equity ratio, and will also help to bring down the cost of funds.
So, I think this was a good candidate for a bull versus bear, because for a stock to go up to this extent after a QIP is interesting. Maybe they're good investors that are coming in. 8.5%, 9% up actually right now. So, if you heard Varsha's entire description on the bull case and the bear case, what do you make of an Acme Solar?
Well, I think they didn't have much of a choice. They had to somehow raise funds. The balance sheet needs to be cleaned up. Debts need to be reduced. And I think the options were very limited. So they had to come up. That's point number one. Point number two, I think the fear that the margins may get further reduced going forward because of competition, I think it's real. And, that I think investors need to factor in, because there is too much of competition in this space. Having said that, post this Gulf War, there is a tailwind on the renewable energy space, and that definitely will aid all these companies going ahead. And as far as the QIP is concerned, I don't know the investor list, but I suppose that they have been able to attract a good bunch of investors, and that's probably the market is giving it a thumbs up.
Okay. We saw a sharp rebound in markets today. Just pull up the Nifty, maybe off its highs of the day, but doing okay. Now, what was that smart rebound for? What were the key reasons? Sharad joining us with a bit of profit intelligence. Sharad, what are you picking up? What are the reasons for this change in mood? Because some of the factors like a benign rupee, Brent looking okay, VIX not that dangerously poised, were there from the morning. But there seems to be a change in mood.
Exactly. And 2 days ago, Tamanna, we had the MSCI adjustment impact also. It's likely that some folks in the industry told me that on the first or second, there might be some reversals. And right now, there is a reversal at play. And IT stocks have also come in where they are giving strong momentum. What are the key reasons? Remember, there's technical reversal at play, but also there is volatility since it's Nifty expiry. Markets are recovering from their oversold positions as well. And if you look at it, the normalization of trades after the MSCI adjustment is likely expected to be there, especially for the institutions. Now, of course, strong momentum in IT stocks is also aiding Nifty. So that is something which we'll be watching out for. Rupee, as we discussed, it's near that 95 levels. The low was 97. The positive developments expected, especially in the US trade negotiations. If that happens, it will give an impetus to the markets, largely under-owned in the emerging market basket. And the FI shorts I checked is the highest in the last two series, 90%. So you can expect a minor short covering. Also, apart from these key triggers, the important levels to watch out for, this is the level 23,547 on MSCI adjustment day. That's May 31st. The 52-week low is at 22,331 and the 52-week high levels is 26,329. So these are the important closing levels of the Nifty in the recent times. Also, the recovery, will it sustain? Analysts are saying it's a sell on rise. Also, overall, the chart structures, they are looking a bit negative right now also, even if there is an up move, and the US-Iran dialogue has still hit its stalemate. So no major support is coming in globally as well. But there are two important triggers you should know. First is the RBI MPC decision, that's on Friday, how the guidance, or in case any rate hike or you could say rate change happens, that's something to look out for, in the US-Iran dialogues and its results. So these two are the important triggers as the Q4 earnings are over. But net, it looks like a technical reversal. But remember, today is expiry at play also, so you'll have volatility over the next 20 minutes.
So basically, many reasons, and anything can happen next. If I were to put
you have to look around everywhere. You know, it can be anything that can let your markets go haywire as well, or up and down.
Yeah, I mean, because look at VIX right now. It's looking so calm for a volatility index. Pull up the India VIX. Look at that. I mean, below 16, about 5.5% down. Nothing really bothering the markets, but there is a lack of clarity of what could work and what could not. What do we know for sure is how the market has performed, or India Inc. has performed in Q4. And Sharad, stay on with us because you put together this Nifty scorecard, right? But how companies have performed in Q4, and the earnings have actually been better than most expected.
Well, that's right. Overall, if you look at the Nifty's earnings, it has been better than expectations, and largely the war impact was there in the last week of March onwards. So basically the impact has not come in the financials of the key companies. But let's look at the scorecard of the 50 companies we are tracking, out of which 9 companies had, they beat the street estimates. 18 of them were in line, and 13 of them, you could say, had missed the overall numbers. But remember, beat and in line, you add it, it's more than 50% of the Nifty index. But let's look at the stocks, the outliers. Coal India, better realizations and volumes was there, a very good earnings surprise coming in. The second stock, which is a good outlier, was Adani Ports. FY31 targets had started coming in, especially on the higher ROC numbers. Third stock, focus is Nestle, a very strong beat coming, especially because of higher ad spends as well. And this time, FMCG stocks did really well. Tech Mahindra, for the 10th consecutive quarter, there was margin expansion at play. And during that time, of course, there was stress on the IT. But look at the reversal right now. Eternal also makes it to my list, where the company has beaten analyst estimates on profitability, and the quick commerce segment, that's where the losses have improved. But what's not working? ONGC, let's get that out. And largely they missed EBITDA estimates for the 7th consecutive quarter right now. So there is definitely a problem here. Also, the next stock in focus is Reliance. Over here, the story almost is the same. Earnings mix largely owing due to the weak oil and gas performance. Next stock in focus is Dr. Reddy's. There was a sharp fall in the US business, and that is why the numbers came weaker than estimates. Also, NTPC, it's a largely regulated business, but nevertheless, there was a lower power generation business, and it had actually significant missed the street estimates. And the last stock in our radar is Max Healthcare. There was a surprise downtick. Street was not expecting this. This growth was impacted because of adverse case mix and the oncology segment decline. So these are the important stocks which should be in your radar, and the entire report card of the Nifty index.
Okay, thank you, Sharad, for that. Very interesting names here. In fact, let me go to Sudeep on this one. Sudeep, the top outliers who beat estimates that Sharad took us through, with the way the stocks have performed as well, would you actually like any of them, like a Coal India, Adani Ports, Tech Mahindra, Nestle, or an Eternal? Or the ones probably which have missed estimates where the commentary could be positive going ahead?
I do definitely like Eternal. I've been liking it for quite some time, and the results were definitely a positive surprise. Look, the way they have improved the performance in the quick commerce segment is commendable. Food delivery, of course, they are making money. District, which is their book by show competitive app, they are doing all right, but some time for profitability to come. But the quick commerce, which is the volume wise the biggest segment, I think improvement there is commendable. Also, I must say that they have become an Indian owned Indian managed company, which helps them to maintain inventory and sell which does help the quick commerce segment. Unfortunately, their competitor hasn't been able to do that because the shareholders there haven't agreed to that model yet. And that is definitely a competitive advantage which Eternal is enjoying today. So we do like Eternal quite a bit. Apart from this, I think amongst the companies which I do like, and results also came better than expectation, Adani Port. I've been liking it for last couple of years at least, if not more. And I believe there is a strong case for buying Adani Port from a long-term portfolio perspective. The companies which have underperformed, I think Reliance, there is a case for things improving going forward because oil and gas, it was extreme volatility and challenges due to West Asia conflict. So obviously, things were under pressure. The Geo platform as well as the retail did well. So the new businesses did well. The traditional businesses, because of volatility, because of oil price mix, I think things didn't work out well, and things can improve going forward.
Okay. Osho, what are your BTST ideas?
From here onwards, I'm expecting the IT counter, which has been performing very well. So there are some good technical setup in the IT space. So from IT counter, LTM is looking very positive. It has made a very strong double bottom formation on a very short term time frame. So this can be seen as a BTST bet. 43.40 is the current market price. One may look for buying at current levels. 42.50 will be the advisable stop loss, and 45.60 to 4600 will be the expected target in BTST for LTE.
Just on your screens, I was just talking about this. Alkem Labs has launched semaglutide in single shot syringes at a price starting at just 350 rupees. I mean, I was just looking at where the prices of semaglutide from a consumer point of view have gone from less than a year ago. They have crashed completely.
Yeah. See, just one caveat over here that there is a differential in terms of pricing when you talk about oral, syringe, pen, reusable pen. But across categories, if you have to do a like-to-like comparison, they've crashed to this extent. Now the question is, what happens to the innovator? What happens to the ones who've come in advance? Because not that they will be able to garner that kind of market share. The price point that it is coming at right now are those companies who will be able to actually garner that kind of market share. Maybe margins will be under pressure slightly with this pricing, but market share is going to be the key for names like this.
I have a different question. Is the semaglutide market that big in India and growing at that pace where you have so many players coming in and this extent of competition? Can it really sustain? I mean, I don't know if you've looked at this space closely, Sudeep, and what do you make of an Alkem Labs? Alkem was anyway under pressure today because, again, an OFS, if I'm not mistaken, coming in for the company. But this whole semaglutide space and the fact that Alkem Labs is now going to launch these single-use syringes at just 350 rupees.
Well, very interesting. I mean, the pricing, of course, as you rightly you were exclaiming, I think it's really cheap. And of course, the competition is going to be intense as far as Indian market is concerned. But I think still the scope is not very small. Scope is, there's a significant scope. Of course, because of competition, it will get divided between multiple players. And I think no single player will have a sizable market share. At least that's how things are looking as of now. But it's definitely a big opportunity. And I'm sure Indian companies are gearing up to take that opportunity. But your point is valid. Nobody will make big money out of this in India.
I'm wondering if so many people are using semaglutide as they're thinking. Is that market so big? So that is a whole different story as well.
And the interesting part over here, it's Natco Pharma, whose semaglutide version is the cheapest. Alkem is at around 350s. I remember Natco was at around 325
per shot.
Per shot now. I don't know whether that's going to be an oral pill or a syringe, but they are the cheapest so far, to my knowledge. So it's interesting to see how fragmented this market is going to be from here on, and it's only by prescription, as per what they're saying.
Yeah, but again, so on the other side, your regulators have come in and told doctors, please don't go so easy with prescriptions, prescribing in left, right and center. We have a slightly more conservative approach. On the pharmaceutical side, Osho, and I don't know if I asked you about Wockhardt, but Wockhardt seeing a lot of pressure today. Any other pharma stock that you like? What do you make of Alkem?
See, firstly, for Alkem, this counter has been a kind of a good gainer in the recent period, although the counter has been into consolidation from the past 1 month, but overall it has seen some kind of a strong recovery and is still above the sloping trend line. So I'm expecting that till that time it is hovering above the zone of 51.50, 51.40 odd levels. The counter is looking quite well on the technical fronts, but the momentum will only increase once the counter moves beyond the zone of 5600. So 5600 and 5140, this is the range where I'm expecting the counter to be, and any breakthrough from these levels can provide a strong momentum on the either side. But technically, I am quite bullish in the counter, and a breakthrough above 5600 can provide another 400 to 500 points of upside movement in this counter.
Okay, and that's Alkem Laboratories. Sudeep, a quick view when it comes to pharma majors like Wockhardt as well. We've been talking about Zenith, and the question over here is a novel innovation like a Zenith. That's what has actually got a Wockhardt surge to this extent. Yes, there is profit booking coming in today, but what are the valuations actually pricing in? And to add to a Wockhardt, you have a couple of other names like Sun Pharma or the likes of even a Lupin who are going big in the biosimilar space. How are you looking at this entire sector and your view on, your top picks?
Well, Hiral, I do like this space, and I do like what these companies are doing. You are 100% right. I think Sun has already moved into a different category. 70% of its revenue will come from patented products and branded products. I mean, I'm talking about post-organ merger. So I think they are in a completely different league altogether. It's not the generics and APIs and all that. Now they're into branded patented area. I think Wockhardt's this new Zenith, I think is a right way, because now we are moving into branded patented products, and Indian pharma companies, after having matured over the last 10-15 years, are getting taking steps in that direction, which is where a lot of money is made. If you look at the global pharma industry, 90% of the money is made by the guys who discover and who introduce the drugs. I think that's the way to go, and matured pharma companies should always try that. So I think it's quite commendable that Sun is doing it. Wockhardt has started doing it. Lupin has been doing it. Glenmark did and then sold one of the molecules, and now I think they are trying to do themselves something else. So Indian pharma, the matured ones, will go that way. It's bound to happen. But I'm not, undermining the work the generic and API and other guys are doing. That also is good work. They are also making money for shareholders. But the trend definitely is towards branded patented products, and that's what we are going to see more and more.
Okay, but what is your top pharma call, Sudeep? Give us a name.
Well, Sun Pharma is my top pick. I think Sun Pharma is my pick.
Okay,
yeah?
Sun Pharma it is. All right, Sudeep, thank you so much for joining us. Osho, thank you for joining us. Quick story before we close off the markets. Adani portfolio FY26 CAPEX has reached 1.53 trillion rupees. There's a statement out from the company. Puneet joining in with more details. Puneet, what are you learning?
Well, thank you for that. Just some key highlights. As you mentioned, 1.53 lakh crore rupees is the capex that the Adani Group has done at this point of time. That's roughly around $16 billion. When you also look at that, 80% of those were directed essentially towards core infrastructure platforms that have been spanning across energy, utilities, transport, as well as logistics. And now that asset base has now essentially increased to almost 7.8 lakh crore rupees. They also spoke about the FY26 EBITDA number that's come in at an all-time high of almost 94,000 crore rupees, of course spread across the listed universe companies as well. And balance sheet also has improved to 3.3 times the net debt to EBITDA. Their target is roughly 3.5x at this point of time. Finally, just a couple of key highlights on the cash flow as well. Cash at the FY26 level was at 55,000 odd crore rupees, with the borrowing cost declined to 7.8% in FY26 as well. And now most of all Adani Group companies now are carrying domestic ratings of A- or higher at this point of time. So those were just some of the key highlights going across capex, cash flow, as well as the net debt to EBITDA target for the companies.
Okay, thank you for that, Puneet. All right, we're closing off with some
23,500, you know, that is the interesting part right now, right?
We started the show at 2:30 at 23,500, saw that big fall and we're back. Let's pull up the intraday. It's been quite an exciting afternoon, I must say, with all of that rock and roll. So a little bit of a dip here, but you're closing close to the day's high, which is great. 23,556. I think was the day's high point. Let's pull up the Nifty heat map very quickly. We just have a couple of minutes before we go into the closing. It's all IT all the way. 7% on TCS.
Wow.
This is after the stock got drubbed despite decent results. It had a drubbing, Infosys had a drubbing. Nothing was spared after the results.
Yeah, I mean, your valuations are absolutely low, but the rebound from that 52-week low is spectacular in terms of IT majors. You have the Adani Group companies which have played a catch-up in today's session as well. And
after
the
that
plans,
announcement.
exactly, very
and
strong plans that are coming
here.
in.
You're watching this on NDTV Profit.
And you have Tata Group companies also which are doing pretty well, from a Tata Motors to a Titan to a Trent, all the three in the top gaining space, and a Tata Consumer today.
Okay, NTPC, Axis Bank continue to be your top losers, but today is frankly a day for the winners. 23,514 as we go in, closing on the day's high. I want to pull up the mid cap and the small cap very quickly. We'll look at the sectoral indices as well, and you have the Nifty mid cap also coming back close to the day's high.
And just let's pull up the small cap 250 as well, because there you go, a 0.6% absolutely at the day's highest level. So again, your action is in terms of the small and the mid cap space. And very quickly in terms of the sectoral indices, Tamanna, I think IT is the one which actually pulls it off really well. 4.5%. When have you seen the index see these kind of gains?
Yeah, so everything else is just there for the ride. Today's story again is Nifty IT. I won't be surprised even in the small and mid cap. It is IT and AI facing stocks which have seen more action than anything else. And then pull up the gainers and losers actually on the broader markets. And then of course you have your Alkyl amines and your Balaji amines which came in from the rear end because of those prices going up. Prince Pipes showing some smart moves there. Is there an intraday of Prince Pipes we could see and look at whether some last minute action came in on a Prince Pipes as well? Yeah, you had.
At the day's highs.
At the day's highs where it's closing. Go back to that chart, please. We'll just see the top losers as well of the day. NHPC, though the QIP was fully subscribed. And that came in. Rajesh Exports, Delta Corp among some of the losers.
Few of these names, RHI, Magnesia, you talk about Jamna Auto, VIP, Ingersoll, Delta. These were the ones which actually saw some very smart moves yesterday, are the ones who are seeing profit booking in today's session. And likewise, on this side of the, charts as well, JM Financial, one of them, which was actually down when we spoke to the management, is seeing a rebound today. So I think buy on, rally, sell on decline is, the opposite.
Other way around.
The other way around. That's what the markets are looking at. And I think there is no major conviction that people have in the markets right now.
Yeah, well, we'll take the wins we get. 23,500 at least is what we're seeing on the Nifty, and that's why we're closing out above those levels. Will we see that continue tomorrow? Remember, the next couple of days will be crucial. Is there a US-Iran deal that is getting inked? That's something that the markets will be seeing. And on the other hand, the MPC meet begins. So all of that in play. That's all the time from Hiral, me and the team that put the show together. Thank you for watching. But stay tuned. Market Express up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets in.
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have really fared today. So viewers, D Street has staged a smart comeback in the late trade with benchmark indices rebounding sharply from the day's lows, and the Sensex ended over 400 points higher while the Nifty has recovered strongly, and this is signaling resilience in investor sentiment despite intraday volatility. And talking about the market breadth, so that has remained firmly positive with most sectoral indices ending in the green. IT and FMCG stocks led the charge while profit taking in pharma and financial services stocks kept those pockets of the market under pressure. Now let's look at some key counters that were buzzing away in trade today. First up, we have Infosys, which is back in focus with the stock staging a steady rebound, and this has been helped by improving sentiment around its AI play and even concerns on the growth that now seem a bit overdone. And the company is emerging as a front runner in enterprise AI adoption, working with a majority of its top clients and even scaling up projects globally. Now, while earnings have been stable, investors are also taking comfort from the fact that valuations are still below peak levels, and recent triggers from a proposed buyback to strong deal wins have kept the momentum intact. Next counter to look at is NHPC. So the shares came under pressure after the government announced an offer for sale in the state-run hydropower company. Now the centre is planning to sell a 3% stake through the base offer, with an option to offload an additional 3% through a green shoe mechanism if the investor demand remains robust. And the floor price has been set at 71 rupee per share, and this is representing a discount to the prevailing market price, and the OFS is part of the government's broader disinvestment and even stake monetization program, and could really see up to 6% of the NHPC's equity changing hands if the green shoe option is fully exercised. Now let's look at NMDC, which has reported a strong start to the fiscal year, and with iron ore production rising to 5.31 million tons from 4.43 million tons a year ago. Now, the nearly 20% increase highlights robust mining activity and even continued demand for the key steel making raw material. Next counter to look at is Acme Solar, which is raising fresh capital through a QIP, aiming to strengthen its balance sheet and even fund growth. So the issue size could go up to 2,800 crores, including a green shoe option, and also comes a near 9% discount to the current market price. And this is a move that may attract, institutional demand as well. A large part of the proceeds will go towards debt reduction, and this is also signaling clear focus on improving leverage and financial flexibility. So with the base issue already sizable and pricing aligned with the SEBI's floor, the street will closely watch the subscription and also participation trends. Next counter in focus is PNC Infratech, which has received a letter of acceptance, that is the LOA, for 194 crore infrastructure project from a development authority in Lucknow. Now, the contract involves construction of a 4-lane flyover aimed at improving urban connectivity and even easing traffic congestion in the city. Now, the project is scheduled to be completed within 24 months and even adds to the company's existing order book. And the latest win strengthens revenue visibility for the PNC Infratech and even underscores continued opportunities in the urban infrastructure development as government-led capital expenditure remains a key growth driver. Next counter to look at is Force Motors, which has reported a weak set of sales numbers for May, with total vehicle sales declining 15.4% annually to 2,614 units. And the slowdown was visible across both domestic and even the export markets. So domestic sales has fallen 14.7% as compared to the same period last year, while the exports have witnessed a much sharper decline of over 37%. The numbers suggest continued pressure on demand and even highlight the challenging operating environment facing commercial vehicle manufacturers. Investors will now watch for signs of recovery in the volumes over the coming months and also as industry demand trends evolve. Next counter to look at is D Development Engineers, which has secured a fresh order worth 206.5 crores from a Maharatna public sector undertaking, further strengthening its order pipeline. Now, the latest win comes just days after the company announced a 386.82 crore order from the BPCL on May 30th. And the back-to-back order inflows have really boosted investor confidence in the company, with the stock surging more than 21% over the last 4 trading sessions. And the strong order momentum not only improves the revenue visibility for the company, but also reinforces expectations of healthy execution and even growth going forward. And viewers, Macquarie remains bullish on Dixon Technologies, maintaining its outperform rating and even a target price of 15,000 rupees. The brokerage is saying that emerging details around the proposed PLI 2.0 scheme for mobile phones could really significantly boost domestic manufacturing and even value addition. And under the new framework, domestic value addition could really rise to more than 55% from the current 15 to 20% range, with incentives linked to local sourcing of critical components. And Macquarie believes that Dixon is well positioned to benefit through its partnerships and even joint ventures, while the scheme could really provide greater confidence around margins and even support expansions into the key areas such as batteries and printed circuit boards. Because jewelry stocks are shining on the Lal Street, with shares of Thangamile Jewelry and even Sky Gold rallying up to 8% and also hitting fresh record highs. The gains come amid strong investor optimism around the sector, and this has been supported by robust demand trends, expansion plans, and even expectations of the continued earnings growth despite elevated gold prices. And the Enforcement Directorate has conducted searches at premises linked to the Vedanta Group in Mumbai and even Delhi as part of an ongoing investigation. The raids are understood to be connected to a broader probe into alleged financial irregularities, and Vedanta has not yet issued a detailed statement on the action, while the development has put the spotlight on the Anil Agarwal-led conglomerate. And US Gujarat Gas is in focus after Motilal Oswal has reiterated its buy rating on the stock following the company's fourth quarter results. The brokerage remains positive on the city gas distributors' growth prospects, citing improving volumes, expanding infrastructure, and also favorable long-term demand outlook. And the bullish call has helped keep the investor interest firmly on the stock. And US furniture companies are preparing another round of price hikes in June as raw material costs continue to rise. Industry players say the prices have already increased by nearly 10% during April and May, with further hikes of around 5% now on the cards. So the pressure is being driven by a sharp increase in the input cost. Plywood prices have jumped about 15% in May, while resin costs have more than doubled between March and May. So the situation has been aggravated by a shortage of urea, which is a key ingredient used in domestic resin production. And with also cost pressures intensifying across the supply chain, furniture makers are increasingly passing on the burden to the consumers as well. And here's Coca-Cola is looking to unlock value from its India bottling business, with the plans now taking shape for a potential IPO by 2027. The proposed listing could really see a mix of fresh issue and even offer for sale, with the company exploring a partial stake sale while still retaining a significant holding. The India bottler Hindustan Coca-Cola Beverages remains a key growth engine, especially as consumption trends continue to scale up. Recent stake sales and even the appointment of advisors indicate preparations are well underway. And here's artificial intelligence heavyweight Anthropic is really preparing to take its next big step. The company behind the Claude chatbot has filed paperwork for a US stock market listing and also setting the stage for an IPO later this year. The move will give public investors a chance to buy into one of the world's most valuable AI companies. Anthropic was recently valued at more than $965 billion by private investors, surpassing OpenAI's latest reported valuation. Founded by former OpenAI executive Dario Amodei, Anthropic has emerged as one of the biggest rivals to Sam Altman's OpenAI. And with both the firms competing, fiercely in the race for AI leadership, Anthropic's public debut could really become a major test of investor appetite for the fast-growing artificial intelligence sector. US Bitcoin has come under intense pressure as geopolitical tensions in the Middle East rattled risk sentiment across crypto markets. The world's largest cryptocurrency has slipped near the $70,000 mark, touching a 7-week low as investors reacted to escalating tensions between the US and Iran. Now, the decline also triggered a wave of forced selling, with nearly $744 million worth of crypto positions liquidated in just 24 hours, and more than 152,000 traders were wiped out as Bitcoins fall below $71,000, which has sparked a sharp unwind of leveraged bets. And with geopolitical uncertainty rising and even volatility surging, investors are turning cautious, putting digital assets firmly under pressure. And viewers, let's look at some national news now. A fresh development has emerged in the NEET UG paper leak case. Unauthorized portions of an under-construction multi-story building linked to an accused PV Kulkarni in Maharashtra's Bid district have been demolished after notices from the local civic body, and the action came just ahead of a planned municipal demolition drive. And according to officials, a survey found multiple deviations from the sanctioned building plan. The civic body then issued notices directing the owners to remove the illegal portions or even face demolition. Authorities had also warned that the cost of demolition would be recovered from those concerned if the municipal council was forced to carry out the action itself. And viewers, the education sector is seeing two major developments today. The CBSE has opened its portal for Class 12 students seeking verification of marks and also re-evaluation, asking candidates to carefully follow the application process while also submitting requests. Meanwhile, fresh concerns have emerged for the National Testing Agency. A 16-year-old claiming to be a cybersecurity researcher has flagged alleged vulnerabilities in the NTA's re-examination portal. The teen says that flaws could potentially expose user data and even sensitive administrative information, raising new questions over digital security at a time when the agency is already facing intense scrutiny. And the latest claims come in the wake of serious security vulnerabilities reportedly discovered in CBSE's Class 12 marking portal. And viewers, the Delhi government has approved enhanced compensation for farmers affected by last year's monsoon damage. Nearly 10,000 farmers will now receive assistance at the revised rate of 75,000 rupee per hectare for crop losses caused by heavy rainfall and even waterlogging. And the cabinet has also cleared the disbursal of 33.32 crores in the relief. And according to the government, continuous rainfall and overflowing drains during August and September damaged crops spread across more than 10,900 acres of agricultural land, impacting thousands of farmers across the national capital. And viewers, the Supreme Court has welcomed 5 new judges, marking the first set of appointments cleared by the collegium headed by Chief Justice of India, Surya Kant. Now, with the latest inductions, the court's working strength rises to 37 judges, leaving just 1 vacancy. And among those elevated are the Chief Justices of Punjab and Haryana, Bombay, Madhya Pradesh, and Jammu and Kashmir, and also Ladakh High Courts. Now, Senior Advocate Venkita Subramani Mohana has also been appointed to the Apex Court, and the appointments come shortly after the centre increased the sanction strength of the Supreme Court from 33 to 37 judges, aiming to strengthen the judicial capacity and also help address the court's growing workload. Here's a major IPL betting racket has been busted in Guwahati during Sunday's IPL final between Royal Challengers Bangalore and also Gujarat Titans. Now, police has arrested 8 people, including a alleged mastermind, in a raid carried out during the match. Now, according to Deputy Commissioner of Police Shambhavi Mishra, the main accused, Alok Jain, had been operating an IPL and cricket betting network for a considerable period and even already facing 3 criminal cases. So, authorities are saying that the accused were caught red-handed while allegedly conducting live gambling activities. And the arrested individuals include suspects from Rajasthan, Bihar and Assam, pointing to possible interstate links, and police have launched a detailed investigation to uncover the wider network behind the betting operation. And here's India's crucial southwest monsoon is expected to make further progress across the country within days, although key rainfall activity may begin slightly later than the official onset date. Forecasts suggest widespread showers are likely to pick up this week, bringing relief from the intense heat and also boosting expectations for agriculture, rural demand, and even the broader economy. Here's a record number of girls have qualified for the IITs through JEE Advanced 2026, marking a significant milestone for engineering education in India. And for the first time, more than 10,000 female candidates have cleared the exam, while the overall pass percentage has also touched a record high. The achievement highlights growing participation and also success among women in STEM fields. And India has slipped to 7th place among the world's largest stock markets, with South Korea overtaking it in terms of total market capitalization. Now, the shift comes after a strong rally in Korean equities, while also Indian markets have seen relatively subdued performance. Despite the ranking change, India remains one of the fastest growing major equity markets globally. And because the Middle East remains on edge, but diplomatic efforts are gathering pace, US President Donald Trump says that talks with Iran are moving rapidly, even as fresh attacks continue to test the fragile ceasefire. Trump has also claimed that he has helped stop a planned Israeli strike in Beirut, with both sides agreeing to pause hostilities, and the US president now expects a broader agreement with Tehran within the next week, one that could really extend the truce and even help restore movement through the crucial Strait of Hormuz. And a partial ceasefire between Israel and Hezbollah has been announced by Lebanon, offering a limited pause in a conflict that has claimed thousands of lives and also heightened tensions across the Middle East. And under this arrangement, Israel is expected to refrain from carrying out strikes on Beirut and Hezbollah-controlled suburbs, while the Iran-backed group will halt attacks on Israel. However, Lebanese officials have clarified that the agreement does not bring an end to the conflict and also represents only a partial de-escalation. And the development comes amid wider regional instability linked to the US-Israeli-Iran confrontation, with hopes that the fragile truce could really help prevent a broader escalation. In fact, Ukraine has come under one of the heaviest aerial assaults in recent months, with Russia's launching massive wave of drones and even missiles targeting Kiev and other key cities. And according to officials, at least 11 people have been killed and more than 100 have been injured in the attacks. And in the capital, 2 residential buildings were struck, raising fears that residents could be trapped under the rubble as rescue teams raced to the scene. And the latest strikes come after Ukrainian President Volodymyr Zelensky has warned that Russia could really intensify its attack and also underscoring the continuing volatility of the conflict and even the growing toll on the civilian populations. And here's the Democratic Republic of Congo has reopened the airport in Kisangani, which is the center of the country's latest Ebola outbreak after health authorities stepped up containment measures. So officials are saying that screening and surveillance protocols remain in place as efforts continue to prevent further spread of the virus, and the move signals growing confidence in the outbreak management while also authorities remain on alert. And viewers, India's growth premium is facing a test as crude shocks tighten policy comfort, but resilient domestic flows could really still support outperformance. We put these tough questions to Bank of America's David Horner, head of Global EM Fixed Income Strategy. And here's what he told us.
Welcome to the show, David. Always a pleasure to speak to you. You know, my question to you is, last probably couple of days, we've seen heavy amount of exit in terms of FIs as well, specifically on the back of the MSCI rebalancing as well. The anticipation was that the exits that are happening from the Indian markets probably is moving towards Taiwan, South Korea, but does not seem to be the scenario. What are the cues that you're picking up?
Yeah, hi, and thanks for having me. So I think in the last couple of weeks, global markets have become more nervous about the medium-term inflation implications of the energy price shock coming from the Iran conflict. So what we have seen is basically that US interest rates have gone up in the front end, and markets are starting to worry about risks from the Fed, and the dollar has been a bit stronger. And you know, and I think you have to see it in this context that you know, all of the Asian markets have seen some outflows. Of course, North Asia benefits very much from the tech boom, but you know, people are already quite invested. And the other thing to bear in mind is that let's say, you know, you're invested in Korea, you have made major returns because of the significant rally of the market, and many global investors therefore basically are looking to rebalance, so to take out some of the markets where money out of markets where they made some profits. So that then means that even markets like Korea, which have done very well, don't really get the inflow that you would expect. So where's the money going is the question, I guess. You know, so some of it is, I think, going into cash. People are just turning somewhat more cautious, looking at a world with a lot of uncertainty, and saying, you know, it might be a good time to just play it safe and see, you know, what next trend emerges. And otherwise, we have seen, you know, we have seen flows into credit. So, basically fixed income with decent yield.
So to add to that, David, how are you looking at the Federal Reserve in terms of the action they take if you're looking at a structural inflation that is coming in? And what would your fallback thesis be for the emerging market fixed income group in terms of the action that the Fed takes?
Yeah, I mean, we've been pointing out for the last few weeks that you know, now is going to be quite a critical period for the Fed communication, because of course we have new leadership coming in, and you know, you have the next Fed meeting middle of June, and so during this period of time we expect to have some more volatility in the US yield curve, and we expect the dollar to be somewhat stronger. If you look at our target for euro dollar, which is the most important currency cross in the world, we have it at 114 middle of the year, so at the end of this month. So we are think that there will be some dollar strength, some US rates, interest rate volatility caused by you know, by anticipation of the you know, Fed communication. We think inflation is going to be probably surprising somewhat on the upside in the next few months. And what it means for emerging markets, it means tactically we are a bit more cautious. We have been very bullish on emerging markets basically since January of 2025 already. And we continue to be structurally bullish. We still think that, you know, over the next couple of years we'll have a good time for EM. We're going to have lower dollar capital inflows into emerging markets. But we think in the short term, maybe for the summer this year, we should be a bit cautious.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Nifty fails to hold 24,500 amid a lack of triggers, despite market opening higher today. IT stocks boom in trade, with Infosys, TCS gaining 6% each. Nifty IT, the top sectoral gainer, ends at 1.5-month high. Rupee slips in trade after multiple sessions of gains, ends below 95 rupees 25 paise against the dollar. Oil prices fall more than 1% after previous session's sharp gains as US President Donald Trump signals ongoing talks with Iran, easing supply fears and cooling market sentiment. Brent crude hovering around 93%. Nifty Q4 earnings report card sees marginally positive performance for the 50 heavyweights in Nifty. More than 50% earnings in line or beat estimates. Strength in margins and pricing drove the upside, while weakness in oil and gas as well as pharma dragged the overall performance. US cuts tariffs on agri-farm equipment from 25% to 15% until next year end. Move is considered as part of a broader effort to encourage investment and support key sectors of the American economy. After getting nod from US FDA in an exclusive conversation, Wockhardt founder and chairman Habil Khorakiwala says that the antibiotic Zyneach to be launched in next 6 to 7 months in India, and company plans to launch multiple drugs over the next few years. Godrej Industries eyes 7,000 crore rupees infusion in financial services over the next few years. In an exclusive conversation, Chairman Firoz Shah Godrej told NDTV Profit that the company plans asset management entry and targets Godrej Capital listing in 5 years. 5 quick commerce companies, Amazon, Swiggy, Zepto, Meesho and Eternal, unite to form a new digital commerce coalition. A Delhi-based public policy consulting firm, Coan Advisors Group, will serve as the secretariat for the digital coalition. The southwest monsoon is finally set to make its onset over Kerala around 4th of June. bringing the much-needed rainfall to southern India. IMD issues a very heavy rain alert for Kerala. Hello and welcome. You've tuned into Profit 360. I'm Nisha Poddar, and let's take a look at what all really made headlines in the day today. Let's first begin with the market action. Well, the Dalal Street, that staged a smart comeback in the late trade, with the benchmark indices really rebounding sharply from the day's lows. Now, the Sensex ended over 400 points higher, while the Nifty recovered strongly, signaling resilience in investor sentiment despite the intraday volatility. Sectorally speaking, well, market breadth remained firmly positive, while most of the indices really ended in the green, and IT and FMCG stocks really leading the charge from the front. My colleague Jasmeet is right here to take us through all the action in the market today. Tell us, Jasmeet.
Well, thank you for that. A good day for markets indeed, where you see Nifty started with a flattish start, but over the midday it gained and held in trade, and Nifty ends in green after losing for the fourth day. Now, in terms of the top gainers, we have IT stocks, that's Infosys and TCS, both gaining over 5.58% in today's trade. If we look at the broader market, well, broader market underperforms the benchmark in today's trade, and Midcap 150 ends in green and gains about 0.2%. In terms of top losers in Midcap 150, we have stocks like New India Assurance and Hitachi, both being the top losers in Midcap 150. Now, if we look at the small cap 250, it outperforms the benchmark, gains about 0.6%. And in terms of the top gainers, we have Newgen Software, again an IT company, alongside the Balaji Amines, both gaining over 50%. While if we look at the key sectors end on a mixed note, while Nifty IT becomes the top gaining sector for the second consecutive day and gains about 4%. In terms of top gainer, we have TCS and Infosys both gaining about 5.5%, and Nifty IT sees that constant AI fear deflating to the overall earnings, and we see a positive momentum coming for Nifty IT in the trade as well. Now, in terms of the top losing sector, we have Nifty Pharma losing the most, down about 1%, and the stocks that lost the most were the Biocon, which is down about 2%. In terms of key trend, well, Nifty Pharma ends in red for the third consecutive day, while Nifty IT ends in green for the third consecutive day in a row. We do note that the markets had a good day in today's trade.
Right, Jasmeet, thank you so much for getting us a roundup on what really markets did in the trade today. Let's also take a look at the money market action. Remember, rupee ended below 95 rupees 25 paise against the US dollar, slipping to the day's low levels as market really balanced India's strong domestic fundamentals against the lingering geopolitical uncertainty. Meanwhile, also take a look at crude prices, which has been weighing heavy on our equities and our money market. They remain in focus as it has slipped nearly 2%, Brent crude hovering around $93 per barrel range, while WTI crude crossing the $90 per barrel mark. So keep an eye out on crude. Below 100 is definitely good news for the Indian markets. Now, for crude to really hover at $90 to $100 a barrel is remarkable given the circumstances. That's the word really coming in from Edward Yardeni, who's the president of Yardeni Research. He believes that this relatively is stable price range and is largely due to increased buying of discounted Russian oil by several countries. Here's what he had to say on the overall crude impact, as well as his views on the market.
$90 to $100 a barrel is actually remarkable under the circumstances.